markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Any number of things driving markets, still concerns over tariffs, geopolitical risks, and also some of the data. American factory activity contracting in the month of May for the fourth month in a row. And, of course, tariffs are the culprit here. Imports falling to a 16-year low. This is based on data from the Institute of Supply Management. Oil and gas stocks advancing as crude prices, they are surging today. U.S. steel, aluminum stocks, they're rallying. President Trump says he plans tariff hikes on steel and aluminum. Steel Dynamics, the best performing stock right now, the S&P 500. That's up close to 10%. Worst performer in the index, that belongs to General Motors. They're down close to 5% right now. And among the most actively traded stocks, you have shares of Tesla. They're down 0.8%. The new vehicle registrations fell further in France. This kind of undercuts Elon Musk's assertion last month that the car maker has recovered from its early year sales slump. Tesla sold only 721 cars in May in France. Right now, the S&P 500, 10 points lower. That is down 0.2%. Right at 5,900. Dow Jones Industrial Average, 185 points lower. The NASDAQ 100, I'm going to call it unchanged right now. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
Hey, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As John was just reporting, S&P at 5,900. I mean, after all the ups and downs this year, pretty much year to date, we're unched on the S&P 500. It feels like a lot of effort for not a lot of payoff there. Shana Sissel joins us, President and CEO of Van Rion Capital Management from Chicago. Shana, how do you put 2025 year to date into context for your clients? Because, boy, we were down 20%. Now we've retraced most of that from the recent highs. How do you position the 2025?
Well, I went into 2025 thinking it was going to be volatile, and it lived up to my expectations. So we positioned portfolios for volatility and did quite well as a result. Ultimately, what's come down to is, as more and more information gets out, we have this 24-hour news cycle, and people get information in real time. The markets are able to respond to news quickly. But more importantly, we've seen that the retail advisor has been eager to jump into the market when it turns downward, which is unusual. That's not normally the case. Yep. It's typically the institutions, and we've seen that kind of reversed, where the institutions are holding off while the retail investors are jumping in. And ultimately, that's kept the markets from getting too far down, and they're able to rebound pretty quickly. Basically, if you look in the past, normally we look for the capitulation of the retail advisor, and we just haven't seen that. So for those reasons, that's why I think there's been such great volatility.
But on the flip side, you have to wonder then who else is left to buy the rally. So how are funds positioned? Institutional investors, clearly retail has been buying the dip. So as you mentioned, there may not be an extension of that.
Yeah, but the institutional investors have sat on the sidelines. And quite frankly, they have the bigger money to put to work and more likely to move the market when they jump back in. They're still very much on the sidelines. So I think there is some opportunity to drive the market higher. It's just not how we normally would expect it to be. It's also a little bit concerning. Obviously, the institutional investor tends to be the more informed investor. So the fact that they have stayed on the sidelines can mean a lot of things, but it's not for lack of information on their end and lack of analysis. But we talk about analysis paralysis all the time. There's a lot of uncertainty related to tariffs, related to the administration, related to monetary policy. And I think that in many ways, the institutional investor is a little paralyzed by the uncertainty and for those reasons, unwilling to jump into the market, which I think might be to their peril.
Shane, I know you do a lot of work with alternative investments when you speak to independent advisors. How are they using alternatives these days when the volatility both in the equity markets and the bond markets are pretty pronounced?
Well, that's exactly where they use alternatives. If advisors or individuals were to jump and allocate 20% of their total portfolio to alternatives, they would have actually done quite well through the volatility, as these are low to no correlation, or even in some cases negative correlation assets. And so if you look at the most volatile parts of the last 5 months, you look at March, some of April, some of February, you'll see that like a BTAL, which is the AGF anti-beta market neutral fund, that fund largely outperformed the S&P by a substantial amount, was very positive during that period of time. So even a small 5% allocation made a huge difference in client portfolios. And then you start to pair that with other low to no correlation assets like CTA and CBLS and MRSK. And then you have Bob Elliott's Unlimited multi-strat fund. And you have a number of these alternative funds that all did really well through the volatility. So when equities and fixed income were down, they were up. And so that actually helped you through the volatility. So advisors that we work with that implemented those portfolios actually rode out that period of time quite well.
I know that where you look at in the tech market isn't necessarily broad strokes or, buy AI or buy the telecoms or whatever. But the Mag 7 have really helped to lead that rally over the last month. Does that continue, or do you continue to see value in different types of names?
Well, obviously, I see value in different types of names as they haven't participated and they are looking more attractive on a valuation basis. But the tailwinds really do sit with those tech companies, because the biggest tailwind to business right now is AI. And so anything related to AI, anything incorporating AI wins. And so we saw with the Mag 7, with the most recent NVIDIA earnings report, that the demand for AI is strong. And the move from learning and to the next phase of AI is there. And so the Blackwell chips, the greater need for computing power, all of those things are real and very much in their infancy, and in the sense of there's no infrastructure there. And so there continues to be substantial tailwinds, and so that's why they continue to lead. Other areas of the market have headwinds. So if you look at, say, energy, we have increased supply coming on, but we have, declining demand from Asia. So that is great if you want oil at $40 a barrel, but not great if you're an oil investor or an energy investor. You look at healthcare, and we've seen a lot of headwinds there, but also some tremendous breakthroughs, and especially in oncology. So, there's pros and cons to everything, but some of the cyclicals are starting to look cheap, and that's definitely a place that I would be looking.
All right, Shana, really appreciate it. Always good to get your perspective. Shana Sissel is president and CEO of Benrion Capital Management. All right, so we get jobs data on Friday. So let's get a kind of a consumer check. Where are people spending? How much are they spending? And what does that mean for small businesses? We have a perfect person to talk to about this. Prasanna Dore is the president of Data Commerce Solutions at Visrev. So this is where they're monitoring consumer spending levels for May. Prasanna, if we get the jobs data, what can you give me as like a preview on what consumers are doing?
Yeah, good morning. Yeah, in a sense, like if there's one headline I can give you is that consumer sentiment is soaring, but they're still nervously spending. And the mix is changing from more towards essentials from discretionary spending. So that's sort of a headline. And if you look at like the whole Q1 to set the context, back in mid-Q1, our data showed a shift. We saw, what I call pragmatic spending. Consumers were anticipating, as potential, tariffs and uncertainties that the previous guest was talking about. What the consumers did was they sort of shifted their spend on different areas. For instance, in March, they spent a lot of money on what we call durables like furniture and electronics. And it was up 4.9 or 5, almost 5% since January. It's very rare for durables like non-durables like washing machines and things like that to be bought in March, February, but because of the potential tariff, I saw a lot of spend in the discretionary items in March and April. And also obviously the auto parts also went up during this time. So, but in April, I'm seeing a really strong shift again to the essential spending, non-discretionary spending, like groceries. That's sort of a thing that's happening. The spend is not, growing at the growth rate that we normally see in the last couple of months, but it's still growing, but growing at a much slower rate, Alex.
How about restaurants? I feel like I'm doing more than my part to support the Jersey Shore restaurant scene. How are restaurants doing?
Hey, that's a very good question. The way restaurants matter, restaurants is a critical bellwether for small business health. Restaurants make up about 15 to 20% of small business economy. And when we see shifts there, it matters. So in April, after the first quarter, we saw that higher end dining, like not the casual, the higher end dining took a hit, while the quick service restaurants, the QSRs, are doing really well. And also grocery sales are also, I saw growth in it. So I think what is happening is that, the traffic to restaurants is going, is increasing, but they're going to QSR, more of the lower end rather than the high end and the restaurants in this is what happened in April. And that trend is continuing in May too. And it's being really, if you look at I was looking at the numbers yesterday because the numbers of May, we just closed the books yesterday. And it's the same thing. The restaurants are growing only in the lower end. At the whole, I think the restaurants are hurting because if you look at inflation, they seems to be hurting more than the other subsectors of the small business economy.
Interesting. So it's like we're spending stuff, but like not a lot, and just on necessities in a way. Prasanna Dore, thank you very much joining us from FISREV about consumer spending, and I wonder what that winds up meaning for jobs, right? It feels like people still have jobs. They're worried though. Their incomes are hanging out, but they're going to go to QSR versus fine dining. They're going to buy a durable good versus shoes. So I wonder how that continues to play out.
But it seems like just broadly speaking, if the consumer seems in decent shape when you just look at retail sales, generally in decent shape. But I'm not sure if this is going to, as tariffs kind of roll into more and more of the economy, will you see it roll over a little bit?
But that's where I feel like the outlook is interesting because the hard data, as we know, is solid, but it's in the expectation and the concerns going forward is changing where they're spending, but they're still spending. So that's a tricky situation there. It's also tricky if you are a company that is spending money on carbon technologies, low carbon technologies, because a lot of funding got pulled by the Trump administration. We're going to break that down with Bloomberg NEF's David Doherty. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we are being brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow in your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. Right now, stocks kind of drifting following some discouraging updates on manufacturing. In addition, energy and tech shares keeping the major averages from falling any further. Steel and aluminum shares surging on President Trump's pledge to double levies on the metals. Right now, you have 7 of the 11 major industry groups of the S&P 500. They are lower. The biggest drag, that is coming from consumer discretionary. And, you know, that's home to Tesla, down 3%. You have those sales figures in France for Tesla. They were pretty dismal. Tom Porcelli at PGIM says inflation will become an even bigger concern as a result of the tariffs.
Consumers are smart enough, when it comes to these things. They're bombarded with this information every day. They know that it's going to show up from an inflation perspective. And as a result, you're seeing inflation expectations start the process of becoming unanchored.
Right now, the S&P 500, 14 points lower, down 0.25%, 58.97 on the index. The Dow Jones Industrial Average is 240 points lower. NASDAQ 100, call it unchanged right now. The long bond up 6 basis points, right under 5, 499.24. The 10-year yield 5 basis points higher, 445. The 2 right now, 2 basis points higher. That is at 392. If you're in the market for a TV station, call Byron Allen. He's trying to find buyers for local TV stations his company owns, trying to reduce debt and take advantage of potential deregulation in the broadcast industry. He owns 21 affiliate stations of the major networks. Here's another thing in the long list of things I did not know. He kind of started as a comedian, Byron Allen.
Yep.
Was he funny?
He owns a weather channel.
Oh, okay.
Weather.com.
All right.
All that kind of good stuff.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
And John failed to report the story. Italy's Mount Etna erupts.
Oh, yeah.
I always follow that because on every
serious.
crossword puzzle, every day, it's like European volcano, 4 letters, ETNA. So it's like in every crossword
I never
puzzle.
get it every
so
single
now
time.
I'm all into Mount Etna. But anyway, it's erupting yet again as I think about get ready for my Italy trip in the fall. John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. New administration, maybe new energy policy. What are oil and gas companies? What are they doing in terms of low carbon technologies? David Doherty joins us, head of oil and renewable fuels research for Bloomberg BNEF, joins us here in our studio here. David, what are the big U.S. oil companies, what are they thinking about their relative investment dollars between fossil fuels and maybe some of the more economically friendly technologies out there? How are they making that decision these days?
Yeah, economically friendly is a great choice of word versus environmentally friendly. 2 separate things sometimes. And the story is very different if you're looking at a U.S. major versus a European major. Even the technology they'll invest in. In general, the group of big oil companies we talk about investing about 7-8% in low carbon technologies, things like wind, solar, carbon capture, renewable fuels. 7%. Yeah, and it's plateaued around there for the last 2-3 years. Yeah.
But something. I mean,
That's
put it that way.
yeah.
But what we learned is that the Trump administration is taking back some of the loans and the money that a lot of these oil companies are using for some of those projects. Exxon in particular, they have a project in Texas that's going to use hydrogen, and that funding is poof, gone.
Yeah, Baytown, right?
So now what happens?
Now what happens? I mean, a tax break would be great for somebody like an Exxon. They could probably go ahead without it. Arguably, the pro-oil Trump administration isn't necessarily ticking the boxes for the oil companies at the moment. We're seeing these tax breaks. We're seeing really low prices, not necessarily all down to policy. It's worth highlighting, but not beautiful if you're a U.S. oil company, for example, or with exposure to U.S. production, particularly onshore shale, for example. It's not a great time for them. It's not the worst time, but it's not a great time.
Are the European energy companies or just outside of the U.S. energy companies, are they stepping up and trying to fill that void for some more environmental friendly technologies?
Not really, no, not really.
Because they got so punished for that. Just look at Shell and BP.
Yep.
They made some decisions maybe I'm not sure they would make again. That said, some of the biggest players are still the European ones. Equinor, for example, last year, wind, solar made a comeback. That's really interesting. They've got really poor cash flow stories, much lower returns than the traditionals. So you're definitely seeing a split between the US and the European majors, for sure. But the environment's completely changing for all of them.
So I hear your point, particularly in the U.S. Like, then Exxon, they can probably still push ahead in Texas even without the loan. They might not like it, but they can manage it. But a lot of these companies can't.
Right.
So what happens to the projects that are already underway that deal with, carbon capture, direct air capture, decarbonization?
They go looking for more money, or they stop.
Is the money there, ex-government?
I think so. There's jitters for sure, right? This is a 4-year window, and is it a 4-year window or is it an 8-year window? Nobody knows. Nobody's going to bet on that or guess. But for the right, anything will happen for the right price, I guess, is the bottom line. But it's a huge question mark for U.S. in the next 4 years for sure.
But if we have oil down here in the low 60s for an extended period of time, what are the oil companies? I mean, do they have capital to invest back into fossil fuels, or do they just give it back to shareholders?
It's a mix. If you look at the players that don't have, let's say, a family presence, right? Your mom knows, I know, Chevron, Exxon. Yeah. If you think of an EOG or any of those companies that don't have necessarily a household name, they've got a very different way of operating. At around $60, you're getting into territory where it's going to start to hurt a lot of the U.S. shale players. 55 is where you'll see Bakken start to fall out of profitability. That will go down. You're about $12 below that for a break even for something in the Permian, so there's still space to play. But the guidance we're seeing for capex quarter on quarter is down about 3-4%, whereas production is down marginally 1%. So the impact of the actual production will happen a lot later than the capex story. But they're starting to tighten their belt a bit when it comes to spend, and we'll see that in barrel terms later, more delayed. But you will see it come through. You're not seeing it yet.
I also have to wonder too what winds up happening with, say, offshore projects. So onshore is much more reactive, but say Gulf of Mexico, a lot of production is going to come online. That investment decision was made years ago, so you can do nothing about it. But then if you're making decisions today with this oil price, looking at the curve for 2027, 2028, that's when you get some question marks.
100%, yeah, and that plus all this extra barrels coming out from OPEC, new projects in Guyana, for example, coming online and ramping up. Short term looks like pain. Longer term, this investment is still needed. Otherwise, you get into territory of price spikes or inflationary causing short supply. So it's a really delicate balance for them at the moment.
So if I were to go to the oil patch down there in Texas, would they be happy today or not so much?
No.
It's been worse, and I think we have a habit of saying crazy times, crazy times. It's not really that crazy at the moment. $60, if you think about it, we had 55 flat for about 2 years, just 2-3 years ago, and Texas was booming. When you're in Houston, it's flying, right? So we're not in the territory of fear just yet. I know it makes for a great headline, but data-wise, we're still a bit away from the pain. And U.S. shale always surprises to the upside when it comes to efficiencies and when it comes to how resilient it is, right?
So, and then to your point, the production's only down fractionally, whereas CapEx is down more, speaks to that point. But I feel like the difference this time is that oil companies went into this administration super pumped. I mean, super pumped is actually an understatement.
And pumped is a great choice of words.
Yeah, exactly. But then the reality has been so much different. It feels like that's the differentiation versus the underlying oil price. And totally a little confusion. I mean, what was $1 billion the oil industry gave to, or the energy industry gave to President Trump? And then they're like, wait, what?
What did you do?
So it feels like that's a little bit different there. Is there one form of low carbon investment that's just toast?
Ooh, green hydrogen, CCS look hard to justify without some form of a tax break, and the knock-on impact for that's pretty significant if you think of it in things of e-fuels or synthetic fuels. All of that is needed to make those things down the line. So those two, kind of toast. The other ones, wind, solar, they're going to stand in their ground a bit more.
TBD on that. All right, David, really great stuff. Always enjoy chatting with you. David Doherty, Bloomberg BNEF, head of research, natural resource research. I don't know, the oil and gas companies, the predicament that they find themselves in. Really, really great report. Apparently, as we were saying, 7.6% of share of total CapEx invested in low carbon technologies by the oil guys and natural gas guys in 2024. So love that data. Really great stuff. Coming up, George Ferguson, Bloomberg Intelligence, and your aerospace, defense, and airlines analyst. IATA had their event in India. We'll get all the juicy details.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, happy Monday. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. Well, this past weekend was IATA, so International Air Transport Association, had a global conference in India, and they sort of went, a lot of travel executives, all the airline guys are there, and they're talking about trends in the industry. So we wanted to figure out where we were. George Ferguson is Bloomberg Intelligence Senior Aerospace, Defense, and Airlines Analyst, and joins us now. What was the main takeaway from IATA this year?
I don't know. I mean, I think I heard profitability was going to get, some of the blows to profitability softened by lower fuel prices. I think we already knew that. U.S. airlines would be some of the better, more profitable airlines around the globe. We know that too. Honestly, I don't usually get a lot of breaking news out of the IATA meeting. I think it's, it's all the airline chieftains, and they're always very positive on their business, as they probably should be.
So I'm going down to D.C. today for business, taking Amtrak, George. So take that. I'm going on the Acela. Wish me luck. So, George, what are you hearing from your companies here as they kind of go into this summer season here in terms of leisure travel?
Yeah, so I think we're still hearing front of the airplane is the stronger part of the airplane. Back of the airplane, there's challenges with demand. As we go into 2Q, as we progress through it, we're still expecting almost every airline in the U.S. to have lower year-over-year EBITDA margins for 2Q. We'd heard that there could be some cutting of capacity in the back half of 2025, which we think is needed in the marketplace to shore up fares. I would note that you're going to get the best benefit from lower fuel prices in 2Q compared to last year. We just recently looked at this. It's on the Bloomberg Intelligence dashboard. We kind of saw a 25% decline in probably the price of fuel per gallon in 2Q, and that tapers off to less than 10% by end of the year. Challenge there is 20 to 25% of the airline's cost is typically for fuel. So, even if you have, a 10% decline, 15% decline, you have the ability, to cut fares 2-3% and fill airplanes more. We think the capacity has to come out. We don't think that alone is enough to stabilize the market. So we're going to watch very closely and look at capacity for back half of the year, but we still see an industry that's going to be lower year-over-year in margins.
Was there a distinction between U.S. airline CEOs and non-U.S. airline CEOs in terms of their perceived optimism?
I think we heard that Indigo was going to buy a whole bunch of A350s. So it sounds like competition for long haul into Asia is going to heat up. No, I think that they're all the stock company guys always sort of very bullish on their business.
George, I don't know about you. I can't remember the last time I saw an empty seat, much less have empty rows like I had at the beginning of my career. We could have empty rows you could stretch out and sleep. What's the load factor today, George, versus, 20 years ago? It seems like the airlines are doing a much better job of managing that aspect.
Paul, you're always going to the most exciting places with the most demand. So that's your problem, and they're filling those airplanes up. We're seeing averages in the low 80s to mid 80s, which are pretty good compared to decades ago. Revenue management for airlines has come a long way. They just don't let airplanes get going down a runway without, I think, at least mid 70s kind of load factors. The challenge always, though, is it's hard to measure this business by just load factors anymore, right? It's got to be at what price are they filling it, because I think they're getting better at making sure the airplane's at least filled for the marginal cost of each seat. And we were seeing those yields fall in 1Q, except for, I would say, transatlantic is going to be strong all year, and it was strong in 1Q. But those yields are slipping, and that becomes... that's the challenge. Even though the airplane's full, if you're discounting to fill it, because, again, I think there's too much capacity, your profitability suffers.
I'm asking for Paul. Is the Newark drama done yet?
Newark drama is never done. Put this down. This is note number one when you cover airlines. So I mean, look, Newark is one of those airports again that there's a very continuous flow of aircraft coming in and out all day. And so in the middle of summer, as we start to get into thunderstorms and challenges around the country, you're going to see ripples of effect for that going through Newark. But I think that as time goes on and they get some of this air traffic control challenge sorted out and the runway reopened, you're going to see less of that pain. I think it's seen its climax. I think it'll start to that part will start to.
I hope so, because Paul's Newark is messing up my JFK and LaGuardia, which I don't appreciate. So there's that. All right, George, thanks a lot. George Ferguson, Bloomberg Intelligence Senior Aerospace Defense and Airlines Analyst. Yeah, if you could fix that, Paul, that'd be super duper. They did open up the
airline 2 weeks early. I mean, the runway. So that's a good thing. So.
All right, last time I flew, well, at least I wasn't going to Newark. Let's just put it that way at the end of the day. Okay, for our listeners in the U.S., here's a reminder. You can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by ShipStation. Stay with us. Your top stories and global business headlines are coming up right now on a day where, honestly, there's not that much happening, Paul. You got the NASDAQ up 0.2%. The S&P is flat. The Dow's off just a little bit by about 0.4%. You got steel stocks surging. If obviously there's an import tax for steel, U.S. steel prices go up, which should, in theory, be good for the steel makers.
Gold higher by 2.5%, almost $3,400, and WTI crude oil up 3.4%.
I'm still blaming short covering at that point. Yes. We'll see how long something like that can actually last. All right, guys, happy trading. Good luck trading. We'll see you tomorrow. This is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. The FBI calls it a targeted terror attack, the makeshift flamethrower used by a man to injure 8 people at an event for the Israeli hostages in Gaza held in Boulder, Colorado. CBS's Scott McFarland says the suspect in custody is an Egyptian national who officials say is in the country illegally.
Among the local charges that will be handed up this afternoon at the courthouse in Boulder, Colorado, is a charge of a crime that targeted the elderly or senior citizens, those who may be at risk because of their age or vulnerable because of their age. These are the local charges right now. We'd expect there's a possibility the feds will take this case too and charge this in U.S. District Court, as the FBI is now joining local law enforcement on this investigation.
Jonathan Greenblatt is CEO of the Anti-Defamation League.
My first concern is for the 8 victims of this firebombing. We understand these people in their mid-50s to their late 80s, one of whom is a Holocaust survivor. So God willing, they will all recuperate and be okay, although 2 of them, I'm told, are in critical condition.
The U.S. Supreme Court passes on a chance to hear a challenge to state bans on high-powered weapons.
The justices turned down a case against a Maryland law that was passed after the Sandy Hook Elementary School mass shooting in 2012. The decision comes 3 years after the High Court handed down a landmark ruling that expanded Second Amendment rights. Gun advocates and attorneys for Maryland disagree over whether the AR-15 and similar weapons are protected by it. Several states have similar measures, and congressional Democrats have also supported the ban on so-called assault weapons. Stacey Lynn, CBS News, Washington.
And the high courts agreed to consider reviving a Republican challenge to an Illinois law that allows mail ballots to be counted if they're received up to 2 weeks after Election Day. On the Health Watch today, CBS's Elaine Cobb on a new drug for some breast cancer patients.
Pharmaceutical company AstraZeneca says its new breast cancer drug can stop mutating tumors before they start to grow. Unveiling positive trial results on patients with advanced breast cancer, the company said its camizestrant cut the risk of a tumor progressing or a patient dying by 56%, and it significantly helped improve general health and quality of life.
And a study out today says a new treatment could help patients with a less common form of breast cancer cut their risk of death in half. Talks in Turkey between Ukraine and Russia lasted about an hour today. They did agree to swap 6,000 bodies of soldiers killed in the war. The Dow is down 170. This is CBS News. A water slide ride went wrong, and now there's a lawsuit.
A 334-pound man is suing Disney World for $50,000 in damages after he was injured on a water slide that didn't support his weight. It's unclear if Eugene Strickland was warned or aware he was 30 pounds over the limit on the downhill Double Dipper at Blizzard Beach. Almost 4 years later, he claims he's still struggling with catastrophic injuries after he lost control of his inner tube and got thrown from the ride, landing on a hard plastic surface. No comment so far from Disney. Deborah Rodriguez, CBS News.
A trans high school athlete at the center of a political storm was the co-winner of 2 events this weekend at the closely watched State Track and Field Championships in California. The rules were changed ahead of that meet to allow more girls to compete and medal in events in which the teen participated. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's another high-stakes week for the Trump agenda and the economy. Welcome to the Monday edition. As markets respond to higher steel tariffs today, senators returning from recess to tackle the big, beautiful bill, and a stream of data already pouring out. We're going to get the latest from Bloomberg's Tyler Kendall, setting the stage at the White House with insights on the economy from Stuart Paul at Bloomberg Economics. Russia and Ukraine just wrapped another round of peace talks in Turkey today, just after Ukraine staged a bold aerial attack deep inside Russia. The stuff of spy movies that we're going to talk about straight ahead with Rebecca Grant. The doctor is here from the Lexington Institute with analysis today from our political panel. Bloomberg Politics contributor Jeannie Shanzano, joined by Republican strategist Ashley Davis at S3 Group. So let's get started, as always, with a look at Wall Street. The market's in the hands of Charlie Pellet in New York. Charlie, how's it look?
Right now we are looking at a mixed market. Joe Matthew with the Dow, the S&P there, both lower, NASDAQ higher. First trading week of the month of June. What a May we had. Right now we have got the S&P down 5, little change there, down 0.1% as Wall Street sifts through the economic data, trade, and geopolitical developments. The Dow down 208, drop there of 0.5%. NASDAQ, though, up 35 for the NASDAQ Composite Index. That is a gain right now of about 0.2%. The Bloomberg Mag 7 Index, we'll call that flat on the day right now, with the 10-year currently yielding 4.44%, the 2-year 3.92%, gold up $89 the ounce. Spot gold is surging 2.7% now, $33.78. West Texas Intermediate crude oil is up 3.4%, WTI 62.84 a barrel, and Bitcoin now down 0.6%. Bitcoin at $104,400. Victoria Fernandez is Chief Market Strategist at Crossmark Global Investments, and this morning she told us what's happening with markets all comes down to what's happening with Washington.
The consumer is what people are watching. Credit spreads is what we're watching. Corporate profits is what we're watching. Those are all important, and they're all going to move on a daily basis depending on what it's hearing from trade and from the tax bill.
Shares in U.S. steel and aluminum stocks are climbing as President Trump says he will be increasing tariffs on steel and aluminum to 50% from 25%. Among some of those names right now, Cleveland Cliffs Corp up 22.3%. Nucor is higher now by 8.1%. Steel Dynamics up 9.1%, but a company we've been hearing a lot about, U.S. Steel, it is lower now by 0.6%. Recapping, S&P down 0.1%, and for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, good to see you. Nice to see Charlie Pellet in the flesh last week at World Headquarters in New York, and Charlie's bringing us back to our Friday night special. Wasn't that something? Live from Pittsburgh, we went till about 7 p.m. with President Trump speaking at U.S. Steel, and of course now is really the first chance, despite the after-hours action we saw on Friday, for investors to respond to double the size of steel tariffs here. It was quite a weekend, and I'm glad you're with us on the Monday edition here of Balance of Power on Bloomberg Radio, satellite radio channel 121, and on YouTube, where you can find us now. Maybe you're already there. Search Bloomberg Business News Live. You'll even get to spend some time with Tyler Kendall in a little moment. Also available on Bloomberg Originals now. There are so many ways to hear the fastest show in politics, or see it for that matter, as we come off a weekend that leaves us with a couple of storylines to follow here. Yes, Ukraine, one of them. Russia-Ukraine peace talks, at least we're referring to them as that still, after just a bruising weekend on both sides, and an incredible story we'll get to a little bit later on with Dr. Rebecca Grant. Something out of a movie, with Ukraine surgically striking deep inside Russia after spies managed to smuggle drones inside the country. Pretty remarkable as we recover from the tariff announcement on Friday and look ahead to the return of senators. It's fly-in day in Washington, everybody. That means less parking, more traffic, and not that table you were hoping for at the restaurant this weekend. But they've got a lot of work to do after the big, beautiful bill, as the president calls it, got through the House. And no one knows this more than President Trump. It's time for the Senate to get its hands on this and get busy. Here's the president from Friday at that rally.
Right now, on the verge of passing the largest working class tax cuts in American history. We got to get that beautiful, big bill, beautiful as it is. We got to get it passed. The Senate, call your senators. And I'll tell you, you have great people representing you. Your senators, your congressmen, you have great people. Every single Democrat House member voted to impose the largest tax hike in history. The Democrats are voting for the largest, highest tax hike in history. I've never heard of it before.
And enter Senate Minority Leader Chuck Schumer out with a Dear Colleague letter Sunday, pledging to fight the effort with, quote, everything we've got, unquote, now coordinating with House Democrats on doing that very thing. So let's jump into the fray here. With the aforementioned Tyler Kendall, Bloomberg Washington correspondent, just got back from the White House, where, Tyler, I'm assuming this is all the talk. It's go time with senators coming back to town.
Definitely, Joe. And the White House knows there's going to be changes once the bill gets into the Senate's hands. The question is, how much will it actually change? And can they resolve those differences by the self-imposed deadline of July 4th? That's what the administration is pushing towards. We know that there's probably some buffer room there when it comes to a hard deadline. That's really going to be the X date when the U.S. Treasury could run out of those extraordinary measures to pay the government's debt. And that's likely going to be around August, maybe, according to Scott Bessent. So we'll see if that gives them some buffer room. Now, what the White House will actually agree to, what sort of big changes we could see, that's going to be the big question here.
Scott Bessent, by the way, you see that? He wouldn't detail
the
X date yesterday. Like, otherwise, you know, that this is the one thing we've got to motivate lawmakers.
Right.
I've never heard of that.
He said it's sort of a negotiating tool, a negotiating tactic from
how we feel about that.
From the White House's point of view. And we should note that lifting the debt ceiling is actually one of the more contentious parts of this bill. The House plan would lift it by $4 trillion. The Senate has said that they could give enough runway to lift it by $5 trillion. But this is actually a sticking point for a group of Senate Republicans who don't want to see a hike to the debt ceiling, including Senator Rand Paul, a Republican from Kentucky, actually somebody that President Trump singled out in a Truth Social post over the weekend, urging him to vote for this bill.
Interesting stuff here with the number of changes that could be made. The president's going to be meeting with John Thune this week, right? The Republican leader in the Senate, to be a fly on the wall. What's he going to tell him?
Well, at this point, there are so many things that we know could ultimately change. One thing to watch for, what actually happens to the tax provisions. We know that some Senate Republicans want to make some of those temporary provisions actually permanent. This could include business incentives. I'm thinking about the bonus depreciation for building factories in the U.S. That's something that John Thune has signaled that he would want to do, and something that the White House would probably be on board with. They have said, do not touch the overtime, no tax on overtime pay and tips. That's going to stay in there. Some senators have expressed interest in making those permanent as well. So perhaps that's something that the White House would get on board with. But then there's the things that are going to start to make this a little tricky. We know, for example, there's nobody really advocating in the Senate for lifting that SALT cap, but that was a really important sweetener for getting this bill over the House's finish line. And then when we're looking at potential changes to the benefit programs. That could also really complicate things and put the White House in a politically fraught position. Maybe Republicans aren't against those work requirements for Medicaid, but they could be against how quickly they are coming into play. They're also against the House's plan to freeze the Medicaid provider tax. Also, pay attention to SNAP, Supplemental Nutrition Assistance Program. This is the first time that states are going to take on a portion of that cost covering. And we've seen some Senate Republicans really raise concerns about that. I could keep going. It's the one big, beautiful bill, but also watch out, of course, those IRA tax credits for clean energy.
Got 1,000 pages in this.
I mean,
we could do a lot of hours on it.
There's a lot of things that could end up shifting here, but ultimately they're going to have to strike a deal to get it done because, Joe, they chose to do this through reconciliation, which means they're negotiating with themselves because they don't have to negotiate with Democrats.
Well, it's not just reconciliation they're talking about over at the White House. They're talking about China. And I wanted to bring Stuart Paul into the conversation. He's standing by from Bloomberg Economics, our U.S. economist in New York, with now the reality of a 50% tariff up from 25 on steel, Stuart. A couple of stocks like this. What about the economy at large, though?
The higher tariffs on steel are going to have a relatively dull effect when it comes to the broader macroeconomic landscape. The total imports of steel and aluminum really just account for about 6 to 7% of total imports that the U.S. takes in annually from abroad. The most acute effects are most likely going to be felt in Canada and Mexico, which account for almost half of our imports of steel and aluminum combined. When it comes to China, the effect is a little bit smaller. Of course, they do direct some of their output through other hubs, or at least that's the suspicion when it comes to the Department of the Treasury. But as a strategic resource, it really mostly affects our trading relationship with Canada and Mexico. It's not as much of a defense issue as one might suspect, or at least it's not as much of a defense issue as is being marketed by the West Wing. And I think, personally, where this really matters in a geoeconomic or geopolitical context is when it comes to renegotiating the USMCA trade deal between the U.S., Canada, and Mexico, which is up for review in 2026.
I think we need to get Stuart down to Washington because I think he understands politics as well as the economy. What's the White House saying about the new level on steel tariff? This is permanent or this is a negotiating ploy of some sort?
So it's interesting because when it comes to the sector-specific tariffs, this really has been that one area for the White House that they are going to hold true for. When we're talking about, the courts challenging IEEPA, the International Emergency Economic Powers Act, the White House points to Section 232, which is how they are ultimately implementing these tariffs. And it also sort of gives the White House cover here as we wait for additional details to emerge when it comes to Nippon, because as you well know, this was a huge political flashpoint on the 2024 campaign trail. And by and large, I think it's fair to say that the Steelworkers Union has been in favor of those more protectionist policies, even if we start to hear concerns from the construction industry.
Well, we saw that in the crowd, certainly. Josh Wingrove brought that to us live on Friday. Stuart, we've got a minute left. Tell me about what we're hearing on the data, because everyone's waiting as we talk for the hard data to catch up with the soft data, or I guess vice versa. We've got ISM today contracting for a third month.
Yeah, we're seeing a little bit of catch up here. What's most notable in ISM is that supply conditions deteriorated, mostly a consequence of the tariffs. Inventories also accounted for almost all of the drag in the headline ISM index. What really matters most is that the demand side looks relatively good. Part of that in May could have been a little bit of relief because tariffs were put on pause, but supply conditions deteriorated, prices are still rising, and folks are feeling price pressures. We'll see if producers can pass those along to consumers in the months ahead.
We shall, and we'll have a big jobs report waiting for us at the end of the week that I'm sure we'll talk to Stuart about. Stuart Paul, Tyler Kendall, many thanks to both of you. We're just getting started on the Monday edition of Balance of Power right here on
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, they're both lower. NASDAQ remaining in the green. NASDAQ 100 index up by almost 0.3%. NASDAQ Composite Index up 0.3%. S&P, putting it all in context, down 0.1%, lower by 5 points, 59.06. First trading day of the month of June. What a May we had with the Dow down 204 to kick off the new trading week, down 0.5%. 10-year at 4.44%. The 2-year currently yielding 3.92%. Gold up $81 the ounce, 33.70 now, up 2.5%. And West Texas Intermediate crude up 3.5%, 62.90 for a barrel of WTI. Bitcoin now down $700 the token at 104,304, a drop per Bitcoin of 0.7%. Investors parsing through the economic data while also keeping an eye on trade and geopolitical developments. Jamie Dimon says his retirement from the top post at JP Morgan Chase is, quote, several years away, but the decision is up to the bank's directors. Now, interviewed on Fox Business, the 69-year-old CEO said, it's up to God and the board. I love what I do. The question of when Dimon will retire and who might succeed him has hung over JP Morgan for Chase for years. Dimon used to joke that retirement was 5 years away, no matter when asked, but recently he stopped giving that answer. JP Morgan Chase shares right now, they're unchanged on the day. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Great to see Charlie Pellet. We were in the flesh last week, actually live in New York, and what a treat to spend some time with the voice of Wall Street and the New York subway. I hear Charlie upstairs at 7:31, then you go to the tube and you still hear Charlie. That's why he's one of the most recognizable people in New York. Great to see you. I hope you had a great weekend. Gorgeous here in the nation's capital as we get back to work. Senators are flying in, and there's a lot on the table that we are talking about, including what transpired over the weekend, leading to the latest round of peace talks today, Russia and Ukraine in Istanbul. Can you imagine the tone and tenor of these talks after what happened over the weekend? Absolutely remarkable stuff when you consider the attack that Ukraine managed to stage. Reporting suggests more than 40 Russian aircraft were destroyed. These are long-range bombers capable of deploying conventional and nuclear weapons. You've probably seen the video here. These massive bombers burning on the runways. They never even got them off the ground or out of the way. And reporting would also suggest that Ukraine destroyed. There it is now if you're with us on YouTube. Look at this, straight from the drone. Suggesting that Ukraine destroyed a third of Russia's strategic fleet. We're going to get into that in a moment with the doctor here. How they did it is the incredible part. As I spend some time here with Tyler Kendall, if you saw this in a movie, you probably wouldn't believe it. It would seem kind of hokey, the idea of these drones being smuggled into the country by spies. Then they put them in these wooden boxes that open remotely for the drones to fly out to these military installations. This is a massive coup, it seems, militarily for Ukraine.
Oh, it's pretty remarkable, especially as in recent weeks we've heard about allies of Ukraine greenlighting the use of long-range missiles deeper into Russian territory and what that could mean to changing the landscape of the battlefield.
Yeah, they hit targets in Siberia. And there are great questions now about what the response, retaliation will be from Russia and how it might change the conversation about procurement when it comes to weaponry and weapons platforms. No one knows this story, of course, better than Rebecca Grant, Vice President at the Lexington Institute. She's with us right now in studio. Dr. Grant, great to see you. Welcome back. I'm not even sure where to begin other than, can you believe this? How did they do it?
This was incredible. I mean, it's more like Tom Cruise or Clint Eastwood or James Bond, an attack of this type. We'll never know all the details, but they used some fairly short-range first-person view drones, maybe made by Ukraine. What really got my attention, one, it was a coordinated attack. So Russia's admitted it was 5 different airfields, all happening simultaneously. That's incredible command and control and intelligence backing it up. And then, as you said, One of these airfields was out in Siberia near Lake Baikal. That's 3,000 miles from Kyiv. The video you showed, I think that one's from the airbase up on the Kola Peninsula near Murmansk.
Imagine that.
Major strategic attack, and Putin has got to be worried about what else Ukraine could hit deep inside
So this
Russia.
was something that was months and months in the making. It's being compared to Pearl Harbor. Politico's headline this morning, Russia's Pearl Harbor, maybe a better comparison to the Israeli operation with the exploding walkie-talkies in Lebanon. Can you put this in context for us, the significance of this achievement?
As cool as the pager attack was, this is even bigger because here Ukraine has carried out the biggest devastation on Russian air power since World War II. They've hit nuclear-capable bombers inside the Soviet Union while these ugly bombers were parked wingtip to wingtip. And there's no question they've kind of set back some of Russia's strategic capabilities, but it is very, very big. And then the fact that it was done with drones, people are going to be studying that for a long time. And we got to ask ourselves too, hey, we need to make sure no one can do that to us and our U.S. air power.
Well, that actually leads to my question, which is what did Ukraine's allies know ahead of this attack, and how have allies been responding, particularly those NATO countries that have been watching this closely?
I think there's been some shock and fascination. Ukraine had done smaller attacks on several of these air bases, but just with a very few drones. But to do the coordination is incredible. Of course, for NATO, that wall of air power that goes from Helsinki to Istanbul is their #1 defense against Russia. And I guarantee you this morning in the NATO capitals, people are looking at some pretty interesting satellite photos. The attack up in Murmansk, big, oily, black plumes of smoke telling you they really hit something, gasoline, something in those planes and caused a lot of destruction. So for sure, NATO is taking notice, and NATO is cheering, I'm telling you.
So part of this conversation does lead to questions about our own U.S. defense industrial base and revitalizing that, since we know that we send a lot of weapons abroad to Ukraine. How are you looking at how that's entering this conversation when you're seeing an attack like this?
Yes, and the new budget proposals really have a lot of focus on the defense industrial base. I'll tell you this. Russia has probably just a few more bombers than the U.S. does in our inventory. Ours are a whole lot better, okay? But this is why we're building the new B-21 Spirit stealth bomber. I'd like to see us double production there, build a second site if necessary. And it shows us that we really have to bring up our capacity, not only in aircraft production, but in weapons production as well, and counter-UAS systems.
Right, definitely. Unmanned drone aerial systems that do this kind of surveillance. How realistic is that? Like, what is the timeline that actually needs to be in place? How fast could we actually see some pretty ambitious goals met when you're looking at how the Pentagon's trying to revitalize, ultimately, the defense industrial base?
Yes, they are. And, the number one thing they have to do, whether it's ships or planes, is they've got to put out purchase orders and say, we want to buy a batch of this. With counter-UAS, we've already got some great systems in place. We've just defended Guam appropriately for the first time against missile and drone attack. But I guarantee you our beaches down, in Virginia Beach, Hampton Roads, Langley, Norfolk area, they're really looking at how to handle the counter-UAS. Of course, our strategic bomber bases are deep inside the country. North Dakota, Missouri, where you find the B-2 bomber, Barksdale in Louisiana, of course. But we want to make sure we have those defenses. And so that counter-UAS is going to be one of our priorities in revitalizing our defense industrial base.
They're already making changes inside the Pentagon. Secretary of the Army, Dan Driscoll, has canceled the M10 Booker light tank, has stopped purchases of Apache helicopters and Gray Eagle drones. The robot combat vehicle is apparently done. What do these make room for in terms of what we need now?
Well, a #1 priority for the Army is the MV-75. It used to be called Flora. It is a second-generation tilt rotor, and it is going to replace helicopters in the air assault role. That's when you get in the helicopter and go in and air assault into a target. It can tilt and fly straight like an airplane, or it can hover like a helicopter. Second generation, made by Bell Textron, great, already in test and production with the Army. And the Army Chief of Staff came and said, hey, I want these 2 years early. Give me a proposal. I want them out on the flight line now for our soldiers by 2028.
Well, you spoke with the Army Chief of Staff at length about the changing lines in procurement in the last administration. This is being accelerated now. I guess, you think more broadly about the funding debate that's underway right now in Washington. The line that we're hearing from the Secretary of Defense and the Army Secretary is Congress is sending us stuff we don't need. We don't need all these Hummers. We don't need all of this stuff. When does that part of the story end? Lawmakers play a big role in this.
Yes, they do, because Congress has the power of the purse, and it's that season where the Army sets its requirements and Congress says, maybe not so fast. But what I like, and Congress does too, is that the Army has set its priorities and said, we really need to be able to be more agile in the Pacific and in other areas so they can move farther and faster and insert soldiers where they need to go and do all the other missions that go with it. The Army has a plan, and Congress is going to like that a lot.
Well, that was going to be my next question. How is the Army being informed by these other active conflicts that are happening, whether it be rising tensions in the Indo-Pacific, obviously Ukraine? Because a big part of this, right, is trying to get some of those more innovative companies to start, competing, or perhaps not on the same level as those defense primes, so that they can get that more innovation technology integrated more quickly.
Exactly. And so the Army is balancing having 10,000 U.S. forces forward deployed in Poland right now, where they need M1A1 tanks, right? But then they need the long-range artillery and missiles down in the Pacific. And what they all need is better software integration. They have all their acronyms, modular open systems. So the Army is making sure that all its new programs are able to take software upgrades more quickly from a range of vendors. The MV-75 tiltrotor does this specifically. In the future, they can upgrade it with something from another company. And that's really a key to keeping the innovations that soldiers need in the future.
Let's get back to where we started with Ukraine and Russia. There were big questions about how Russia responds to this, whether Vladimir Putin might be inspired to use a nuclear weapon. There are also questions about whether Ukraine actually did the damage that we think it did. And to your point, maybe it's got something else up its sleeve. What happens next year?
Well, on the issue of the damage, these are irreplaceable aircraft for Russia. Not many of them. They're A-50 surveillance plane. Ukraine had already shot down 2 of those, so they maybe have 2 or 3 left. Wow. So to lose, even if it turns out to be 10 or 15 aircraft that are a total loss, they cannot rebuild them. They're out of production. They're old. They're ugly. They're heavily modified anyway. A lot of them are burned and the wings have fallen off. The best they can hope for is maybe cannibalize some spare parts and pull some others out of storage. But it's a blow. And what is there to tell us that Ukraine doesn't have another set of drones waiting to go? It really sent a chill down my spine.
So they could still be positioned for another attack just like this, is your point?
Perhaps they can. It surprised us here. So who's to say? Why not an attack on that gas or oil pipeline that goes to China? Because China is keeping Russia in business. The export control sanctions will make sure that Russia can't get a lot of the high-tech parts they need to restore and replace these aircraft. It's a total write-off. This is a huge loss for Russian air power. I'm so glad to see it.
No two ways about it. Isn't that remarkable? We're out of time. This was not coordinated with the U.S. in any way that we know, in terms of intelligence, was it?
Zelensky says solely Ukraine operation, but who knows?
Who knows? Really glad you could join us. Rebecca Grant, Vice President, Lexington Institute, a true expert on all things defense, and really great to drill down on some of these programs with the help of Bloomberg Washington correspondent Tyler Kendall. Tyler, thanks for spending some time with us, as always, here on the fastest show in politics. I'm Joe Matthew in Washington. You made it through the weekend, and we've got a lot more to talk about with our panel. Ashley Davis and Bloomberg Politics contributor Jeannie Shanzana will be in right here next as we welcome our global television audience to the program. Coming up at the top of the hour, Kaylee Lyons will join us, and a lot more to talk about coming up next on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a move lower today for both the Dow and the S&P 500 index. NASDAQ holding onto a gain. Let's begin there, up 48 right now on the NASDAQ Composite Index. First trading day of the new month. NASDAQ up by 0.3%, but the S&P in the red right now. Lower little change, 59.06 where the index stands, down 5. A drop there of 0.1%. The Dow lower by 202 points, down 0.5%. The Bloomberg Mag 7 index now in the green, up 0.1%. The 10-year 4.45%. The 2-year 3.93%. Gold is surging 2.6%, 33.74 the ounce. West Texas Intermediate crude also advancing 3.9%, 63.13 a barrel on WTI. Bitcoin remains lower by 0.7% at 104,214 on Bitcoin. Bottom line here, we got traders parsing the economic data while also keeping an eye on trade and geopolitical developments. Among the day's economic reports, numbers on factory activity, and with more, here's Bloomberg's Vinny Del Giudice.
American factory activity contracted in May for the 4th month in a row. Tariffs are the culprit. The uncertainty, the erratic rollout. Imports fell to a 16-year low based on the data from the Institute for Supply Management. Factory orders also dropped. As far as U.S. inflation, the ISM data shows supply costs remain an issue. Turning to another report, the Commerce Department says construction spending dropped for a 3rd month in April. Vinny Del Giudice, Bloomberg Radio.
And, of course, Balance of Power, the place to keep it locked into for the latest on trade and tariffs. Tesla's new vehicle registrations fell further in France, undercutting CEO Elon Musk's assertion last month that the carmaker has recovered from its early year sales slump. Tesla shares, they're down today by 2.4%. Again, recapping, S&P lower, little change right now, down 0.1%. Balance of Power continues right now. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie. Good to see you. Charlie Pellet live in New York with us on the fastest show in politics. Welcome back to reality. It's Monday. We're live in Washington, and the president is now truthing. We have a lot to talk about with what took place over the weekend in Boulder. As we assemble our political panel, we need to get into what's happening here in the nation's capital as well. We're spinning a few plates today. That's the way it goes after a couple of days. Although we are picking up where we left off with regard to reconciliation, remembering the president speaking outside of Pittsburgh on Friday night at the U.S. Steel plant. Senators are flying back in today. It's time to get their arms around reconciliation. The president's driving this too. He's got a meeting this week with John Thune to try to get the ball rolling here in the upper chamber, and that's where we start our conversation with our political panel today. Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano is with us, political science professor at Iona University, and with me here in Washington, Ashley Davis, partner at S3 Group, our Republican strategist. It's great to see both of you. Ashley, as our Republican, I wonder what you think is going on inside John Thune's head right now. He's got a call coming with President Trump. He knows what the stakes are. This is going to be almost as complicated in the Senate as it was in the House, because changes are going to be made that could make this unpalatable to any number of Republicans next door. What's about to happen this week?
Well, first of all, everyone's negotiating in public.
Yeah.
So everyone's going in front of the media. No, but the House did it too. I mean, they all have to stake what they're doing in regards to their constituents. So this week we're supposed to hear from the Senator Thune, from the Majority Leader, when he plans on putting the bill on the floor, which could be as early as June 23rd that week if they really want to get done by July 4th. I am not 100% convinced yet that
A lot of people
can pull that off. I think that the deadline for getting this bill done is truly whenever the Treasury says we're hitting the debt limit. I think that there's probably a little bit of room to play with that, and they would do it in August is my drop dead thing.
Okay.
But there's 4 things that people are concerned about. Medicaid. You have a certain number of senators on Medicaid. You have a certain number of senators in regards to the debt ceiling. You have Rand Paul and Ron Johnson saying they will not vote for a bill that has either. Then you have, obviously, the green tax credits, which you have Murkowski, Collins, Tillis, that are kind of anti that.
So we've already mentioned enough senators to sink the vote. What's the fourth?
Well, the fourth is actually you have, and this isn't going to happen, but you have some senators that want to make the tax cuts permanent. You just there's not enough money.
Yeah.
But
beginning with Mike Crapo
and Daines.
So we've got a problem.
We'll see. I think that Thune's going to do and the president is going to weigh in and do what they have to do to get this thing done. Obviously, we have the procedural issue of the, quote, bird bath. Both sides of the aisle have met with the parliamentarian this past week over recess to try to think of what can survive and what can't. So there's a lot of moving parts, but they can't leave it out there too long, because what's going to happen is things like happened to Joni Ernst over, last week. So in regards to these town halls, they're going to have to pass something soon. But
well, you set the table nicely for us there, Jeannie. I don't know if you saw Scott Bessent on TV on Sunday morning. He's asked on CBS, what's the X date? He wouldn't answer it and seemed to imply that that's part strategy here to light a fire underneath lawmakers. Is there a chance when you hear talk like that, though, that we sleepwalk into a default?
No, we certainly can't do that. And that's what's dangerous about the Treasury Secretary talking about something as serious as hitting the debt ceiling as a negotiating tool. But that, of course, is Washington, D.C. And I think as the senators come back today and they're all flying in under pressure from the president, we heard him on Friday night, as you mentioned. He was truthing about it over the weekend. They've got to get this done. It's going to be interesting to see those of whom spoke with constituents, which is going to be most, what they heard and where that moves them as they come back. And, the reality for the senators and the House, for the GOP as a group, is there is no option but to pass this bill. It must be passed. It will be passed. So really what we're looking at is how they play it after the passage, whether that's July 4th, as Mike Johnson was talking about this weekend, or August, which seems to be the date most people suggest it will get done. They are going to have to sell this, and they are going to be vulnerable from many perspectives as they go out to sell this. And of course, Ashley was just talking about one of these sort of stunning examples of the kind of vulnerability, which is Joni Ernst saying, well, don't worry about Medicaid. We're all going to die anyway, which is quite a way to make people feel assured about what you're doing in Washington, D.C.
Yeah, she is owning the remark. We'll talk about this a little bit more next hour. She actually did a video from a cemetery, actually from a graveyard, kind of making fun of the outrage over something that she thought should be obvious. The Dear Colleague letter from Chuck Schumer went out last night, Ashley. Dear Colleague, there's never anything good in a Dear Colleague letter. We're going to fight this with everything we've got, he said, to make it as painful as possible for Republicans. He's coordinating with Hakeem Jeffries on this. What kind of pain can they inflict?
Well, they're going to, first of all, this is what they should be doing. This is their job. They're going to put up every single procedural issue that they
Just
can
like
along the
Republicans
way.
would on the other.
Absolutely. I mean, if I were Schumer or Jeffries, you have to seem relevant during this time. And we've been through this just as much in the past that really this has nothing to do with the opposite side of the party right now.
Build back better.
Exactly.
Right?
We had nothing. I mean, if I was a Democrat lobbyist right now, I'd be loving life because you don't have to do much.
Tell me when it gets busy.
Exactly. So he needs to be showing, and obviously he's in a battle right now with AOC in a potential primary. And so he has to look like he's fighting for the Democrat Party. This is what he should be doing.
Whether they can actually slow things down, Jeannie? What kind of pain is he talking about? We're going to fight with everything we've got, Chuck Schumer says.
Well, they are going to try to make the Republicans take hard votes. The reality is Democrats cannot do a lot. They are clearly in the minority. They need to, number one, make sure that Republicans own the pain that they are putting on the backs of the American people. I mean, let's take one example. You had Elon Musk with his chainsaw talking about cutting people, whether it was rural farmers, whether it was firing workers who are studying cancer, so that they could add, $3 to $4 trillion to the debt, as this bill looks like it may do if and when it gets passed. Those are the kinds of things that Democrats are going to be talking about. They're going to be talking about the cuts to Medicaid, which will be drastic implications for each of these senators and members of the House in their district. So that's what they're going to be focused on. And it is really going to be the job of the Republicans to try to see, in the aftermath of this bill, can they sell it? They're going to have to own it. The question is going to be, can they sell it? Because the harm as it looks out of the House is going to be very real. But I do think they will get it passed ultimately.
I want to ask you both about what happened in Boulder over the weekend, not only with regard to our own national security, which is something that Ashley Davis is an expert in, but also with regard to what happened when the couple was murdered here in the nation's capital. The spill over that's happening to our own shores. A 45-year-old Egyptian man, Mohammed Solomon, arrested for allegedly throwing an incendiary device. I think we call that a Molotov cocktail. It showed up at this parade of sorts in Boulder with a flamethrower. This was an individual who had been residing in the U.S. on a visa that expired in 2023, attacking a group of Jews who were in this parade, some of whom as old as 88, including one Holocaust survivor, according to reports. Donald Trump just took to Truth Social to write, yesterday's horrific attack in Boulder, Colorado will not be tolerated in the United States of America. This is the important part. Quote, he came in through Biden's ridiculous open border policy, which has hurt our country so badly. Unquote. He must go out under the Trump policy. Ashley, the politics here are pretty heavy, knowing that Donald Trump spent pretty much every day last week attacking Harvard on the grounds of anti-Semitism. This is the initial response from the White House. What do you make of it?
Well, listen, obviously this issue and the issue here, or the shooting here in Washington, D.C. that shot 2 people, I mean, this is horrific. Yep. I do think that this is much broader than the border. Obviously, there's an anti-Semitic something happening in the country right now.
This guy was screaming "Free Palestine."
Yeah, no, and obviously that's what happened here too with the shootings. But so this is brewing, and also it's a very politically divided issue, which just shocks me for some reason. And I'm just watching this from afar of how Republicans and Democrats are handling this. But going back, this is a perfect example, and you know how I am very conservative on the border. This is an example of why we need immigration reform, at least in regards to making sure, I mean, from what I understand, his visa was extended after it expired as well by the previous administration. So we have to make sure that this is what's under control in our country, either by deportations or actually putting something in place that works.
So, Jeannie, is this a border story? Is this a greater national security story? Or does this simply bring us to the discord in the Middle East that's not ending anytime soon? It's something that this administration is involved in.
Yeah, I think it's all of the above. It's also a very real story about not just the discord, Joe, but the actual violence going on and has been going on in the Middle East, extending back decades. There are people living in this country with very, very strong opinions on both sides, and we are seeing that play out. Let's not forget, it was just 40 days or plus ago that the governor of Pennsylvania's family and house and himself were firebombed.
That's right.
And the violence is intensifying and continues. The ADL says it was the most violent year on record in the United States against Jewish Americans and people who are Jewish and Israelis in the United States. That is horrifying. We also have to think about, on the other side, the pictures coming over from the Gaza Strip just over the weekend. The shootings that the United Nations has said resulted in the deaths of countless number of people and people who were starving. And so there's very intensified feelings. And the last thing we need is a politicization of this any more than there already is. That's why we depend on leadership to show us that we are a country of laws, that we have a right to speak about how we feel about a policy of a foreign nation, but we have no right to inflict violence. And the violence on these victims, just like the young couple in DC, just horrendous. And so we need to be careful. And I think one thing that wasn't mentioned, the director of the FBI, Kash Patel, came out before the incident had ended to talk about how this was an act of terrorism. Not even the Boulder police have said that. So here for the Boulder police for being careful in what they say and how they gin up frustration around this. And the FBI should follow suit and know better. Investigate and understand the facts on the ground before you make those kinds of statements.
We have just a minute, Ashley. Did Kash Patel overstep there, or is it seeming like he was right?
Well, I think he was right, and it was an act of terror. I mean, I don't know the exact timeline that was mentioned, but I mean, I think it was pretty obvious because they did know what he was saying. But yes, I mean, I do agree with Jeannie that there is problems in general with people having this inflammatory conversations, but in this case, it is true.
Well, it's pretty scary to think what else we could be in store for, as Jeannie mentioned, the images and the stories coming from Gaza are horrifying, and we have a lot more to learn about this. We'll keep you posted on this investigation as it unfolds. Many thanks to our panelists. They'll be back in our second hour. That's Ashley Davis and, of course, Bloomberg Politics contributor Jeannie Shanzano. Kaylee Lyons is on the way in. Much more to follow in hour 2 of Balance of Power. Stay here, only on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
They're back. Welcome to the Monday edition of Balance of Power as senators return to Washington this week to work on the president's big, beautiful bill. Alongside Kaylee Lyons, I'm Joe Matthew in Washington. Thanks for being with us on on the fastest show in politics here on Bloomberg TV and radio. Kaylee, there's a lot to get to. When it comes to reconciliation, we've talked about this a lot in the debate in the upper chamber. It might be just about as complex as it was in the House.
Yeah, you have a lot of different factions within the Senate. Some that want steeper spending cuts, some that are worried about the cuts to Medicaid and the rollbacks of the Inflation Reduction Act clean energy benefits. Then you have, of course, just a question of whatever the Senate, if it can get something passed, is going to send back to the House. And if that can pass a second time, knowing it was a squeaker the first time around.
That's right. Well, they're going to get to this debate now with a meeting this week between President Trump and the Majority Leader, John Thune, to give us maybe a sense of where they're going. Kaylee, they're still working on this July 4 deadline we hear about, which might be a little bit ambitious, but we have somebody who knows a bit about that to talk to us coming up.
Indeed, we do. A member of House Republican leadership, the chairwoman of the Republican Conference in the House, Lisa McClain, will be with us in just a moment. But first, we begin, as always, with a check on the markets as we kick off the trading week on this Monday. And Charlie Pellet has a look from New York. Hey, Charlie.
Indeed. I thank you very much, Kaylee. We got you covered here at Bloomberg. Do want to begin with a developing business story headline right off the Bloomberg Professional Service involving the Walt Disney Company. Disney laying off several hundred employees. Those cuts said to be underway. Now, this is all according to Variety. Variety says those Disney cuts are coming in TV, film, and the corporate finance units. Again, repeating the headline, Disney laying off several hundred employees. This according to Variety. Headline right now on the Bloomberg. Shares of the Walt Disney Company, they are lower today, down by 0.4%. All of this is the S&P 500 index is trading a little changed right now, actually just turning higher. First time today up now by 2 points, little changed, up under 0.1%. We got the Dow remaining in the red. Dow Industrials down 133 now, drop there of 0.3%. Nasdaq higher by 73, gain there of 0.4%. Bloomberg Mag 7 index has turned around from earlier losses, up 0.3%. The 10-year right now 4.45%. The 2-year 3.93%. Gold is surging $83 the ounce, up 2.5%. 33.72, and right now West Texas Intermediate crude up 3.8%, 63.08 for a barrel of WTI. Bitcoin down 0.6 now, 104,380 on Bitcoin. Shares in U.S. steel and aluminum companies are climbing as President Trump says he will be increasing tariffs on steel and aluminum to 50% from 25 cents. Among some of those names, Cleveland Cliffs, it is up by 21.6%. Nucor up 8.7%, and shares of Steel Dynamics up by 9.6%. Again, repeating our top story, Walt Disney laying off several hundred employees. This, according to Variety. Disney shares, they're down now by roughly 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet up in New York. Thank you so much. We miss you, Charlie. It was great being up there at headquarters with you last week. But Joe Matthew and myself, Kaylee Lyons, have returned to Washington, along with the majority of Congress, after, of course, the Memorial Day recess. The Senate is flying in this afternoon, this evening, and are pretty quickly going to get to work, at least behind closed doors, on figuring out what changes they want to make to the House-passed one big beautiful bill. Can't forget the one. Of course, it passed in the House 215 to 214. It was very narrow, and the Speaker of the House has warned the Senate, don't make too many changes if you want me to be able to pass this thing a second time.
Are we still calling it OBA? That was a thing for OBBA. Does that make it easier? I feel like we worked off the OBA. We're not doing that anymore.
I haven't been.
Remember Build Back Better, BBB? That's dangerous ground.
Yes.
The president did talk about this at the big rally, the one big rally on Friday night outside of
did.
Pittsburgh. This is something that's very top of mind for him, right? Let's listen.
Right now, on the verge of passing the largest working class tax cuts in American history. We got to get that beautiful big bill, beautiful as it is. We got to get it passed. The Senate, call your senators, and I'll tell you, you have great people representing you. Your senators, your congressmen, you have great people. Every single Democrat House member voted to impose the largest tax hike in history. The Democrats are voting for the largest, highest tax hike in history. I've never heard of it before.
Now, as this bill goes to the Senate, the big question, of course, that we've been asking here on this program and everyone's asking inside the nation's capital is, what kind of change will the upper chamber make? And will that make this more difficult to pass when it comes back in the House? we actually have an opportunity to speak to Republican leadership in the House to talk about that very question right now. Congresswoman Lisa McClain is with us, of Michigan's 9th District, chair of the House Republican Conference, in studio, no less. Congresswoman, thanks for coming to see us.
Thanks for having me.
Are you getting the
Appreciate it.
jitters now that senators are flying back into town? What are they going to do to this thing?
It's getting real. My hope is that they don't do a lot, right? We passed it very narrowly in the House. We don't have a big margin. Obviously, that's no secret. So my hope is that they make very, very few changes. They send the bill back, and we do get it passed by July 4th. President Trump has been very clear that that is his deadline, and I'll tell you, I wouldn't want to be the one that stands in front of President Trump's deadline.
Well, we know he's not afraid to get people on the phone, even call them out publicly if necessary. But obviously your job as Republican Conference Chair is to talk to the membership, get an understanding of what their deal breakers are, knowing they were not shy about expressing that during the process in the House. What is the most potential deadly change the Senate can make to this bill?
I hope they don't do many changes to reduce the amount of savings, right? I think we've hit the sweet spot. I don't believe they'll make many changes to Medicaid because, again, that was a very delicate balance, and SALT is obviously very important. So I don't see a lot of changes that they really can make. I know some of the talk has been out there on, making sure that we have coverage in the rural hospitals and whatnot, which we'll make sure that we do. The bill is pretty well crafted, and remember, we'd been working on this bill for almost 9 months, so we've had our family fights, so to speak, to get to the place that we're at right now.
What if it's in fact more cutting that comes from the Senate? What do you tell Mike Crapo, who says, let's make the Trump tax cuts permanent, make the cuts even deeper? Would it pass the House when it came back?
I think it would. I think it would, provided it just doesn't go too far for a lot of our members. Look, at Speaker Johnson has a very small eye of the needle that he needed to thread, and I think he threaded that perfectly, right? Some members like me that are in a ruby red districts wish we would have been able to cut more, but I understand why we didn't, and it's this balance. What I will remind everybody is we need, everyone's talking about certainty. That's why it's so critical that the Senate pass this, is it will give Americans the certainty that they've been asking for. And I'm confident they will.
Well, when we consider what Americans will actually see if and when this becomes law in terms of the changes in their pocketbook, a lot of this is just an extension of the tax rates they've currently been paying. That's the point the president was making. It's avoiding a tax hike.
Yes.
It's not necessarily giving everyone a tax cut, though. How do you message that successfully as you look ahead to 2026?
Exactly what you said is we want to avoid the largest tax increase than a lot of Americans will see in their entire lifetime. Look, in Michigan, if we do not pass this bill, over 700,000 small businesses in just Michigan will see their tax rate increase to 43%. That is not good for the economy. That is not good for Michiganders. So we have to make sure that we extend these tax cuts. And I will remind you, every single Democrat voted to raise the American people's taxes. We're not for that.
There's a question about the debt ceiling here, of course, that's folded into this bill. Scott Bessent yesterday, the Treasury Secretary, would not be specific about the X date, suggesting that might increase the urgency and the timeline in getting this done. Is that a good strategy? Does that actually motivate lawmakers?
Well, I can share with you, I believe it does motivate lawmakers. Let's put
Why not say it's the 4th of August, Congresswoman? We need to get it done by then.
I think we don't have the exact date, or no one can provide the exact date right now, but I do know that it's sometime in the near future. So let's put it in the one big, beautiful bill, and let's just deal with everything so we can get on to the real business of Congress, which is the appropriations, right? We have to begin to pass our appropriations package.
Well, the Senate may ultimately, if it wants to make a number of these cuts permanent or extend the duration before we have another X-date crisis on our hands, actually lift the amount of the debt ceiling hike in the package to $5 trillion from $4 trillion. Would that be problematic, or do you think that can get through?
I think that will be a little bit of problematic. Any tweak or adjustment that is made in the Senate is not going to be an easy lift for us because we spent all of the time already having the internal fights and arguments and, different people representing their districts. So we really can't have a lot of changes it is not going to be positive for the American people if we do that. It just makes everybody's job way more difficult.
There's been a lot of talk about Joni Ernst's town hall experience, which we're going to get into in a little bit here. I'm just wondering what you heard from your members who went home, marched in parades, I guess in some cases held town hall meetings. What was the point of concern that they were hearing from voters?
Yeah, well, I actually did a Memorial Day parade and a more event and several other events, talked to business owners, had a round table with our elected officials, et cetera, et cetera. And what I heard in my district in Michigan is a sense of optimism and hope, because the people in my state look at the tariffs and the economy a little bit differently. And I say that because Michigan ranks number 3 behind California and New York in the amount of manufacturing jobs lost. So that is a horrible thing. What they see President Trump doing is bringing jobs, especially manufacturing jobs, back to their state of Michigan. So they are extremely excited and very optimistic with what's going on in the economy right now.
But are you not hearing from some of those manufacturers that say lifting steel and aluminum tariffs from 25% to 50% and therefore elevating input costs is an issue?
Yeah, to be fair, yes, they are, but they're giving the president some grace. They understand that tariffs are just a tool in the toolbox to level the playing field, so to speak. So what I'm hearing is there is a little bit of concern, but they do trust his decision-making on economics and economic policy because he's done it before. And in his first term, it went really well for a lot of the businesses in my community, and they're hopeful that we're going to get this economy back on track.
Well, with that trepidation, is there also a conversation about pulling up the moving trucks and starting to move manufacturing supply chains? Do they say, Congresswoman, give us 6 to 9 months because we're bringing it back to Michigan?
Yes.
Is that how this ends?
Yes, they are asking, just like they're giving the president some grace, they're asking for a little bit of grace if they're showing progress moving facilities back.
Will we see that?
You know, I'm confident. I don't want to get ahead of the president, but what I can tell you about President Trump is he's been very receptive to the American worker in listening, right? There are unintended consequences when we do policy changes. He's very in tune with the American worker, and he wants to listen to what they're dealing with in the American manufacturer, and he will make changes based upon that.
All right, Chairwoman, great to have you with
you.
us in our Washington, D.C. studio. The Chairwoman of the House Republican Conference, representing Michigan's 9th District, Lisa McClain, with us on Bloomberg TV and radio, talking the One Big Beautiful Bill, but also manufacturing. And we did get some manufacturing data in the form of ISM manufacturing earlier today that has had some influence on financial markets. So let's check back in on those now quickly with Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. Indeed, we have got the Dow lower, the S&P back in the green right now. Little changed, up 3 points. That's an advance of just about 0.1%. Dow Industrials down 139, though, remaining in the red, down 0.3%. NASDAQ, the composite index, up 72, up by about 0.4%. But interestingly, we do have our MAG 7 index. It right now is trading little changed, up by about 0.2%. Tesla shares, by the way, lower. We've got the 10-year 4.45%, the 2-year 3.93%. Investors sifting through economic data as well as following the latest trade and tariffs developments. Also, gold now up $85 the ounce, up by 2 points. The 10-year 4.45%, the 2-year 3.93%. To be clear on spot gold, up $2.60 the ounce. West Texas Intermediate crude up 3.5%, $62.96 a barrel. Just want to update you on that developing Walt Disney story. Bloomberg News now reporting that Disney laying off several hundred employees across its film and TV businesses. Those cuts began today and are falling on employees in marketing, publicity, casting, and development, along with corporate financial operations. This now coming from the company. Shares of the Walt Disney Company, they're down by 0.4%. Balance of power continues right now in Washington. Back we go once again. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you very much. We're in Washington, where we just wrapped up a conversation with the chairwoman of the House Republican Conference, Lisa McClain. And Joe made mention in our conversation with her about the experience of Iowa Senator Joni Ernst, the Republican, who held a town hall over the Memorial Day recess and was actually pressed by a constituent and people who were in attendance about the cuts to Medicaid and SNAP that could potentially come if the One Big Beautiful Bill indeed become law, suggesting that people will die This was the senator's response.
People are not, well, we all are going to die. For heaven's sakes, folks. Okay, no, but well, what you don't want to do is listen to me when I say that we are going to focus on those that are most vulnerable. Those that meet the eligibility requirements for Medicaid, we will protect.
Yes, you heard her say, well, we are all going to die. Fast forward through the outrage, many rounds on social media, a bunch of campaign ads that Democrats are making with that tape, to the response from Senator Joni Ernst, who went all the way to an actual graveyard to record a video that maybe we'll call a non-apology. Listen.
I would like to take this opportunity to sincerely apologize for a statement that I made yesterday at my town hall. I was in the process of answering a question that had been asked by an audience member when a woman who was extremely distraught screamed out from the back corner of the auditorium, "People are going to die." And I made an incorrect assumption that everyone in the auditorium understood that, yes, we are all going to perish from this earth.
So on that grim note, let's assemble our political panel. Today, Jeannie Sheehan Zaino is with us, Bloomberg Politics contributor, Democratic analyst, and senior democracy fellow at the Center for the Study of the Presidency and Congress, alongside Ashley Davis, Republican strategist and partner at S3 Group. Ashley, I'll come to you on this one first as the Republican at the table. When you are being pressed on issues that actually do affect people's health and health outcomes and suggest that we're all going to die anyway, then kind of double down in that fashion, does this serve the senator well? Does it serve Republicans at large well?
I knew you were coming to me first. I mean, Senator Ernst is a very serious member, as I'm sure she's been on the show, and so I was actually surprised with the response today. I do think that from the initial town hall, these town halls are exhausting, which is why most people are canceling theirs, or they're being told, and we all know this is not a political thing, they're being stacked with Democrats to ask hard questions, which, by the way, Republicans would do the exact same thing. So, I mean, this is not a political statement that I'm making. So I think they're exhausting. I think that probably the response was a little bit worse than the actual mistake to begin with. She could have just said, listen, that was a little bit out of context or whatever, but the doubling down, I mean, she's making a strategic decision to do it. She knows what she's doing, so.
With a little bit of snark. Jeannie, I'm very in touch with my own mortality, so I have to be careful here. I can barely sleep through the night with this kind of stuff. Is this actually great for Democrats?
It is, and Joe, I think, she woke us all up to the fact that we're all going to die. The reality is that it was very strange. It fell flat, obviously, the cemetery walk. People kept saying it was AI. It was truly her. And this is a woman who came to Washington making her name with the Squealing Pigs commercial that was amazing, talking about cutting pork. And yet she's doubling down on cutting Medicaid that impacts 40% of young people, children in her district, in her state rather, and 50% of seniors. And so it was strange because if you listen to the rest of the town hall, she said perfectly clearly that she understands how important Medicaid is. She understands how important it is to her constituents. She could have just said that and said what Mike Johnson said, which is we're trying to cut people who are, playing the system essentially. Now, I don't agree with Mike Johnson, nor do I give Joni Ernst tips, but I'm really thinking she needs to go back and listen to his Meet the Press interview because he explained it a lot better than she did. And he certainly didn't say, oh, don't worry, we're all going to die anyways.
Well, I also wonder how some of her colleagues received this or viewed this. Senators like Josh Hawley, for example, or Susan Collins, who have raised serious concerns about the cuts to Medicaid, suggesting they may want to see a different version through the Senate. Could this kind of episode give more ammunition to that argument?
I don't know. I mean, I think this is an issue that is not going to impact. It may impact her because we have to remember she's up in 2026, so she doesn't have that long to lose this kind of statement, and obviously the Democrats are going to make tons of ads over it. But I don't know if it impacts the broader bill. I think there's so many things happening behind the scenes. We know that, of just all the different levers to make sure that we at least don't lose any more than 3 votes. Yeah. And I don't think this impacts it.
Well, we just spoke with a member of Republican House leadership, of course, on the program, Jeannie, and Congresswoman McClain was asking, hoping maybe that the Senate not make any big changes to this bill. But based on the conversations we heard on Sunday morning and, of course, throughout the week last week, that's just maybe not going to be the case when you talk to Ron Johnson, Rand Paul, Tom Tillis. I could keep going. The idea of a 4th of July deadline feels how to you right now? Is that even possible?
You know, I wouldn't count it out, but the reality is, and this will get done, but most likely it gets done after that, probably August. It was fascinating to hear the representative, because the fact is the Senate is going to put their imprint on the bill. There is no way that the House gets to hope that they can hope, but they're going to get a reality of the Senate just rubber stamping what they've done. So that is just not going to happen. They will be battling about changes, but in the end, they've got to get something passed. There's just no way that the Senate can fight enough that they give the House something that it can't pass. So it will get done, but then they're going to have to live with the consequences. And that's what the Joni Ernst Town Hall experience shows. Those consequences are going to be dramatic on the deficit, on social safety nets, on spending cuts, on taxation. They are real, and Republicans will feel them in 2026 and then again in 2028.
When we consider the role Democrats play here, Jeannie, the Democratic leader in the Senate, Chuck Schumer, is vowing in a letter to colleagues to fight back with everything we've got. What do they really got when this is reconciliation and it's by design a party line issue?
They don't got much, Kaylee. That's the reality. They're in the minority. What they do have are gifts like Joni Ernst and others have given them throughout the process that they are going to tag into campaign commercials and take out. And those impacts are going to be real. When James Carville says Democrats really need to focus on 2026, 2028, that's what they got. They got a campaign to fight because you can't do anything in Washington unless you control either the House, the Senate, or the White House, and they don't control either.
This is going to be in campaign ads either way, right?
Yeah, you mean Joni?
Yeah.
Oh, yeah, totally. I mean, for sure, for her,
already made
100%. I mean, I don't know if it goes into others, because also 18 months for everybody else is a long time away, even though. But listen, I think the what I keep saying as well, just as Jeannie said, it's going to be really hard to get this done by the July 4th recess. But then I also said the exact same thing, that Speaker Johnson wasn't going to do it, and everyone else was too, you know. So I think there's a lot happening that we all don't know about behind the scenes. And again, as I said earlier, the senators right now are negotiating in public. They're negotiating with the press, I mean, to tell their sides of the stories. But so did the House, and then they all come together at the end.
Well, when we consider that Speaker Johnson was able to meet his own deadline, he needed the helping hand of the president, who was having meetings at the White House with some of the most difficult members. Is President Trump as influential for the Senate? Can he give that same helping hand to John Thune?
Oh, yeah, for some. I mean, I think that you have very serious members that have very serious concerns, like Senator Rick Scott, who's very well respected in some of the healthcare spaces and obviously fiscal spaces. Ron Johnson as well. I don't think he can move Rand Paul. I think Rand Paul, as long as a debt ceiling's attached, Rand Paul's out. So I think you lose one vote there. I don't know if he can help with Hawley or not, but I think he can help with Rick Scott and Ron Johnson just because of the close relationship they all have.
Fascinating. Well, I'm sure you're going to help us learn a lot over the coming days. It's great to have you with us as ever. Ashley Davis, Republican strategist, alongside Jeannie Shanzano, our Democratic analyst, Bloomberg Politics contributor. Many thanks to both of you for a great conversation and a great panel. As we get back to the trade on Wall Street, Charlie Pellet standing by at World Headquarters in New York with the latest on the markets. Not the most inspired session here, Charlie, is it?
Indeed. We've got the S&P lower right now, down 0.5 point, but do want to begin with a number of developing stories, breaking news right now. We've got Morgan Stanley kicking off a $5 billion debt sale for Elon Musk's XAI. Federal Reserve Bank of Chicago President Austin Goolsbee says rates can fall if trade policy is resolved. And learning about Disney's job cuts, it is firing hundreds in film and television as the industry's woes drag on. Right now, the S&P 500 index, little changed, has been meandering, swinging between gains and losses right now. Down half a point. Key takeaway, little changed on the S&P. The Dow down 173, prompt there of 0.4%. We got NASDAQ up 63. The NASDAQ Composite Index up by about 0.3%. Your 10-year at 4.45%, the 2-year 3.93%. Gold up $84 the ounce, up 2.6%, while West Texas Intermediate crude is up 3.5%, 62.93 a barrel on WTI. Jamie Dimon says his retirement from the top post at J.P. Morgan Chase is still several years away, but that decision is up to the bank's directors. That word coming in an interview on Fox Business. And Mohammed Sabri Solomon has been charged with a hate crime in a criminal complaint dated June 1st in Colorado federal court. He faces as long as 10 years in prison, but additional charges could be filed in the case. Recapping, S&P now higher by a point, little change there. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Yes, they're in Washington today. Once again, your hosts, Joe Matthew and Kaylee Lyons. Great seeing you guys, by the way.
It was great to see you too, Charlie. We love being up in New York with you and everyone else on the team. We appreciate it. Charlie, obviously in New York, watching Wall Street. We're in Washington, watching Washington. But we have our eyes on events elsewhere as well as we consider not just domestic politics, but geopolitics too, and ongoing hot conflicts around the world, including that, of course, between Russia and Ukraine. A second round of direct talks between Russia and Ukraine was held in Turkey today, yielding, perhaps not surprisingly, no agreement on any sort of ceasefire, though there will be another exchange of prisoners. But Ukraine came to those talks having just conducted a pretty bold aerial attack inside Russia, far inside Russia. We're talking hundreds and hundreds of miles from the front lines, thanks to, according to President Vladimir Zelensky, a more than year-and-a-half-long effort to get drones inside Russian territory, deep inside, so much so that they were within striking distance of some of the most powerful components of Russia's aerial fleet, those that have been used to conduct these missile and other strikes on Ukrainian targets, including civilian targets, though there is some dispute, Joe, as to the number of aircraft that were ultimately actually hit by this drone strike. It's still incredible to see and read about.
Well, yeah, you can't deny the video we're looking at here for our listeners on Bloomberg Radio. It's a shot from a drone showing these massive Russian bombers burning while they're still on the ground, having been attacked by these suicide drones. Really remarkable stuff, then. These spies, to your point, they worked for months. Kaylee, Ukrainian spies got these quadcopter drones into Russian territory. There were more than 100 of them, and I guess they were obscured by these wooden containers that opened by remote control, allowing these things to fly into the military bases. And it's worth noting, Ukraine did target military bases, not civilians, as Russia continues to do.
Yeah, which is a contrast that Zelensky is trying to note in this, is that they are trying to take out Russia's military capacity that's being used against Ukraine, obviously, but in kind of a different way, in that it is being used really with non-military targets in Ukraine and taking the lives of untold amounts of civilians.
What's being compared to or being referred to as Russia's Pearl Harbor. We saw comments in the tip sheets this morning as well, comparing it to Israel's walkie-talkie attack against Hezbollah in Lebanon. Kelly Grieco specializes in this type of thing. We wanted to have her frame it for us, the senior fellow with the Reimagining U.S. Grand Strategy program at the Stimson Center. Kelly, it's great to have you back with us here on Bloomberg TV and radio. How would you describe this breakthrough by Ukraine?
Well, first, thank you for having me. And I would say, this attack clearly was timed for these negotiations in Istanbul. But I would say what's interesting about the attack to me is that it goes back to the very roots of air power in one way, and that there's always been an emphasis on attacking air bases, that aircraft are often the most vulnerable when they're on the ground. But it's a 21st century version of this by using these very cheap, inexpensive quadcopters that are carrying explosives to cause an enormous amount of damage.
Well, when we consider that enormous amount of damage, Kelly, knowing Russia says it's more like 10 aircraft that were affected, Ukraine said the number was roughly 40, do we have a sense of what this actually does to Russia's capacity to conduct the strikes at the pace we've been seeing in Ukraine?
Yes, so I don't feel like we really have very good numbers right now in open source because we want to see these things verified. But what I would say is that this doesn't necessarily going to restrict, I think in a very significant way, Russia's ability to conduct strikes on Ukraine. In fact, many of these aircraft, I suspect, were probably further back and are not being used in these kinds of operations, though they might be rotated forward at times to bases closer to Ukraine. But what is significant about it is that these are dual capable aircraft, meaning that they're also part of Russia's nuclear triad. Because they can carry nuclear weapons as well. And so Russia is going to have to think carefully about to what degree it wants to place these assets at risk, including on the ground and retaliatory attacks from the Ukrainians, because it places at risk part of their nuclear triad. And that starts to get very serious for the Russians.
Well, you wonder what's next here, Kelly, with regard to a Russian retaliation against Ukraine. Surely this won't be in isolation, but also whatever Ukraine might have left up its sleeve. If Ukrainian spies smuggled 100 drones into Russia for this event, what else could they have?
Yes, I mean, that's a great question. It's interesting. This attack doesn't come out of nowhere in the sense that, people have talked about these kinds of attacks before, particularly about someone conducting something like this against the United States at air bases at home. But the Ukrainians are the first to do it. And they showed a level, I think, of sophistication and ability to operate inside Russia to be able to pull something like this off. They were even bragging on Twitter that one of the warehouses they used was near an FSB outpost in a town that they were right next to it. So it's quite interesting. And I think you're right. The Russians have to ask themselves what could be next. I'm asking myself, quite honestly, what's next in terms of the Russian response, because I think we're going to see a significant escalation on the part of the Russians.
Well, what would that escalation look like, Kelly? I mean, is there serious questions as to whether or not Russia would choose to use part of its nuclear arsenal? How can they escalate short of that, given everything they're already doing?
Yeah, so I think it's important to remember that back in November, Putin changed Russia's nuclear doctrine to clarify that it would consider it an attack on Russia that was a threat to its nuclear arsenal, whether a nuclear weapon was used against its nuclear arsenal or if it was a conventional weapon used that threatened its nuclear arsenal or its sovereignty. It would reserve the right to respond with a nuclear weapon. Now, I don't think Russia's going to use a nuclear asset in response to this, but I can't totally rule it out. I think it's worth saying, and that gives me pause that I'm even having to say that. I think they're going to look though for something that is very visible, and I think signaling not just to the Ukrainians, but I think at this point they're going to want to signal to the United States and even China, that its nuclear arsenal is not vulnerable, that it's able to still operate effectively. So not probably a cyber attack. It could be using a new kind of missile in Ukraine, but I think I wouldn't rule out even a possibility of some kind of action, perhaps in space. There's been stories about a new satellite, Cosmos, that is suspiciously operating near some U.S. satellites and concerns they might conduct an anti-satellite test in space. I could potentially see something like that happening as a response.
Kelly Grieco, you're an expert in asymmetric warfare. How does this change the United States approach to weapons systems after what we just saw?
Well, how it should change it and how it will are probably two different things, unfortunately.
Okay.
I think it's clear that, we have a preference for high-end systems that are expensive, that have a lot of capability. We see that with, the acquisition now of the F-47, this new fighter aircraft, or the B-21, things like that. But what Ukraine is, I think, trying to show us is that something that is lower cost is not necessarily ineffective. In fact, it can have disproportionate effects. And so what I think is concerning is that we keep seeing all these messages from Ukraine warning us that these lower cost, creative ways of using capabilities can be quite effective, but we're not as much investing in that area in our own defense budget to try to actually maximize our advantage.
All right, Kelly, it's great to have you as always. We appreciate your insight and expertise. Kelly Grieco, Senior Fellow with the Reimagining U.S. Grand Strategy Program at the Stimson Center. We appreciate it. Here with us on Balance of Power. And we have to focus on another subject coming up as well. That would be trade. As President Trump on Friday, of course, announced the escalation of steel tariffs from 25% to 50%, but also after having accused China of violating the trade pact that was struck in Geneva, China is now saying back at you, United States of America.
It just speaks to the kind of weekend we had. That we haven't mentioned tariffs yet. That's how we ended last week with this announcement outside of Pittsburgh from President Trump. 25 goes to 50. An interesting conversation ahead. We're going to spend time with the finance minister of Ontario, Canada. They've got their own version of this, and that is a big deal for the Canadian economy.
Indeed. So stick with us for that conversation. We'll be right back here on Balance of Power, live from Washington, D.C. on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are churning on trade risks. The latest twists in President Trump's tariff agenda have fueled market angst following mutual accusations between Washington and Beijing of breaching a trade deal. Also, American factory activity has contracted. Here's where we stand. S&P 500 index down now, little change, perhaps the key takeaway, but down 1 point at 5910. We've got the Dow down 186, a drop there of 0.4%. The NASDAQ Composite Index up 58 now. That is a gain of 0.3%. The 10-year at 4.46% with the 2-year 3.94%. Spot gold up $84 the ounce, higher now by 2.6%. West Texas Intermediate crude oil up 3.4%, 62.84 a barrel, and Bitcoin now down 0.7%, 104,270 on Bitcoin. Right now, we have got shares of the Walt Disney Company trading lower by 0.6%. Disney is firing hundreds of people in its film and TV areas as the industry woes drag on. Again, Disney shares trading lower by 0.6%. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie, great to see you. Live from New York, Charlie Pellet here on the fastest show in politics. Thank you for joining us on Balance of Power, the early edition on Bloomberg TV and radio, with headlines crossing the terminal as the press secretary speaks to reporters at the White House with regard to a potential meeting between President Trump and President Xi. This week, it does seem this will happen. Caroline Leavitt, the secretary, saying that the meeting will likely take place this week. And Kaylee, this comes after Scott Bessent was asked about it on Sunday morning television, saying he expects it to happen. We're just not hearing that from Beijing.
Yeah, mostly this is coming from the White House. Not the first time we've seen messaging from the U.S. and China when it comes to progress on trade. But of course, it does come as both sides accuse each other of having violated the agreement that was struck in Geneva to ratchet tensions down. Seems tensions might be ratcheting back up again, as President Trump obviously is still pursuing tariffs in certain areas, including, of course, a doubling of the tariff on steel and aluminum that he announced on Friday while at a U.S. steel facility in West Mifflin, Pennsylvania. Let's listen.
We are going to be imposing a 25% increase. We're going to bring it from 25% to 50%, the tariffs on steel into the United States of America, which will even further secure the steel industry in the United States. Nobody's going to get around that.
But let's talk about the economic impact that could ultimately have, and turn to Michael McKee, Bloomberg International Economics and Policy correspondent, here with us on Balance of Power. Mike, when we consider for an American manufacturer dealing with these components and potentially with higher input costs, what is the difference between a 25% tariff they were already dealing with and it doubling to 50%?
Well, it's sort of like, what's the difference between being electrocuted or run over by a car? Either way, the companies are going to be in big trouble. And the only people who will benefit are perhaps the people at the U.S. steel companies who can raise prices, and it will probably be help them strengthen their business somewhat. But the problem with these sorts of things is that the downstream industries that use the products that are being protected end up having job losses and losing money. I was just out in the Permian Basin in Texas and talking to a number of oil industry executives who are bemoaning the cost of oil, but also saying that they're not drilling now because the steel tariffs have raised the cost of the pipe that they absolutely have to do that so much that they're losing money.
Wow, fascinating. Real world example, Mike. It's great to have you with us. We did get some data today. The manufacturing activity is measured in the ISM, contracting for a third month, but look at the import measure dropping to the lowest in 16 years. It's finally creeping into the hard data?
Well, it's finally creeping into the hard data now. Statistically, you have to take a step back and note that we had a lot of pull forward imports in January, February, March. So by the time you get to May, just statistically, you're going to drop off a lot. We saw that in the trade figures that we got last week. But it is a sign that companies have basically stopped buying stuff overseas right now, which we've been hearing from the folks at the Port of Los Angeles and the Port of Long Beach, et cetera. And that was the open question is whether that picked up a little bit when the president backed off of his China threats. Does not appear to have. The chaos seems to be just keeping people sidelined no matter what. And it does suggest we will start to see some empty shelves, and then we'll start to see prices go up as well.
Yeah, wow. Mike, it's great to have you back. Michael McKee, Bloomberg International Economics and Policy Correspondent, live from New York, as we add the voice of the Finance Minister of Ontario. We're going to really get to the fallout here from this tariff program with somebody who knows about this intimately. Peter, Bethan Foley is with us again, live from World Headquarters in New York. Minister, it's great to have you here on Bloomberg TV and radio. We appreciate your time here, knowing that President Trump had threatened a 50% tariff on steel at one point and backed off that threat back in March, which then caused Ontario to pull back from a threat to potentially cut off electricity from a couple of northern states. What will be Ontario's answer now?
Well, thanks for having me on, Joe. It's great to be here in New York. Look, zero tariffs or no tariffs is the objective of Canada in negotiations with the U.S. Of course, we do produce a lot of steel in Ontario for the U.S. market. You just heard that's a big input cost, not just in the energy sector, but the defense sector, the auto sector. We also produce a lot of nickel that goes into those same areas. Obviously, right across the country, aluminum, potash, uranium, you name it. So our goal, working with the United States, is to get those tariffs down to zero. And when we work together, it's a win-win, and we can boost our economies. I think sometimes the targets are maybe China and some other places, not your best friend and ally, Canada.
Well, and clearly Canada is working with the U.S. to try to ratchet these down. In the interim, though, Minister, what economic impact are you expecting for Ontario, given you just pointed out your steel production? And we know the vast majority of the steel that is exported is heading toward the United States.
Well, there's no question, Kaylee, it'll have an economic impact. I just tabled a budget a couple of weeks ago that showed a slowdown in the economy, somewhat driven by tariffs and the global economy. It's affecting many economies around the world. At that same budget, I tabled $30 billion of supports. We're going to support those businesses and those workers affected by any sort of tariffs on steel, aluminum, or on our auto sector, hand in hand with the federal government in Ottawa, who's working closely with us to not only negotiate the tariffs, to get them back down to zero or as close to zero as possible, but also to provide the supports in the interim as we negotiate these deals.
Well, of course, the door swings both ways, Minister, and pretty remarkable to read that custom import duties in Canada rose 39% in the last quarter due to proceeds from retaliatory tariffs that are now rolling in to your coffers. So is this tariff thing actually working out pretty well?
No, it's a lose-lose. Look, we don't want to do retaliatory tariffs. No one wins, as you heard previously and others say. Costs go up, prices go up. It's not good for workers in the U.S. It's not good for workers in Canada. So the best deal is where we work together to land not only lower tariffs so we can trade. We have a great relationship with the U.S. We love Americans. But we win when we're stronger together. And that's not just in the areas I mentioned, but in areas like energy or right across the country. It could be in areas of manufacturing. It could be areas of critical minerals, of which we have a lot that come out otherwise from China and other places in the world. So these are the types of things we want to work on with our United States friends and have deals that are long-term.
Minister, you mentioned a minute ago the budget that you put out. When we consider your budget deficit, which I believe is the largest in more than a decade, how much wiggle room does that give you to provide financial assistance to the steel industry or any other segment of the Ontario economy that is negatively affected by these tariffs? How much runway ability do you have to do that sustainably?
We have a lot of runway. We just got upgraded by Standard & Poor's. We got upgraded by DBRS. We're on stable with Moody's. So we're doing okay on the fiscal side. I mean, a $10 billion increase in our deficit against a $1.2 trillion economy, we can absorb that quite handily. We have a path to balance, so we're one of the few jurisdictions that are balancing their books within 2 years. So I think we've got the fiscal firepower, but at the end of the day, we don't want these tariffs. We want to have a win-win. with the United States, and where workers win on both sides of the border, and that we continue to have the great relationship that we historically have had with the United States.
Minister Bethlen Foley, our viewers and listeners should know that you were a businessman and, in fact, know a lot about the markets. As a chief investment officer for CST Consultants, you spent time at Manulife Financial and at TD Securities. And I'm wondering what your view of the market reaction to all of this is at the moment. We've clawed our way back to essentially where we were before the so-called Liberation Day. Is the market whistling past the graveyard? How do you see it?
Well, first off, you're right. I worked here in New York for 15 years and spent a lot of time in the U.S. My wife is American, so I know a few things about the United States. Look, I think that we're not whistling Dixie. This is serious stuff, but we have a lot more strengths together than we do apart. One of the things that we're doing in Canada, I should point out, is we have free trade agreements with the G7, just every country in the G7, but we don't have complete free trade in Canada. So we're working on, this is giving us an opportunity to kind of, a little bit of a wake-up call to say, hey, we got to have free trade in Canada. That could unleash up to $200 billion of economic strength in the GDP. So we think that we have a lot of opportunities. The capital markets are very strong for Canada, for our province, for our bonds and so forth. So we're in a good position, but we're very much looking not just the short term, Joe, but also the long term, because I like to think about the long term and what we can do better together.
Well, as you discuss the long term and the other trade agreements that you have with partners, say, in the G7 or elsewhere, is it time for Ontario, for Canada, to look at other trading relationships and maybe orient themselves more toward that, diversifying away from the U.S. and reliance on this market in particular?
Well, we're doing that, Kaylee, for sure, but that's just prudent business. You always diversify your relationships and your customers, but by force of nature and geography, we are going to be very close allies and economic partners with the United States. I think renegotiating the trade agreement longer term, which is coming up next year, is going to be critically important. And again, we have all the critical minerals that the U.S. needs for their auto sector, the defense sector, for the energy sector, and we are a reliable partner in Ontario and in Canada. So we want to work together, strike long-term deals that are in the interests of both countries. I know that we've done it before and we'll do it again. And I think that's everybody wants the economic strength of both countries because around the world in this sea of instability, Canada and the U.S. are a sea of stability.
Mm-hmm. We hear a lot on this program from a lot of Republican strategists and analysts. Pay no attention. This is a negotiating tactic. The president doesn't actually want to have tariffs. And months down the road, Minister, we won't have any. From your perch on the other side of the border here, from Ontario, does that ring true? Or are you proving that wrong?
No, I think that, Trump is a business person, pragmatist. So we're pragmatists, and we want what's best for the interests of each of our countries, our workers. This environment of uncertainty is not good for either side of the border. Business and capital is looking for certainty. They're looking for places to invest, and I can think of no better place to invest, frankly, in the world than right here in North America, in Canada and U.S. And we've had a track record of being some of the best economic engines around the world right here. So I see the glass as half full, and we're business people and pragmatists, as you mentioned before, and I think we really do have an opportunity to work out deals that are going to be a win-win for both sides.
Minister, we just have a minute left, but with pragmatism in mind, is there anything you would take off the table in terms of ways in which Ontario would be willing to retaliate against any further escalation from the United States?
Well, no, first of all, I'm not at the front and center. That's the federal government in Ottawa that is responsible for that. Now, we're in constant contact with them, but I will say this. You now have, both provincially and federally, two governments. We were re-elected with a majority in February. The Federal Liberals Party was elected just recently in April, and on a pro-economic agenda, a pro-growth, to build the big projects, the Ring of Fire in Northern Ontario, pipelines, more pipelines, east, west, north, and south. We want to move our conventional and our non-conventional forms of energy. We want to get those critical minerals out of the ground. We want to build infrastructure and transportation. So when you have a federal government and a provincial government rowing in the same direction, you have a better shot of hitting that target.
All right, Minister, great to have you here on Balance of Power. Peter Bethlenfalvy, Finance Minister of Ontario, Canada, here with us on the earlier edition. We'll see you again at 5 p.m. Eastern right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a good afternoon, everyone. Happy Monday, live on Bloomberg TV, Radio, YouTube, and Bloomberg Originals. We are across all platforms. It is Bloomberg Business Week Daily. Carol Masser is off today. I'm Tim Stenivek, along with Bloomberg News cross-asset reporter Emily Graffeo. And Emily, stocks kind of wavering. Is everyone just waiting for what happens on Friday with payrolls?
Or everyone's paying attention to the bond market right now. Yields a lot higher, Tim. And on the 30-year bond, we're almost at 5% right now.
Yeah, well, it's going to be the top of our show. We got a great roundtable coming up in just a minute, not just on the bond market, but also the economic data that these big investment firms are looking to that's keeping them away from the bond market. Also, on geopolitics, Russia and Ukraine are talking, but aren't any closer to ending the war. Angela Stent is going to join us in just a few minutes.
And on media, we're joined by the president and CEO of Stars.
All right, we got a great program coming up over the next hour right here on Bloomberg Business Week Daily. Charlie Pellet is getting us started with the Business Flash. Hey there, Charlie.
Thank you very much indeed. First trading day of the new month of June. What a May it was, by the way. The Dow, the S&P, they're both lower right now. Little change, perhaps the key takeaway on the S&P 500 index, down 1 point now. NASDAQ higher by 54, gain there of 0.3%. The Dow down 167, a drop there of 0.4%. 10-year at 4.46%. The 2-year is currently yielding 3.94%. Gold is surging, $84 the ounce, up 2.5%. Spot gold, $33.73. And West Texas Intermediate crude up 3.5%, $62.95 a barrel. The Walt Disney Company is laying off several hundred employees across its film and TV businesses. Cuts that underscore the tough times in Hollywood are far from over. Walt Disney shares, they're down now by 0.7%. Tesla's new vehicle registrations fell further in France, undercutting CEO Elon Musk's assertion last month that the car maker has recovered from its early year sales slump. Tesla down now by 2.2%. Again, recapping, S&P 500 index, little change right now, down by 1 point. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. As Emily said, I'll focus on the bond market today, and that's exactly where we are starting. Yields higher across the curve. The yield on the 30-year inching ever closer to that 5%. Our Markets Live blog notes it's a rate that has usually brought in the dip buyers. That said, the most read story on the Bloomberg terminal today has to do with a buyer's strike and how it's rocking U.S. long bonds. We're talking about a wave of investment firms that are steering away from the longest dated U.S. government bonds in favor of shorter maturities that carry less interest rate risk but still offer a decent yield. Their concern? America's swelling federal budget gap and growing debt burden. For more on the economy and the way bond investors are changing their behavior, we bring in Michael McKee, international economics and policy correspondent for Bloomberg TV and Radio. Liz Kaplan-McCormick, Bloomberg News chief correspondent for global macro markets, also here in the Bloomberg Business Week studio. Liz, I want to start with you and just give us an update on exactly what's happening at the long end, who's avoiding it, and why they're avoiding it.
Yeah, so Mike McKenzie, my colleague, who sits right next to me, and Yi-Shi did that great story today. And just, you know, we've been talking about this for a while, but they're highlighting folks like DoubleLine and PIMCO who are saying, why should we buy the 30-year? We don't want it, right? So, you know, they nicely worded it like a buyer's strike. Everyone's not like selling a ton, but they're saying, why should I buy that? Because if I want treasuries, I can get a fairly good yield. Just go to, say, a 5-year maturity or a 7-year maturity. So, you know, the fiscal risk, which I was saying to someone earlier, like we've had a deficit in debt for a while. You and I have probably talked about it, but why do we care now? Well, because it's just increasingly got worse. We have this bill going through Congress that if all these different scorings, if you look at it, you're adding several trillions to the deficit, to the debt pile over the next 10 years. It doesn't seem like anything's going to change that trajectory. Meanwhile, over here, we have inflation that's coming down from the worst, but the Fed's like still in wait and see because we don't know what tariffs do. So the Fed's not cutting again for a while, they seem to be saying. So that is just a recipe for there's not a lot of reasons for long-term rates to start coming down. So, and even at the least, like there's people like Ira Jersey saying, hey, we could even have the curve steepen, which means short rates are lower than long, more so. Even if rates come down, right? Because people, again, stay away from the long end. So I just think there's just so many reasons that you say, you know, why do I want to go ultra long, 30 years in the U.S., longer term debt, even in Japan, right?
Let's bring in Mike here. What are the economic implications of this buyer's strike, of investors avoiding buying up those longer dated bonds? How does the U.S. Treasury react to something like this?
Well, they're not going to be happy about it because obviously it's going to raise the cost of selling debt, and they've got to sell a lot of debt. So it will have implications for them in terms of what maturities they're going to sell. They've wanted to go back towards the shorter end, and this may push them in that direction, but then what price are people going to have to pay for that? And then you go beyond just the debt implications of it and to the implications for the economy. Obviously, interest rates go up. We've got mortgage rates over 7% again now. So you're looking at real weight on some of the important areas of the economy. It's all just of a piece with everything that is going on these days economically, all the threats out of Washington of one sort or another.
It also brings up the issue, Mike, about how the Fed looks at this part of the market. You know, they've got this dual mandate, stable prices, maximum employment, a meeting coming up just in a couple of weeks here. How do they watch what happens in the bond market?
They use their Bloombergs.
It's a good answer.
Shameless plug there, right? Well, I mean, they do, actually. But no, I mean, they're looking at what's going on, and basically, you talk to any of them, they say, what we're concerned about is that you can trade, not what you trade for, not what the prices are. So they're not particularly worried about that in terms of what their mandate is and what they're going to do, unless something freezes up in the market again, as we've seen a couple times in recent decades. But they're basically kind of off the grid at the moment. There isn't much for them to do. They're going to be sitting watching they're not even really watching the data at this point so much as putting their emphasis on talking to CEOs around their districts because nobody knows what's going on. And so they're trying to pick up some sort of hint to what the companies are going to start doing and when they're going to start doing it. And so far, they haven't found one.
Liz, I'm wondering what the implications for portfolios are, because you had written, I guess it was last week at this point, about 60-40 under pressure. And we're talking today with the 30-year almost we're like 1 basis point, even less than that, away from 5%. Are bonds not a safe haven asset anymore? How much has this recent talk of, you know, the deficit really impacted how people think about bonds in a portfolio?
Yeah, I'm smiling because that story started with, we were like, yeah, 64 is working pretty good. And then by the end of the period, long bond yields going up so much, it kind of like, not so much. And I think, you know, that I want to say you start having a flashback to 2022. Remember when people, like my brother would call me, like, what happened? Stocks went down and my bond portfolio went down.
Yeah, people who don't typically pay attention to this stuff except when they open their investment accounts and they're like, wait a second, this isn't acting the way it's supposed to act.
Exactly. So, you know, all joking aside, the 60-40 didn't do that well. You know, obviously stocks are having a little bit hard time, but all this concern that, you know, is finally filtering through to just kind of a persistent rise in yields is making those returns not good and losses. And, you know, bond portfolio managers, and I'm not being snarky at them, will say, hey, we have a good coupon, meaning the interest rates are higher, so we're getting interest, we should do okay. They'll probably do okay, but okay is not that great for 60-40, right?
Yeah, but I mean, look, on just the bond side of this, Liz, you know, I think there are those out there who would say, wait a second, 5%, somewhat pretty much risk-free, with a 30-year promise of that annually, that doesn't sound bad right now. It's to the point of the Markets Live blog where they're saying, usually when we see rates go here, we could see dip buyers come in. So yes, there are the big investment firms that aren't necessarily biting at this point. And in fact, as the story points out, sometimes they're shorting in certain scenarios. But then you have another group of investors that could come in and say, wait a second, this looks pretty good for me.
Well, and that has historically happened, right? Not that we haven't in the lifetime of bonds seen rates much, much higher than this, but in this last couple of years, we have tended to see, remember for a while we were talking about, people were saying 10-year could go to 6%. This was 2023, rates were breaking higher, and then some changes happened and they came down. So there is demand. I always remind people, though, that kind of risk, kind of free, Tim, you're saying on the 30-year, not bad, but remember, that's if you buy a 30-year bond itself and hold it to maturity. In a bond fund, they're buying mixes of funds, prices go up and down, so that isn't like a guarantee unless you outright buy a bond and hold it for the whole time, which you and I probably aren't going to do for a 30-year bond. So that's why there's more risk in a bond fund, because they're having to roll over, people taking redemptions at different times, so you might see the price of your fund come down. But yeah, there's there's always people saying, hey, this is a great opportunity. Right now, we're just hovering around a little bit below 5, right?
Mike, essentially the message that they're sending is there's a swelling federal budget gap, growing debt burden. We've got a bill making its way through the Senate right now. No one knows what's going to be taken out of this bill or if it is indeed going to become law. The president calls it the big, beautiful tax bill. What are your sources telling you about what the implications that it could have on the economy? The president says, hey, this is something that could actually stimulate the economy. He says it will stimulate the economy. But there are some questions about that, and we're seeing that happen in the bond market.
Yeah, there are a couple different angles to this. The child care tax credit, the child credit, and the no tax on tips and the no tax on overtime would be stimulative to a certain extent. Now, the people who are getting that extra money, not the child care, but the other two tax breaks, they don't make a lot, so they're not, the extra that they will have to spend isn't going to be huge. The child care tax credit will help. These would kick in 2026, and so you get a bit of a tailwind there. But then all the budget cuts will take away from stimulus. Government spending will go down. You'll have people who are having to spend more because they fall off of the Medicaid rolls, that sort of thing. And then the real issue for everybody is what happens with taxes overall and the budget deficit overall. The fact that the deficit goes up significantly, and the White House isn't fooling anybody in the bond market about this. That could only contribute probably to higher rates. How much, we don't know, but it's not something that people are going to be enthusiastic about. So then you end up with two countervailing forces, a little bit of stimulus and what maybe a little bit or more of counterweight to that.
Gonna have to leave it there, guys. Thank you so much for joining us. Michael McKee, International Economics and Policy Correspondent. Also, Liz Cabell-McCormick, Bloomberg News Chief Correspondent for Global Macro Markets. Mike, you're actually not getting out of here when I say you are. We're going to keep you for one more question while we get Alex settled in here.
Okay.
Payrolls on Friday. I promised we'd talk about this. This is kind of the thing that everybody's waiting for right now. It's actually looking like it could be a pretty strong report.
It's going to be kind of looked at in terms of compared to what. 130,000 would be a strong enough report for the Fed in normal times because it's more than the replacement level that you need each month. And the fact that economists are predicting no change in unemployment at 4.2% is good news. It shows that the labor market remains healthy. But compared to where we had been on job creation, it's going to look a lot lower. And then the other issue that you have is this sort of the end of the good news? Is this the last good news we're going to have? You look at the ISM numbers that came in today, and they flipped over all bad, throughout the entire report. And that's what people are waiting for is when does the bad news from all this chaos hit?
All right, well, you'll be watching all the bad news and the good news and all the news and bringing it to us.
If I find any good news, I'll bring it right to you.
Please bring it to us. Michael McKee, International Economics and Policy Correspondent here at Bloomberg TV and Radio. Well, we're talking the bond market, but also we're talking oil because it's actually rallying today. WTI higher by as much as 5% earlier in the session. This after OPEC Plus increased production less than some had feared and geopolitical concerns flared in Ukraine and Iran. I want to bring in Alex Steele. She's the host of Bloomberg Intelligence on Bloomberg Radio and also of The Close on Bloomberg TV. She joins us here in the Bloomberg Business Week studio. The OPEC Plus news, I guess it could have been worse?
Yeah, kind of. But honestly, it's going to be a lot of short covering now. So you're going to short oil into the OPEC Plus meeting, and then after you're going to have a rally. Plus you have the wildfires in Canada, and Canada's the 4th largest producer. But we kind of knew that on Friday, and oil didn't really react. So you have to think it's just a positioning situation at this point. But honestly, the oil market is messy.
Okay,
right
that's
confusing
why
and messy.
The OPEC Plus news was an excuse to get you in here. We wanted you to come in here for like the last couple of months. Up to now, oil, whether you're talking about Brent or WTI, is down about more than 10% year to date. It's been a mess. There are concerns that it's getting to a price where it's not even worthwhile for some drillers to actually extract the oil. What's going on?
Oh, such a loaded question. So one, of course, is the demand concerns, where you have tariff issues and any demand concerns. That's number one, right? Number two, clearly President Trump wants lower oil prices, and the Saudis have been more than happy to somehow also continue to pump oil. I don't know if there's a relationship there, but I'm just saying. The third one is kind of, if you look at the curve, so if you look at CCRV, which is the function on the terminal, right? So you see higher prices today versus higher prices in a year from now, okay? That's usually a signal to producers like, let's go. Like, there is tight supply. We need to pump more. There's a lot of demand. But it drops off real fast. And then it gets more confusing. And so oil producers kind of just don't know what the price is going to be like in, say, 2 to 3 years. And that's where it gets really confusing. Pump more now, but then wait a second. Oil prices in 3 years don't look so great. So what am I supposed to do with that? And it's becoming extraordinarily confusing, particularly if you're in the Permian, which is shorter cycle. So offshore stuff, it takes like decades to get going. Onshore in the US, it takes like 12 to 18 months, depending on where you are. So that's where you're going to see the pain first. And then you won't see any kind of pain reflected in investment decisions until like 3 years from now, kind of thing.
So how are we supposed to be kind of judging the effectiveness of the drill, baby, drill, I guess, proposal?
Oh, it's not happening, like full stop. I mean, you look at CapEx is down for all the oil producers, but production is barely flat. Like, it's down a touch because there's so many technological advancements, and these guys are just really good at getting oil out of the ground, like straight up. So even though they're lowering CapEx, their production's the same. Like, most companies don't operate like that. But you cannot incentivize oil producers to drill. To incentivize new production, you need like in the 70s. We're not even close to that.
I was going to say, you can incentivize them with higher prices.
That's literally the only way.
What's the magic number, 70s?
From what we hear, so in the 70s, 75, I think 80 would be a happy moment for them also. 60s, it gets a little bit, I don't really want to drill more, but I'm not going to shut in. 50s are like, I don't know. And then 40s is like, all right, let's go. Let's shut in rigs. Let's shut stuff down. Let's rethink contracts.
Does the U.S. produce at current levels enough to satisfy demand for all Americans?
Oh, that's a great question. I don't actually know the information
because
right off the top of my head.
We still have to bring in oil because the type of oil that we produce isn't necessarily what we...
Exactly. Yeah. Number one. Number two, we produce like 13 million barrels of oil a day. I have no idea how much we actually consume. But to your point, refiners in the U.S., few and far between. We have 10 closures over the last 10 years.
That's the issue.
A lot of them are complex. Some are simple, and they can process the light crude that we have here in the U.S. A lot of them are complex, which means they take heavy, nasty, dirty fuel, and they turn it into a ton of things. Jet fuel, propane, gasoline, diesel, like you name it, they produce it. It's really hard. It's really complex. It's very expensive. And they need crude from different areas. They can't just do U.S. crude.
Just very quickly, you mentioned that number 70. Do we have to see the price of oil sustain that level for a period of time to incentivize the producers?
I think it depends on the curve. So it depends who you're talking about too. So for the shale drillers, like 70 feels pretty good. It's not going to drop $30 in 2 seconds, so they're going to feel better. But for the offshore and longer term projects, you need the curve to stay steady in a better range than that. Yeah, that makes sense. Did you get what you wanted, Tim? Did you need more? He needs more. We need more time.
I was going to say we wanted like 5 or 10 more minutes with you, but you can always come back. So.
Oh my God, 15 minutes of oil talk? Dude, if you're up for it, I'm here.
That is how we would roll with Alex Steele. Alex Steele at Bloomberg TV and Radio. She has got to run to the close. Coming up next, a deep dive on media. And yeah, we got another member of the close joining us in just a few minutes as well. That's next on Bloomberg Business Week Daily.
2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index now trading at the best level of the day. 10-point gain right there, up by about 0.2%. Dow Industrials, though, remaining in the red. Dow lower by 68, drop now of 0.2%. NASDAQ Composite Index up 96. That is a gain of 0.5%. Our Mag 7 Index, the Bloomberg Mag 7 Index, up 0.4%, with a 10-year currently yielding 4.46%. The 2-year 3.94. Spot gold up $83 the ounce, up 2.5%, $33.72 right now on spot gold. West Texas Intermediate crude up 2.7%, WTI 62.42 a barrel. Media news: the Walt Disney Company is laying off several hundred employees across its film and TV businesses. Cuts that underscore the tough times in Hollywood are far from over. Right now, we got Disney down by 0.3%. And Jamie Dimon says his retirement from the top post at J.P. Morgan Chase is, quote, several years away, but the decision is up to the bank's directors. That word coming in an interview with Fox Business. Again, recapping, S&P 500 index up 15. That's a gain of 0.3%. I'm Charlie Pelleton. That is our Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Shares of Stars soared 27% on a Friday. This after the company set it out at 530,000 streaming subscribers in the U.S. during the fiscal fourth quarter. The company is now a standalone entity. It separated from Lionsgate Studios. It began trading independently last month. It's got a market cap now just north of $300 million. Today, it gives back some of those gains from Friday. Shares falling as much as 14%, down 9.4% as we speak. We're joined here in the Bloomberg Business Week studio by Jeffrey Hirsch. He's president and CEO of Stars. Jeffrey, good to see you. Welcome. Investors welcomed the streaming additions in the fourth quarter. You increased total subscribers in the U.S. by close to 2%. You attributed that to the premiere of the fourth season of Raising Kanan. What's in the product pipeline right now, the content pipeline, that will continue with the growth?
Well, thanks for having me. It's good to be here this afternoon. We have a great slate in 25. We're coming off a strike-affected year where we only had 3 big tentpole shows. And so that created a little kind of gaps in our content. And so what you see as we roll into 25 is we've got 5 big shows coming. We have BMF, which premieres this weekend, which is a 50-cent show, one of our biggest shows. So we're excited about that premiere this weekend. We roll that into Outlander prequel called Blood of My Blood, which I think the fans will really like.
This is why Carol's going to be so mad she's not here today. She's like the biggest Outlander fan around. Yeah, that's okay. We'll tell her. We'll tell her.
The prequel's, it's 20 years prior to the first season of Outlander. It's back in Scotland. It's Clan Lauren. It's 2 romance stories. So it's how each of the leads of Outlander's parents met and fell in love. So one of the stories is a Romeo and Juliet story, rival clans, forbidden love. The other is World War I, with a gentleman on the front and a woman reading the letters. And it's a phenomenal tale. There aren't any books. And so the fan base, it's all new to them. And so I think it's going to be a really great show. We come back with a fan favorite from 12 years ago called Spartacus, which is going to be, I was talking to the producer on the way down here. He's like, is it coming back? I'm like, this fall. And so that's going to be, and Stephen DeKnight's doing that. It's going to be as good as, if not better than the original. We come back with Force, which is one of our Power spinoffs, and then back into Kanan. So real strong year of content. We wrap that with, big movies from Lionsgate like Ballerina, and then Universal has a couple movies coming, Oppenheimer. So it's really great portfolio of content coming this year. We're pretty excited.
Talk about your target demographic here, because it's not every single person that wants to watch TV, right?
Yeah, we're really trying to be complementary to all the broad-based streamers. In 2016, when we launched our app, what we saw from the data, and it was the first time we really got data on our subscribers, it was that women was driving our business. And so we leaned in significantly into that. And so our content is really only focused on women and underrepresented audiences, and not only on screen, but in the director's chair, in the writer's room, all the way through the office. 70% of my direct reports are women and 80% of them are women of color. And so it's really a network for buying about women and underrepresented audiences, run by women and underrepresented audiences.
Do you see yourself trying to broaden out the content to bring in more people or make it a bigger tent, or is this the niche you want to focus on? And look, I'm not saying it's a niche, it's a huge target market, but like Emily said, the other streamers want to have everything.
Yeah, look, they want to be all things to everybody, and they're competing with themselves, and we really are focused on, like I said, women and underrepresented audience. We think that TAM in the U.S. is about 80 million households. Okay. We're sitting at 20 million households today, so we think there's a lot of room to go, and if women in as a niche, which are 49.6% of the planet, small, then I'm happy to have everybody else focus everywhere else and let us do what we're doing. So we'll continue to be complementary. We'll continue to really be the destination of R-rated adult scripted content for women, and so we feel good about that.
So you don't have ads right now on the streaming platform. How do you grow revenue then if you don't have ads?
So I think there's really three ways we can grow revenue, and we'll grow revenue 1 to 3% over in the next short-term period. One is subscriber growth. Like I said, we've got a lot of TAM still out there today. You saw that in the first quarter, we grew the base 1.8% in the U.S., and so we think there's a lot of opportunity. And as these broad-based streamers continue to compete, it'll look a lot like the old world where you have stars sold as an add-on or buy this service and get stars included. So we think there's a real opportunity for us to kind of replicate that unique position we had in the traditional world in the new digital world that we are today.
So you're saying look out for bundles?
Look out for bundles.
Do you have any now?
We are the most bundled service in the space today. We have 5 bundles. We are about to launch another one this week. In the first quarter, we had a BET Stars bundle on Amazon. We had an HBO Max Stars bundle on Amazon. We've actually bundled BritBox into the Stars app. It was the first one we bundled into ourselves. So we are set up to bundle with almost everyone.
What's a bundle you're working on?
Can't tell you that today, but you know.
But describe it for us, like in an ideal world. These we went through a few years about a decade ago where the major telecom companies were bundling this stuff. If you subscribe to AT&T or Verizon, you'd get X or Y for free. That was unique in the context of, okay, you're paying for a cell phone plan, you're getting content for free. What world do you want to see?
I think the nice thing about bundles, I think everybody looks at it and says, well, for the consumer, they get a discount and the companies get stickier. What really makes the bundle unique and special for the companies is you're lining up your content slates together. So, for example, last quarter with HBO Max, The White Lotus launched in February. They didn't have a big show launch in March, but we had Raising Kanan launch in March. So when you put those together, you have 2 big premieres working with each other to continue to drive subscriber acquisition. So when we look at the landscape that's out there today, we look at content that's either complementary or folks that are servicing the other side of the household that we're not. And if you can put our service with their service and complete the loop for the household, it's a really compelling bundle for consumers.
Tim mentioned this is you're relatively new as a public company. It's been not even a month, right, from separating from Lionsgate Studios. Talk a little bit more about just how that split is going to help Stars now.
I think the board 3 years ago looked at the combined company and said investors like a simplicity in story, and the fact that you had a studio and a network together wasn't that simple, and it was hard to figure out where to put your investment dollars. I think investors like to invest in content or distribution and not kind of a hybrid. And if they are going to put it in a hybrid, we were such a small cap company at the point you put money into Comcast or NBC Universal as or Disney as a hybrid there. And so rightly so made the decision to split the 2 companies to put value back on each of the companies. I think you've seen that in the stock performance on both Lion and Stars over the last couple weeks. But ultimately allows us to focus on what we do best, which is really put great content on the air, own our own content, and drive our subscriber base to ultimately drive profit and return money. We got a 15% margin today. When we get into a steady state in 26, we'll convert 70% of that to unlevered free cash flow. So profitable business generating a lot of cash for investors, and we think it's a very investable business.
Go ahead, Emily.
I'm curious, when you say own your own content, what does it actually mean in practice? That it's only on your platform and you would never sell it to others? Do you own the production supply chain as well? How does that work?
So today, everything that we have on Stars is exclusive to Stars for a period of time. It's a window that when you license Outlander from Sony, you get an exclusive window where they can't sell it to somebody else domestically against you because we're only US and Canada. But you're licensed, you're renting that content for a period of time. When you have ownership economics, not only can you control costs better because you're actually in there daily making it and controlling the costs, but you create other revenue streams. So for today, if Outlander gets to be sold internationally, that money goes to Sony. If I own the show, I can actually put revenue streams on international sales and second window domestically, where I can net the cost down. So it allows us, as we turn the slate over and get to half the slate in 27 being Stars owned, we can start to drive margin for the business, which ultimately should be multiple expansion.
You're coming to this business, or you're at the helm of this as an independent business at a time when cord cutting is just absolutely rampant right now. I mean, when just a few years ago, this was for you, it was a 100% pay TV supported business. That's what Stars was. Now 70% of the revenue comes from streaming. You're still exposed to cord-cutting headwinds for about 30% of the company. How do you combat that? Like, how do you make up for the cord-cutting revenue that you will inevitably lose with streaming?
So two things. One, I still think there's a lot of opportunity for us on the linear side, because remember, we're not a fully distributed ad-supported network. And so there's still opportunity for us to try to grow the business. And as you see with DirecTV, with skinnier bundles and Charter now leaning back into video, I still think there's an opportunity for us to play in the bundle world on the linear side to drive growth for the business there. 80% of all of our customers, whether they're on digital linear or a la carte or rev share, which means two things. One, we're making money for our partners, but two, people chose Stars because they wanted the content. And so the content has to work. And so at the end of the day, as long as the content continues to outperform and be some of the biggest shows on television, we'll grow the business on both sides.
Emily mentioned that you don't have advertising. There were years when I was covering Netflix when they were saying, we're never going to do advertising. We're never going to do advertising. And look what they're doing now. They're doing advertising. Are you ever going to do advertising?
I don't think we're going to ever do advertising with the Stars content. It's, we don't have a lot of content. We have about 10 originals, so-called 100 hours of content. It's called 600 minutes of advertising. It's very R-rated. It's very adult, so it cuts a lot of the advertisers that won't advertise on our service. But I do think, we built our own app. We have our own data stack that's very scalable, and that gives us the opportunity to actually help other linear networks that are marooned on the linear side that don't have a digital future and actually do some commercial deals where we could actually take the linear feed, turn it into digital, launch it next to the Stars app, and have an advertising supported business next to our subscription business and take some of the economics on behalf of our partners.
So essentially what you're saying is you could have maybe a less expensive consumer version that is ad supported in certain areas.
Correct.
When would that be?
Right now, like we said, we're 3 or 4 weeks. It's about separation right now. We're really focused on making sure we're setting up the business, talking to investors, making sure everybody understands the growth story. And I think eventually the 2.0 will come pretty soon.
Cool.
Do you feel in this environment that you have pricing power? Because this is a space where consumers, there's so many options for what you get for your streaming. I know some people, it's like, I already have Max, I already have Netflix, and I have Hulu. There's just a lot of choice. And a lot of times people judge on price.
Yeah. So, as a complimentary service, we've always wanted to be priced significantly below the broad-based streamers. So, Netflix without ads is $24. I think Hulu's around 18 or 19. We're at 11. So as long as they keep continuing to raise their price, it gives us the ability to raise underneath it, because in the consumer's mind, anything that is, that much, it has that much gap, people see it as a complimentary decision versus a competitive decision. So we always want to be significantly below the broad-based streamer. So I do think we'll have some pricing power. We've done 2 rate increases over the last 2 years. I think that's something we'll take a pause on for a while and get back to just pure subscriber growth for the way to grow. But we reserve the right to do some increases in the future.
Emily raises the question about pricing power when it comes to consumers. What about the pricing power that you have to compete with the huge companies such as Amazon, Netflix, Max, and the likes? When you're out there bidding up content, how do you compete?
So it's interesting. I think we have a specific mission. We really focus on women and underrepresented audiences, and we were just out in a very competitive bid for a book called All Fours, which has really taken America by storm and the 40-something women in America. And when we went out and met with Miranda July, who's the author, because we are so R-rated, we are adult, we allow the author and the writers to go where they naturally, authentically would go versus pulling stuff back. For her, the only destination to really put her book, to bring it to life on TV as authentically as she wanted to be, was Stars. And so we were able to win that competitive bid because of the mission that we have. And I think you see that not only in content, but when we hire folks, people come to Stars because they understand that we have a point of view and we have a mission and they want to be a part of that. And so it's been very helpful having a specific lane and really kind of leaning into that in a way that is very deep and authentic.
Jeffrey Hirsch, thanks for joining us.
Thanks for having me.
Yeah, good to see you.
Good to see everybody.
President and CEO of Stars joining us here in the Bloomberg Business Week studio. Now, I promised we would stick with media because producer and host Byron Allen has hired Moelis to find buyers for 28 local TV stations that his company owns, this in an effort to reduce debt while taking advantage of potential deregulation in the broadcast business. We got Romain Bostic with us. He's co-host of The Close on Bloomberg TV. Coming up in just a few minutes, he joins us here in the Bloomberg Business Week studio. So Allen Media, Romain, has the Weather Channel. They've got digital channels such as Sports TV.
Yeah.
They've also got a lot of debt.
They've got a lot of debt, and this has been an issue for a while. Remember, we're talking about a company that really expanded fast by borrowing. We saw, I think it was sort of at the start of 2024, the value of that debt or the pricing on that debt start to go down. Its main issue that it has out right now is a debt due in 2027. It's trading at about 50 cents on the dollar. It's got another issue it due in 2028 that's trading down around 39 cents on the dollar. So basically distressed debt at this point. And it's dropped pretty fast since, say, late 2024. And that was largely because of reporting by Bloomberg that the company had engaged in talks with Moelis and Kirkland & Ellis about some plans for restructuring. And that was never confirmed with Allen Media Group at the time. However, now the news story today that is out by Bloomberg reporters, also citing people familiar with the situation, that there is indeed a deal with Moelis to help facilitate the sale of some of those stations. Now, it's not clear if it's all 28 stations, but right now that portfolio is about 28 stations, down from about 36 just about a year ago.
Tim mentioned that this is about taking advantage of deregulation or potential deregulation in the broadcast business. Is there really deregulation going on?
This is really complicated. I don't know. Byron Allen's a very colorful figure. We talk about, I mean, he was a comedian. He has kind of the great distinction of being actually the youngest comedian, by the way, to ever appear on The Tonight Show.
Okay.
He's 18 years old.
And he's still performing. He's got a new show coming out soon.
He still performs.
Yeah.
He still performs. But at some point in the late 80s, 1990s, he hit upon this idea that you can kind of create really low-cost content, and you can get the local stations to pick it up for next to nothing, with the caveat that they would air this at like midnight or 2 a.m., and then he would get the ad revenue. He took this idea from his kitchen table. He's told the story plenty of times with his mother effectively acting as his secretary, and built this into $1 billion business. His net worth now, based on Bloomberg estimates, $700 to $800 million. Now, in that process, he started to buy up a lot of local stations. He bought up the Weather Channel. He bought up all of these sort of individual, very niche types of broadcast operations, with this idea that, yes, they were niche, yes, they were small, but you can make money off of that. Now, what we're seeing over the last couple of years, Tim and Emily, is that the ability to make money off of that, at least in terms of being able to service the debt that he took out to buy those things, maybe not quite in sync.
So it raises the question, too, about just what the market looks like in terms of buyers for these local stations. This isn't the 1990s anymore.
No.
Media is diversified, it's stratified. You've got a lot of young people looking at their phones instead of looking at the bigger screen in the home.
Yeah.
And that's an issue when it comes to valuations.
And this gets to the idea of scale as well. Remember, Allen has tried several times to sort of scale up. He made a bid for Paramount. He made a bid for some assets from Sinclair. And then there was a big Tenga deal that he felt that also fell through. And I think that was a big part of this. You know, we've been trying to get Allen on the phone today, and we should point out that we are reaching out to him for comment. He has not responded just yet, but this was a big part of the strategy, was to try to scale up. And I do wonder if the inability to do that may have hurt them. When you look at Sinclair, which is basically one of the biggest owners of local stations in the U.S., they're faring a little bit better. They have their own financial issues, but they tend to be faring a little bit better, and that might just be because of the breadth of what they have.
All right, Romaine Bostic, he's co-host of The Close. Thanks for joining us. Don't miss Romaine and the rest of the team.
Later this afternoon?
You're going to see me. You'll see Emily.
Where's Carol today?
She's out. She'll be back, though. She'll be back. Don't worry. She'll be back tomorrow. 3 o'clock is when you can see Romaine and the crew on The Close. Meantime, we're going to be speaking to Angela Stent in just a minute, but we want to get an update on these markets. Here's Charlie Bell.
All right, I thank you very much, Tim. Here's what's going on. Best level of the day right now on the S&P 500 index, overcoming earlier losses. S&P right now up 13, gain there of 0.2%. First trading day of the brand new month. The Dow does remain lower right now. The Dow Industrials down 53, down 0.1%. NASDAQ Composite up 104. That is a gain of 0.5%. Your 10-year 4.46%. 2-year right now 3.94%. Gold up 2.6%, 33.75 the ounce. West Texas Intermediate crude up 3.2%, 62.71 a barrel. Recapping, S&P up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Our focus shifts now to the latest development when it comes to Russia's invasion of Ukraine. The two countries wrapped up a second round of talks, these happening in Istanbul, but they failed to bring the two sides closer to ending the war. They laid the groundwork for a new exchange of prisoners, however. The Russian delegation handed over peace proposals that include Kyiv surrendering control of territory it still holds in 4 partially occupied regions. This according to a Ukrainian official. We did also hear from the Ukrainian defense minister who said that Kyiv demanded an unconditional truce. For more, we bring in Dr. Angela Stent. She's senior fellow at the Brookings Institution. She's also former national intelligence officer for Russia and Eurasia at the National Intelligence Council. She also served in the Office of Policy and Planning at the U.S. Department of State, and she's author of the book that came out in 2019. It's called Putin's World, Russia Against the West and with the Rest. She joins us from Washington, D.C. Dr. Stent, good to see you. It's been about a month since we last connected. I do want to start with peace negotiations, but before that, kind of get to the context of what happened over the weekend. The drone attacks, so-called Operations Spiderweb. Russia and Ukraine are each saying different things about what exactly happened, the damage, what was destroyed. Zelensky did say that about a third of the strategic cruise missile carriers at airfields were hit. How does this complicate negotiations?
Well, I think you may remember that President Trump told President Zelensky at that unfortunate meeting in the Oval Office that Ukraine, quote unquote, had no cards. I think this was really an amazing operation. It had been planned for 1.5 years, we heard from the President Zelensky, and it shows that Ukraine does have some cards. It was capable of destroying these Russian strategic bombers that were being used to hail bombs on civilian and targets and infrastructure in Ukraine. And these, by the way, are old Soviet-era planes, and they can't be replaced. So it'll take Russia some time to rebuild, to acquire some more of these strategic bombers. It doesn't necessarily change the course of the whole war, but it certainly shows that Ukraine can fight back, that it's very good at this kind of advanced warfare, using the drones in trucks, if you like, the Trojan trucks, as they've been called, and really apparently taking the Russians and everyone else by surprise. But as you said, you know, at today's talks, yes, they agreed to exchange more prisoners, which is very important. But there's been absolutely no more progress made on approaching a ceasefire, any kind of an end to the fighting than there was, you know, when President Trump first took office.
I want to get to that ceasefire, but just briefly, I'm wondering if there's geopolitical implications of this attack beyond just how it affects Russia's war with Ukraine, but how this could potentially affect Russia's relationships with other countries.
Well, it has major implications for warfare in general. Some people are now saying that what Ukraine really did was to help NATO, because it makes it less likely, at least, that in the immediate future, Russia would be able to attack a NATO member. But it has implications even for the United States. I mean, if you can now destroy planes and other military hardware through the use of drones like that, people are going to have to rethink where they position things and how they conduct warfare. So it potentially has major implications really for the way that countries fight wars in the 21st century.
But this was a difficult thing for Ukraine to pull off. I mean, some of the reporting around it indicates that this was over a year in planning processes. They were able to get drones into the country and then have them take off simultaneously to attack different strategic assets of the country. This is not an easy thing to do, Dr. Stent.
No. I mean, it took a lot of meticulous planning. Obviously, the Ukrainians had people inside Russia who helped with this. President Zelensky last night in his address said that some of these people were located very close to a major headquarters for the Russian domestic intelligence services. But it just shows you that this is a war that's partly resembles World War I and trench warfare, but is also a very high-tech 21st century cutting-edge type of warfare, of which we will see more in the future.
So where does this leave us now? Because the two nations spoke today, but it doesn't seem like they're any closer to making progress towards a ceasefire.
No, they are not. I mean, Vladimir Putin is not interested in a ceasefire at the moment. Russia has been taking incrementally more territory in the past few months. It's also sustained very high numbers of casualties as it takes this territory. But he is, I think, determined to continue with this war. Most people believe it's going to go on at least for this year, if not into next year. But the negotiations will continue because Putin has understood that if Russia doesn't take part in in negotiations, then the prospects for improving U.S.-Russian relations, which President Trump had promised him, go down significantly. So I think we'll see. I know they've already said they're going to have another negotiation not in the not too distant future. They may continue to talk about these humanitarian issues. Again, very important issues, the exchange of prisoners, particularly disabled ones. But that doesn't mean that the fighting is going to stop anytime soon.
Dr. Stent, we're getting a question from some folks who are watching or listening right now. Want your view on over 3 years in, on year 4 of this war, when many thought it would last a couple of weeks, what you view as the original cause of this war?
The original cause of this war is that Vladimir Putin has never accepted the collapse of the Soviet Union. He has never accepted that Ukrainians are a separate people, that they should have a separate country. He believes that they should be part of Russia. He wrote that explicitly in a July 2021 5,000-word essay that he penned about Ukraine. So the root cause of the war is that Russia believes, under Putin, believes that it should control Ukraine and that Ukraine shouldn't have any choice in moving westward, in joining Western institutions. So that's the original cause of the war. A lot of the discussion we hear about NATO enlargement causing it, that's not the cause of the war. I mean, the reason that Putin didn't like NATO, didn't want NATO to enlarge is because if Ukraine had been a member of NATO and Russia had attacked Ukraine, then it would have been involved potentially in a large scale, possibly nuclear war with NATO. So NATO is not the root cause of the war. It's Putin's desire and the desire of many people around him to reconquer Ukraine.
Dr. Stent, we started the interview by you saying that this drone strike over the weekend was proof that Ukraine does indeed have the cards. Do they have the cards to force Russia to negotiate in a way that does not include actually giving up part of Ukraine's own territory?
So I would say they do not have those cards. I think what they have the cards is to make Russia understand that it's going to be more difficult as the fight goes on. But I think the only way to get the Russians to negotiate more seriously would be two things. One, there is a fairly robust sanctions bill that 81 senators, bipartisan in the Senate, support, and that Senators Graham and Blumenthal, who were just in Kiev, said that they would possibly pass this week. It hasn't happened yet, we'll see, but those would be very punishing sanctions on Russia, and it would be for the Trump administration to resume supplying Ukraine with the weapons and the financial assistance it needs to continue fighting Russia in such a way that Putin might have to understand that his maximum demands cannot be met and that he would be willing to make some compromises in the demands that the Russians are making.
Just 30 seconds, but what's your current thinking on how the war ends?
Eventually, it will end in a negotiation, and it will be a negotiation clearly where both sides will have to compromise, and both sides will have to move back from their maximum demands. But I think neither side is at the situation yet where they're willing to make those compromises.
Dr. Stent, always appreciate you taking the time and joining us here on a Bloomberg Business Week Daily. Dr. Angela Stent, Senior Fellow at the Brookings Institution, also the author of the 2019 book, Putin's World, Russia Against the West and With the Rest. We're actually seeing a little bit of buying in today's session. Look at that, the S&P 500 up close to 0.3%. The Dow down 0.1%. The NASDAQ Composite right now higher by close to 0.6%. Coming up next on Bloomberg Business Week Daily, we got some details on what's moving in those indexes. Stocks on the move. That's next.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily on this Monday afternoon. Taking a look at the indexes. We did see some buying, or have seen some buying, as we've headed into the afternoon. The S&P 500 up close to 0.3%. The NASDAQ Composite up 0.6%. The Dow is down by 0.1%. I'm Tim Stenovec, along with Emily Griffeo. Let's take a look at some stocks that are on the move today. With us is Bloomberg and managing editor for Bloomberg Markets, Christina Aquino. She joins us in the studio. What's on your radar?
Well, definitely Broadcom, Tim, because we know that that's going to be reporting later this week. And it looks like investors have a pretty optimistic view, right? The stock is currently up more than 3% at the moment. We have some previews from Bloomberg Intelligence analysts saying that the company may post slightly better results in third quarter guidance because of the strength in its AI offering. Key points of focus will be any programs related to its application-specific integrated circuits and, of course, its AI networking capabilities. The warning, though, is that the company may face gross margin pressure if it ramps up its ASIC capabilities, but that could be mitigated by other gains elsewhere. So we'll keep an eye on that later this week.
Yeah, a lot of focus on the AI still, and we're like months in.
We did speak to Jay Goldberg at Seaport last week. He was the only guy, or he's the only person on the street that has a sell rating on NVIDIA. And he said he would rather see money go into Broadcom than NVIDIA. He sees more of an opportunity there.
Yeah, probably because of the value proposition, right? I mean, definitely people have put forward Broadcom as a potentially cheaper alternative on the AI play, but you still are very much front and center of that theme.
I should note he does have a buy rating on Broadcom. Okay, Broadcom, on your radar. What else?
Looking at Moderna as well, Tim. I mean, we did get that FDA approval for its second-gen COVID vaccine. The stock, though, earlier was up more than 3%, but now up less than 0.5% at the moment because there is a lot of kind of caveats related to that, right? The vaccine will be for all adults over 65 and anyone over 12 who has at least one risk factor. Some analysts are divided over this, right? Barclays saying that the one-time approval definitely removes a major overhang to the stock, but then saying that it's only really an incremental victory given the views that are very public of the Health and Human Services Secretary Robert F. Kennedy and, you know, what we know about his views on vaccines. So,
okay, we have another stock. It's in the red. But not by much, right, Christine?
That's right. Yeah, that is Walt Disney, ticker DIS. That's down just 0.2% at the moment. So it's mostly in the news because of this continuation of layoffs, right? So the latest is that they're going to be laying off several hundred employees now in its film and TV businesses. Remember that they did this across their ABC outlet and their entertainment TV networks in March. And so in total, they've eliminated more than 8,000 positions in recent years. I mean, that cost-cutting effort you'd think would be a positive for investors, but I suppose the negative press that comes with it and the potential costs of managing all those people out would be a potential counterweight to all of that.
Yeah, 180,000 employees roughly. So
yeah.
Okay, cool. Thanks for joining us. Christina Aquino, managing editor for Bloomberg Markets live blog. For more conversations like this, listen to our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. You can listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. As I mentioned, seeing a little bit of buying as we get into the last hour of trading. Stock's pretty much at their session highs right now, with the NASDAQ moving higher by 0.6%. The S&P 500 right now higher by 0.3%. The Dow is in the red, just down by about 0.1%. If you are sticking with us on Bloomberg Radio, we've got a great program coming up, Emily. We've got a great group of CEOs joining us. We got Mike Brown, CEO of Travel and Leisure. We're going to talk to him all about the health of the travel industry. After we heard from Delta CEO Ed Bastian, who basically said overnight that we're seeing a little bit of a rebound, kind of counter to what he said in recent months.
Yeah, I mean, it's been tough for these travel CEOs to just contend with, I mean, headlines about inflation, immigration issues, aviation safety. I don't think I'd want to be a travel CEO right now, but I'm looking forward to the conversation.
Yeah, we've also are going to be joined by Bill Phelps, CEO of Dave's Hot Chicken. There's a $1 billion deal that they announced a little earlier today by Rourke Capital. This is a private equity firm that has just a host of big chains, including Subway and others. So what they're going to end up doing with the company, we'll be asking him about that. Also, everybody thinks AI is coming for their job.
Yeah.
Do you share that view?
I do sort of share that view when it comes to potentially like writing and maybe some part of the research. But I'd like to think, you know, this banter that we have, this humans on TV, like, wouldn't it be really awkward if AI did that?
Haven't you seen what some of the, like, Google's new AI video service can do? It looks so real.
Really?
It's
they can
really
emulate news anchors.
Oh, yeah, they've been able to do that for
That's
years
true.
at this
News
point.
anchors are a little stiff, so.
So that's a little concerning. We also had Dario Amodei, the CEO of Anthropic, just in the last week or so come out and say he sees this leading to a huge increase in the unemployment rate, upwards of 20% just in the next couple of years. So we're going to be talking with Rachel Metz all about what she sees in her reporting around this. Also, Lauren Grush is going to be joining us on the president's withdrawal of Jared Isaacman's nomination to lead NASA. All that and more coming up over the next 2 hours right here on Bloomberg Business Week Daily. Once again, stocks up at close to their session highs, 0.3% to the upside for the S&P 500. This is Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The suspect in the attack over the weekend on a group supporting hostages in Gaza is facing federal charges, as Matt Piper reports.
The FBI says the man charged in the attack in Boulder, Colorado that left 8 people injured told police he planned it for a year and would do it again. Mohammed Salman told investigators that he targeted what he described as a Zionist group and that he researched on YouTube how to make Molotov cocktails. The affidavit was released in support of a federal hate crime charge now filed by the Justice Department. CBS News has learned that Salman most recently was driving for Uber.
White House Press Secretary Caroline Leavitt.
We know that this individual, this terrorist, was allowed into this country by the previous administration, was foolishly given a tourism visa, and then was illegally allowed to stay. These individuals are going to be deported, and we're not going to tolerate such violence in our country.
ICE Acting Director Todd Lyons today praised the surge in immigration enforcement in Massachusetts.
Significant amount of the criminal aliens that are arrested by the teams were drug traffickers, sex offenders, murderers, and foreign fugitives trying to evade justice in their home countries.
He defended the use of masks by his agents, insisting it's because they and their families have been targeted with threats. President Trump is facing the challenge of convincing Republican senators that he won't bury the federal government in debt with his tax breaks package. CBS's Caitlin Huey-Burns.
You still have some members concerned about government spending, that this bill doesn't cut enough. On the other hand, you have some lawmakers concerned about these potential cuts to Medicaid and other social safety net programs, saying that they don't want to vote for something that might cut into the programs in their states, which is significant because this is coming from some Republicans.
There is a big job ahead getting all of the problems fixed at Newark Airport in New Jersey, but Transportation Secretary Sean Duffy says there's been progress in one area.
Today we're celebrating the opening of Newark's runway. And this is a 60-day project that actually is completed 13 days early.
There's new hope for some breast cancer patients, as CBS's Elaine Cobb reports.
Pharmaceutical company AstraZeneca says its new breast cancer drug can stop mutating tumors before they start to grow. Unveiling positive trial results on patients with advanced breast cancer, the company said its camizestrant cut the risk of a tumor progressing or a patient dying by 56%, and it significantly helped improve general health and quality of life.
Checking the numbers on Wall Street at this hour, the Dow Jones Industrials are down 17 points. Investors worried about the trade tensions again. This is CBS News. After a 2-year hiatus, a solemn tradition returns to Arlington National Cemetery. Stacy Lynn reports.
The tradition dates back to 1948. A flag-draped casket aboard an ammunition wagon being pulled by 6 horses. But in 2023, caisson funerals were stopped over concerns for the health and welfare of the horses. Since then, the Army has spent more than $28 million overhauling the entire program. And they say the horse-drawn caissons are ready to carry the caskets of deceased service members once again to their grave sites. Stacy Lynn, CBS News, Washington.
Customs authorities in Sri Lanka have arrested a woman and charged her with the largest haul of cocaine ever detected at the country's international airport. 22 pounds. It was stuffed into pills and then into 3 plush toys. It was worth about $1.7 million. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is a Bloomberg Business Week Daily. I'm Tim Stenovec. That is Emily Grafeo in for Carol Massar. We're going to have more on the trade in just a minute, but Emily Grafeo, wait, did I say you're in for Carol?
Did you?
I don't know. I've said it many times today. Emily Grafeo.
You said I'm here.
Bloomberg News cross-asset reporter. From our team, she's here in for Carol Massar. Thanks for sticking with us for this 3 hours, Emily. We're seeing a little bit of buying into the close.
Yeah, we're pretty much at session highs on the S&P 500 and the NASDAQ 100. Looking at the bond market, though, we have yields rising across the curve and a lot of selling at that long end as well. Oil as well. We talked to Alex Steele a little bit earlier in our program, and it's up almost 4% right now.
Okay, so that's something to keep an eye on. Again, we're going to have more from Charlie in just a minute. One thing that I'm curious about is what is going on when it comes to negotiations between the U.S. and China. We're going to be speaking with our chief geoeconomics analyst for Bloomberg Economics on the progress or lack thereof of these two economic powers.
We're also going to be switching gears a little bit, and we're talking about travel. We're going to speak to the CEO of Travel and Leisure on how summer demand is looking.
How about some chicken?
I had chicken for lunch.
You did?
But I did not have Dave's hot chicken.
All right, we'll see if they bring in any Dave's hot chicken. I've never had it before, but the franchise, the chain, going through they inked $1 billion deal today with Roar Capital. We got the CEO coming in a little later. He's going to be telling us everything that's on the horizon. All that and more coming up over the next 2 hours right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. From chicken to the bulls and the bears with the S&P right now higher by 18. Best level of the day right now up 0.3%. Dow Industrials down 19. Drop there of just under 0.1%. We've got NASDAQ up 118. That is a gain of 0.6%. The Bloomberg Mag 7 Index up 0.7%. Higher now by 133 points. Again up 0.5%. Your 10-year at 4.45%. The 2-year 3.93%. Spot gold up $90 the ounce, up 2.7%. Gold, by the way, $33.79 right now. West Texas Intermediate crude up 3.5%, $62.89 a barrel. Federal Reserve Bank of Dallas President Lori Logan says the U.S. Central Bank can remain patient as it assesses risks to both inflation and also unemployment.
We're seeing risks on both sides of our dual mandate that appear fairly balanced. That leaves us well positioned, I think, to wait for the data, to be patient. And then if we get significant information that really changes the outlook on the balance of risks, we'll be prepared to respond.
Lori Logan speaking at a banking conference hosted by the Dallas Fed. Shares in U.S. steel and aluminum stocks, they are climbing as President Trump says he will be increasing tariffs on steel and aluminum to 50% from 25%. Among those steel companies, Cleveland Cliffs up 22.4% right now. Nucor up 9.5%. 2.5%. Steel Dynamics up by 10%, and U.S. Steel is lower now. We've got U.S. Steel down by about 0.6%. Again, recapping U.S. stocks, we've got the S&P up 17, up by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Really do appreciate it. Well, President Donald Trump and Chinese President Xi Jinping are likely to speak this week, the White House said, as the world's two largest economies remain locked in trade turmoil. For more, we bring in Jennifer Welch, Bloomberg Economics Chief Geoeconomics Analyst. She joins us from Washington. Jennifer, I just want to start with the lay of the land right now, because we're a little over a month away from the end of this 90-day pause that the president had laid out for every country that it's negotiating with around the world. What is the average tariff rate that we should keep in mind for goods that are coming from China into the U.S. right now?
Well, at the moment, the U.S. effective tariff rate on China is closer to 40%, with the 90-day pause on the higher reciprocal tariffs that came into play after April 2nd, after the tit for tat between Washington and Beijing. But as the call's lead up has indicated, the wheels are starting to fall off of that truce. And we might see tensions come to a boil well before that 90-day period is set to end. And I think the threat there is whether or not tariff rates are going to go back up again. Once that 90-day truce ends, will there be an extension of it to allow for a larger deal on trade? At the moment, the signs are pointing pretty negative.
You know, I was sitting in the studio with Tom Keene doing Bloomberg Surveillance a couple weeks ago, and in one single day, we spoke to two analysts, and this was before the 90-day truce. We spoke to two analysts who told us that within weeks, we were going to see empty shelves here in the U.S. It doesn't seem like that has materialized. Yes, there's been a pause at this point. Are you, based on the research that you see, the folks that you talk to, are you seeing that's still a concern, given that so much of what we buy in the U.S. comes from China?
I think the 90-day pause allowed for companies that had already been surging orders in advance of Liberation Day, anticipating that tariffs were going to go up, allows them to continue to make orders and through at least this 90-day period. So it has bought some space and it has bought some time. They are facing higher prices, but they are not facing the kinds of exorbitant prices at the 145% tariff rate that we were in mid to late April. That would have made many of those orders cost prohibitive. So I think it has bought some space, and that's why we haven't seen empty shelves. We may still see price hikes, though, because that 38% effective tariff, that's a high rate, higher certainly than where we were before April 2nd. But I think it has avoided some of the shortages that we were concerned about before this truce was reached in Geneva.
I'm wondering if, in your observations, these, maybe some cracks in the trade truce beginning to show, how much of that is just a normal part of a negotiation between two of the world's largest economies?
I think given the experience of the first U.S.-China trade war, at this point in time, I would say history suggests that this isn't surprising. In that trade war, we saw multiple, what I would call potential off-ramps, where both parties had the opportunity to take a step down from trade tension that were either bypassed or only lasted a temporary period of time. And we also saw multiple rounds of escalation and tit for tat, even when it seemed likely that the two parties are maybe reaching an agreement of sorts. Ultimately, it took 2 years from the initiation of tariffs to the conclusion of a deal in the form of the Phase 1 deal and that trade war for tariffs to come down. And even then, the Phase 1 deal didn't last very long before tension started to spike again. I think that helps explain the backdrop for today's trade talks, where there's deep levels of distrust on both sides. Both sides, as you're implying, are still looking to gain leverage, even though they've agreed to this truce. And that's probably part of the reason Beijing has been slow to peel back these export controls on rare earths and other critical minerals that the U.S. has complained about. That's leverage that Beijing wants to continue to retain, in addition to the administrative challenges of peeling back export controls. And on the U.S. side, there are a number of steps that the United States wants to take as part of its competition with China outside the trade domain. And from Washington's perspective, a trade truce doesn't mean that it agreed to pause all of that. But from Beijing's perspective, I'm not going to agree to something in the trade arena when you're hitting me on export controls or on student visas at the same time.
White House Press Secretary Caroline Leavitt told reporters today that, I'm just going to quote it, "I can confirm that the two leaders will likely talk this week," of course, referring to Trump and Chinese President Xi Jinping. This would be the first time since they spoke, correct? Since Trump took office. What would this mean?
It would be the first time that we know if they've spoken since he took office. President Trump has indicated that they spoke at some other point in time, but he hasn't provided specifics of it, and there was never a readout from it. So we don't really know if that call ever happened. I think it's highly unlikely that Beijing in this atmosphere would agree to a leader-level call. From Beijing's perspective, that's just incredibly risky. They don't want to put President Xi Jinping in a position where he could be embarrassed or surprised in the way that some other foreign leaders in meeting or talking with Trump have been. Their preferred MO is for the leaders to meet and to talk once they have something to announce, which usually requires more progress at working levels. Obviously, that flies in the face of President Trump's preferred approach, where he likes to work things out with his counterparts, and that often is a faster path to resolving differences. And so if a phone call happens this week, I think that is a good thing for trade negotiations. It probably will help restart momentum, or at least clear the air in a way in which these tensions aren't kind of boiling on the back burner. But I think a call is unlikely. And what that means is that tensions could continue to boil because they're only being addressed really at lower levels. And it would take a higher level engagement to put them to rest, or at least to put them into the background to the point where they're not interfering with talks further. So my anticipation is, despite what the White House press secretary said, I'd be very surprised if a phone call did happen, and I'd be, as a result, very surprised if we had a quick resolution to this current period of tension versus a decision to kind of continue to let things boil and work them out at the lower levels.
Hey, Jennifer, we're going to try to fix your mic a little bit. But Emily, one thing that I wanted to talk about with Jennifer, we've got a couple minutes left, hoping we can fix the connection, is who has leverage in this negotiation? I mean, China has the rare earth capacity for refining these rare earth elements. We've talked about that with Jodo quite a bit, and Gracelyn Baskin over at the Center for Strategic and International Studies. They also have the stuff that we want to buy as consumers, but we have the consumers, Jennifer. I want to go back to you and bring you back in here. Who has the leverage when it comes to this negotiation?
So in a sense, both sides have leverage. Obviously, from the U.S. perspective, they are China's single largest market in the world, and there are very limited options for Beijing to shift those goods to other locations. At the same time, manufacturing is increasingly a very important part of the Chinese economy. It has been for decades, but especially in light of their property bubble and some of the other challenges that they have had with consumer sentiment. At this moment in time, with their other economic weaknesses, manufacturing becomes an even more important part of China's growth hopes. On the other hand, for the U.S., the weakness is really in terms of consumer dependence on Chinese goods, that there aren't a lot of alternative options, or it's certainly not within U.S. consumers' price preferences. And so both sides are going to face incredible pain here if tariffs resume higher levels. For China, it will be in the form of dropped exports. As a result, the impact it's likely to have on factories and in course of that, an impact on jobs. On the U.S. side, it's going to be in terms of much higher prices for U.S. consumers, to the point where some goods might not be available and there aren't ready alternatives for those goods. So both sides certainly have an incentive to avoid a return to higher tensions here, but at the same time, the depth and deep persistence of these trade tensions against the backdrop of distrust makes avoiding that outcome a real challenge.
Jennifer Welch, Bloomberg Economics Chief Geoeconomics Analyst, joining us this afternoon from Washington. Coming up next, an about face for the White House and NASA.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got 39 minutes to go ahead of the closing bell. With the Dow lower, the S&P, NASDAQ, they're both higher. And this Bloomberg Business Flash is brought to you by ShipStation. Calm the chaos with the shipping software that delivers. Use code Bloomberg for a free trial at ShipStation.com. That's ShipStation.com with the code Bloomberg. S&P right now trading higher by 19 points, very close to session highs, up 0.3%, back at 59.31. The Dow down 0.6%, and we've got NASDAQ up 120 now, a gain of 0.6%. First trading day of the new month. 10-year, 4.45%, the 2-year, 3.93%. Gold now higher by $90 the ounce. That's a surge of 5.75%. Spot gold at $33.79. West Texas Intermediate crude up 3.5%, $62.89. But Bitcoin trading lower. Bitcoin down now 0.5%, 104,400 on Bitcoin. Sarah Hunt is Chief Market Strategist at Alpine Saxon Woods. She was a guest this morning on Bloomberg Surveillance, and she was asked if she is loading the boat on Mag 7 stocks.
So we had definitely taken some exposure down at the end of last year on a valuation basis, and when things got hit pretty badly, we're willing to take it back up because of those the same valuation reasons. I think that is the story that is driving equity markets and the earnings season, and that's hard to ignore because that's really what people are looking for right now.
Sarah Hunt of Alpine Saxon Woods interviewed this morning on Surveillance. The Walt Disney Company is laying off several hundred employees across its film and TV businesses. Cuts that underscore the tough times in Hollywood are far from over. Right now, Disney down 0.2%. And Jamie Dimon says his retirement from the top post at JP Morgan Chase is, quote, several years away, but the decision is up to the bank's directors. He was interviewed on Fox Business. Recapping, S&P 500 index up 21, a gain of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Really do appreciate it. And about face for the White House, it kind of one of those things over the weekend that I saw, and I was like, wait, what? President Trump said he would name a new nominee for NASA administrator just days before billionaire Jared Isaacman, who's the current pick and a close ally of Elon Musk, was set to face planned Senate confirmation vote. He's been a Democratic donor in the past, Jared Isaacman has, and he's found support across swaths of the space industry and in Congress, though some lawmakers voiced concern over his close ties to Musk's SpaceX. We got with us Lauren Grush. She's Bloomberg News space reporter. She's also the author of The Six, the untold story of America's first women astronauts. She joins us from Austin, Texas. Lauren, we had you on when Isaacman was chosen. This is a guy who's actually been to space. He's a billionaire. He knows a lot about space. He's a fighter pilot. He's the CEO of Shift, or was at the time, not anymore, the CEO of Shift 4 Payments. Just remind us, what you spoke to us about just a couple months ago when he was named NASA administrator. Just remind us who he is and what experience he would have brought to NASA.
Sure. I think when he was first announced, there was a lot of enthusiasm across the space industry about his nomination, just because of what you mentioned. He has a really long and lengthy resume that comes with, in-flight space experience. He also has a lot of opinions that he voices regularly about space policy on social media. He seemed to come to NASA with a very clear vision of what he thought the agency should be doing, how it should be spending its money more efficiently. He had a lot of opinions about the inefficiencies of the contracting process within the agency. His nomination across the industry, just because, he did have that, very intricate pedigree when it came to space and how to run the agency.
I do want to correct myself. I said he was CEO of Shift 4, but he was still CEO, and this is actually part of the story. Taylor Lauber was actually set to start as CEO of Shift 4 to take over for Isaacman. Now that's kind of in flux, Emily, after this nomination was pulled.
Right.
What was Trump's rationale? What do we know about why he pulled this nomination?
Right. Yeah, so the official line concerned, I think, what Tim had said earlier about his past donations to Democrats. And supposedly that was brought to the president's attention very recently, and the fact that, you know, he gave more to Democrats and to say Republican donors seem to be rubbing the president the wrong way, and ultimately he hinted at that in his social post about why he had pulled the nomination, that he was looking for someone in more alignment with the White House. I think what's confusing to a lot of people is that it was not a secret that Jared had donated to Democrats. In fact, this has been widely reported. So perhaps it is something that just caught the president's attention recently, or perhaps it's, you know, the official line for something else. But that is kind of where the White House is pointing to as to why this is happening.
Yeah, it's interesting to hear that. I mean, we're not going to talk politics here, Lauren, but I just do want to remind people that Robert F. Kennedy Jr., for example, actually ran against President Trump for the 2024 presidency before he dropped out and aligned himself with the president. Right. You've had people such as the president himself talk during the 2016 election that he was asked about this, that he had donated to Democrats in the past. And so it's an interesting explanation that we're hearing, or a notable explanation that we're certainly hearing from the White House. But to me, Lauren, it differs than sort of other people that he's staffed his cabinet with. It hasn't mattered to those folks. I mean, haven't all these folks, like a lot of the Silicon Valley folks who are supportive of the president now weren't supportive of him necessarily in the past?
Right, exactly. You know, so there is some thought that perhaps this is kind of like the straw that broke the camel's back. You know, maybe too many people with Democratic ties were making their way into the administration. But I think it's important to think of the Elon of it all. For, you know, it also comes at a time when Elon Musk is very publicly ending, you know, his time at with the White House and his Doge operation. And Jared Isaacman was very much seen as an ally of Elon's because he had such close ties to SpaceX. You know, he's flown twice with the company to space, donated a lot of money, or invested a lot of money into their research programs to further human spaceflight at the company. So Jared was very much seen as an Elon Musk ally. And so there is obviously speculation that this was kind of related to Elon's exit. Now that he's on his way out the door, maybe some push for fewer ties to Elon in the White House.
Hey, Lauren, so you write that the White House's about-face comes after President Trump released a budget plan that would call for slashing NASA's budget by 25% from the previous year. I'm wondering if you can talk a little bit more just about, like, what are Trump's visions for NASA right now? What is NASA supposed to be doing in an ideal Trump world?
Right. I think that's kind of the open question right now among the space community. The budget proposal that the White House has released would, if enacted, would be the largest single cut to the agency since the agency was created. It primarily targets space science programs, so it would cancel a lot of missions for planetary science, astrophysics, things of that nature. You know, a lot of the things that NASA has become famous for are being targeted in this budget plan. At the same time, there is a much more renewed focus on human spaceflight, with the budget, some money being given to start, you know, make sure we stay on the course for lunar exploration, sending humans back to the moon through the Artemis program that NASA has created, and then also starting up development into potentially sending humans to Mars. So it seems like there is much more of a focus on, you know, funding human spaceflight initiatives and a pullback on space science, which doesn't necessarily have humans on board when those happen. And I think that's a kind of a fundamental tension that the agency has grappled with for many decades. And it seems to be clear where this White House, what line they fall on when it comes to that debate.
We're speaking with Lauren Grush. She's Bloomberg News space reporter. She's also the author of The Six, the untold story of America's first women astronauts, joining us from Austin, Texas. Lauren, do we know what direction the president wants NASA to go in, or do we know which direction the president will go in now that Isaacman's name has been pulled? Are there any names being bandied about at this point?
There's definitely names being bandied about. I'm not sure I'm ready to say them publicly, but there's definitely speculation on who would come next. I think what we can expect is that this White House is very keen on furthering the privatization of spaceflight and making it so that NASA helps to jumpstart the commercial space industry even more than it already has. So NASA less being the ones to oversee development and to spend all the money on all these endeavors, but to partner with the commercial space industry and to, help the vitalization or revitalization of the commercial space industry by helping companies get the money they need to jumpstart their various programs. I think the question becomes, though, how long is it going to take for a new nominee to get named? They have to go through the entire Senate confirmation process again. We were on the cusp of that happening with Jared. As you mentioned, it was expected that he was going to get confirmed by the full Senate today, or at least as early as today. And so now we have to start from square one. They have to be vetted. They have to go through a hearing. And so when that person will be in charge of the agency is an open question. And then during that time, we're going through the typical budget process, right? So there's going to be hearings and discussion among lawmakers about these major budget cuts that the White House has proposed, but NASA doesn't have a full-time advocate, a political advocate. They have an acting administrator, Janet Petro, but that person has not been, fully vetted. It's not her responsibility to really take up the mantle of what the White House wants. So NASA is kind of lacking this leader to really be an advocate for the agency. And so what that means for the budget process through the rest of the year is going to be interesting.
Maybe I'm naive in thinking that space should be or is supposed to be bipartisan. I'm wondering, you've obviously followed this space for a while. Is space becoming more politicized, more partisan?
I think that is the concern for sure. There's for a long time, space policy has benefited from being bipartisan. Everybody loves space. Democrats and Republicans alike love to, have space initiatives in their districts and things like that. I think everybody can rally behind space, but I think the concern is that, with Elon's foray into politics, he's obviously very closely aligned with SpaceX and NASA and now space policy. And so, has that had a tarnishing effect on space and, people who support space? I don't know if we're that far into it yet, but that is the concern, because once space does become politicized, then it suffers from many of the other things that happen to very politicized topics, and then it becomes less about, science and discovery and more about who supports what.
Lauren, gonna have to leave it there. Always appreciate when you join us, and we know we'll have you back on when they announce a new pick for NASA administrator, but hopefully before then as well. Lauren Grush, Bloomberg News space reporter. Check out her book, The Six, The Untold Story of America's First Women Astronauts. Coming up next, we're driving to the close. Alan Zafran is going to be here. The S&P 500 up 0.3%. The NASDAQ Composite up 0.6. This is Bloomberg Business Week Daily.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index holding close to session highs. 20 minutes to go ahead of the closing bell. But right now, let's head over to the First Word breaking news desk for today's afternoon call. And here she is, Jordan Fitzgerald.
Thanks, Charlie. The main U.S. averages are in the green after Reuters reported that the White House wants best trade offers by Wednesday. The S&P cash is up 0.3%, with the NASDAQ up 0.6% on a strong day for tech. Taking a look at the Dow, Boeing, NVIDIA, and IBM lead, with Salesforce, Procter & Gamble, and 3M under pressure. Campbell's is up after its earnings beat this morning, and Steel Dynamics, Nucor, and Cleveland-Cliffs surge as Trump plans to hike steel and aluminum tariffs. The 10-year yield is at 4.5%, the dollar is down, gold is climbing, and oil settled more than 3% higher after OPEC supply increases were less severe than feared. Wrapping things up, no major earnings are expected after the bell. From your First Word breaking news desk, I'm Jordan Fitzgerald. All yours, Charlie.
All right. I thank you very much. We thank you, Jordan Fitzgerald. And to hear live breaking news over your Bloomberg, type SQUAWK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
Look at that. We're just about 19 minutes from the close of equity trading, as we just heard from Jordan Fitzgerald. About 0.3%, but a strong day for tech right now. The NASDAQ higher by 0.6%. The Dow is flat. Let's bring in Alan Zafran. He's co-founder and managing partner at IEQ Capital. About $36.8 billion in assets under management. He joins us once again from Foster City, California. Good to have you back on the program. We haven't spoken since, just after the tariff pause. So mid-April just after the tariff pause, I should say, Alan. It's been quite a while since we've last spoken with you. Good to have you with us this afternoon. That's exactly where I want to start, because we're going to get to the Fed in a minute. We're going to get to sort of asset allocation and how maybe it's different than a few months ago. But with regard to U.S. trade negotiations, in your view, how do things stand right now?
Well, first of all, Tim and Emily, thanks for having me on the show. Look, it's unclear, right? On the one hand, our administration is talking to China and arguing that they're going to delay the imposition of some of these tariffs. But then the next thing you hear is there's, again, conversations about maybe it's not going to be so easy. So the last we heard is President Trump will talk with the head of China later this week. And the intention is to get the conversations back on track. If you have the two largest economies in the globe not acting well with one another, clearly that's a negative globally. And so I think on a short-term basis, where this market is headed, stock market is measuring the ability of our administration to get its way to some degree with some imposition of tariffs while not being too problematic or hurtful to other countries' administrations, so that we can work out face-saving agreements on both sides of the oceans or both sides of the country. So that's the game. Are we going to find some middle ground that enables the U.S. to argue it's won in the imposition of some tariffs for the benefit of protecting our domestic industries, but at the same token, in a way such that other countries' administrations can have face-saving agreements on behalf of their own citizens? That's the game to play right now in terms of tariffs.
I saw a note this morning. I'm blanking on who wrote it, but the analyst was mentioning how it seems like markets aren't reacting as strongly on Monday mornings when we get like news over the weekend about U.S.-China relations, which we did get this weekend. It's not like we saw a massive drop coming in Monday morning. What do you make of that? Are investors getting tired of all of the headlines about tariffs and the trade war, or are there actually real developments here that kind of signal meaningful progress that could be good for the equity market?
I think it's a little of both. First of all, I actually think there's a tremendous amount of cash still on the sidelines, which goes all the way back to the stimulus that was created as an effort to fight COVID.
Wait, you still think there's still cash on the sidelines?
Yeah, I do. I do.
Wow.
I think there's a lot.
Who's got it?
There's like a record in money market funds, right?
I know it's in money market funds, but I'm thinking of more of like who still has $1,000 or whatever we got from PPP or from those emergency COVID funds.
Well, that's a whole another conversation we could get into, but I think the most affluent portions of the U.S. Citizenry have significant wealth, which has only grown since COVID, and they have ample amounts of cash to put to work on dips. That's why I think you keep seeing the buy the dip mentality. On top of that, to answer your question, Emily, on top of that, I think what you're seeing is people are coming to a conclusion that the current U.S. administration only has a tolerance for so much pain in the markets before it's going to revert back to a more amenable set of tariffs that the global economies can tolerate. In a world in which we have 10% on average tariffs imposed by the U.S., not ideal, but it's a global economy that can still grow, if even at a slightly lower rate than it would have otherwise. And that's dramatically different than a world with 30% tariffs, which puts probably us into a global recession. So I think investors have concluded the administration is teasing out the middle ground and therefore is not reacting to the day-to-day headlines as to 50% tariffs on steel or whatever product or service of the week that they're going to talk about. I think the investors are more discerning and realizing it's probably not going to be as bad as it was feared when we had our dramatic drop in early April.
Alan, when do we start to see those actual tariffs make their way into actual prices that we're paying for stuff?
You're actually starting to see it a bit because producers and service providers are already anticipating some of that, but we haven't seen the bulk of that yet. And in fact,
is that just because we're making our way through inventory? Like, we heard from the retailers earlier this week, or last month, I should say, in this most recent earnings round, that they're still working through inventory that they had pre-tariffs. Is that why?
That's a large part of it. Okay. The other issue concern, though, is imagine a world in which everyone's holding off on offering their products out of a concern if and when and how the tariffs show up. So there's also a bit of front running, right, where products are going out the door as quickly as possible in avoidance of the tariff being imposed on them. So when you may see some dramatic step shifts up in prices if, in fact, tariffs become legislated into law. So it depends on the product and service from the country.
What do you think is most at risk?
Well, I think most at risk are really where we're trying to protect create a fair playing field. So it's anything from importation of energy services to, oddly enough, things at risk like the notion that maybe foreigners are going to get taxed on investments in the U.S. That's an easy one to impose on foreigners. It doesn't hurt us. So you're going to see the reverse. And then we don't know how to predict if other countries will impose those costs back on U.S. investors to non-U.S. investments. That might be a next step we haven't seen yet.
Hey, I want to shift gears a little bit before we go. Just get your word on what you're seeing with alternatives right now, private credit and private equity, venture capital. Certainly is a relatively large portion of the way you invest the money that you manage. What's the opportunity there right now, and how has it changed in the recent months?
As it relates to private credit, we have not seen a lot. So interestingly enough, despite concerns about economic slowdowns, let alone recession fears, we're seeing little, if any, evidence that there's any degradation or decline in the ability of private companies to pay their debts, meaning private credit, in our mind, still is a highly attractive asset class, yielding much higher annual income streams than what you can buy from the public bond markets. In the private arena, secondary investments, when you're the buyer of someone else's illiquid investment, we think you're going to see more and more of it for two reasons. Most recently, there's news that a lot of the universities are finding themselves having too much illiquidity, finding a need to raise cash for potential increase in tax rates on the returns on their investments. And so they're coming to the markets with portfolios of investments that secondary buyers, the second investors, can buy at a discount.
Okay.
And we're seeing a lot more of that. We're probably going to see
Alan Zafran, IEQ Capital, thanks for joining us.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. Carol Massar is out. That is Emily Grafeo. She's a Bloomberg News cross-asset reporter. She joins us here in the Bloomberg Interactive Brokers studio. Seen a little bit of buying into the close. Up 0.3% on the S&P 500. Tech strong, 0.6% to the upside. I know it's a perfect story to do.
Okay.
When Elizabeth sends it, you read the headline and you say, who is that person?
Oh, I'm so embarrassed.
Don't be embarrassed. I think this is exactly kind of speaks to why it is the end of an era when it comes to podcasting. I actually texted a friend of mine. I saw this early this morning. Big Mark Maron fan. Mark Maron has quit podcasting after a 16-year run. He cited burnout. His long-running podcast, WTF with Mark Maron, will air its final episode this fall. Maron announced this on Monday. It ends a pioneering 16-year run that helped define the podcast medium. Here's what he said on his show. Quote, "We're burnt out and we are utterly satisfied with the work that we've done." So this guy was like, I would argue more so than Joe. He was on before Joe Rogan. The first sort of like just sit and chat podcast I ever heard, no question, was Mark Maron's podcast.
What did he do before podcasting? Like, did
He's
he already have an
comedian and actor?
audience?
Yeah.
Yeah.
No, he didn't. He wasn't as successful as an actor as he's become in recent years. He was in the Netflix show Glow a few years ago, if you remember that one. But he's had everybody on this podcast: Bruce Springsteen, Keith Richards, Brad Pitt, Barack Obama, David Mamet, George Clooney, just to name a few. He's got Stick, which is a new golf comedy series that stars him and Owen Wilson, coming out just in a couple of days. He's got a new stand-up special coming to HBO later this summer. It's been a lot of work, but I think this did so much for his career, and it's really emblematic that, you know, we were talking about this and you didn't even know who he was. I think it kind of speaks to like, no, I think it speaks to like what is, like how popular he used to be, the generation that he has spoken to. It's like much more Gen X and elder millennial than it is Gen Z.
Yeah. Joe Rogan is definitely, I would say, the undisputed like king of podcasts. And I think everyone of all generations know him. So look, I mean, he said he's burnt out, but he seems like he's doing a lot of work, even though he won't be podcasting. He seems like he'll still be very busy.
I think one thing that a lot of people thought was really cool about his podcast was he would start them with these intensely personal essays.
Okay.
They got to know him as a person really well. His road to recovery from drugs and alcohol, the death of his fiance a few years ago, which like happened, and he shared that.
Oh, wow.
That on the podcast and what she meant to him and his challenges with dating and with love. I mean, he was like, he talked about his dad a lot on the podcast. It was like, it really seemed like it was like a therapy session for him. And then he would get into the actual conversation with the people. So certainly the end of an era when it comes to podcasting.
How is he doing with podcast charts? Do you know? Not to put you on the spot.
No,
but I just feel like I didn't even see it. Maybe like I have tunnel vision when I go on my Spotify and look for podcasts. I don't think I ever came across this podcast.
No.
I feel a bit silly for this now.
But well, the cool thing is you can go.
Speaks to the generational
What I found, you know, I don't listen to him anymore regularly. I did listen to him for a short time regularly, but there's only so much time people have.
Yeah.
What I like to do now and what I have done is people say, oh, there's like a legendary Courtney Love episode with Mark Maron.
Yeah.
And I listened to that a few months ago because everybody was talking like this is a legendary podcast.
Right.
So I go back and listen to that one, for example.
Right. Instead of just putting it on your commute, listening every single day. Yeah. I definitely do that with podcasters who I used to be like very loyal fans to. Now I'll just go
What
back.
are your non-Bloomberg podcasts?
I'm a
Put
Tim.
you on the spot.
Well, I like Tim Ferriss.
Okay.
But that's one who I used to listen to him a lot. And then now, like, he'll like re-release old episodes because he's been in the space for a really long time.
Okay.
Yeah. What else? Well, I listen to a lot of news podcasts.
Yeah.
A lot of them Bloomberg. Some of them from other competitors.
We just can't get away from it. That's the thing when it comes to this stuff.
My friend has her own podcast though. I
Okay,
won't
that's
give it.
pretty
I
cool.
won't promote it here. But
okay.
I listen to that too.
A little bit of
it's
shade.
very small. It's very niche.
A little bit of shade. All right. Coming up next, it's our cross-platform coverage of the market close. It's the closing bell.
To the downside, solar and automakers. A full breakdown starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlet Food, taking you through to the closing bell, a global simulcast. It starts right now. Alex Steele off on assignment. Carol Masser has the day off. Emily Grafeo filling in for her. And, of course, Tim Stenovic joining us, as always, as we welcome our audiences across all of our Bloomberg platforms, television, radio, and our partnership with you too, Tim. A bit of a bifurcated trade here. Big gains in the NASDAQ on the day, but you're still seeing the Russell, the transports, and the mid-caps basically straddling in the line between gains and losses.
Yeah, and it's kind of like not really what we saw earlier in the session. We saw stocks were really doing nothing earlier. They got a little bit of a bounce just in the last couple of hours, and we've been hovering around this area. I don't know. Maybe they're thinking about investors are thinking about the economic data that we got today that we'll get later this week. Broadcom earnings after the bell later this week. Not too many catalysts in the near term, I think, that are kind of moving markets right now.
But if you're a cross-asset reporter, it was an exciting day across asset classes. You look at the move in long-term treasuries, oil moving higher, Bitcoin is lower, which you wouldn't expect that on a risk-on day. So under the hood, the cross-asset is interesting.
And don't forget the U.S. dollar near a 2-year low as well. I mean, this could all change later on this week if President Trump and Chinese President Xi Jinping end up having their conversation that we've been teased on for so many days now.
Yeah, I mean, what's that conversation going to look like, though? Because at this point, I'm so confused as to exactly what either country wants. I think I have a sense here of what President of the United States wants, but I'm not really clear how that dovetails with what the Chinese government, at least what they've communicated publicly. All right, we get the closing bells here in New York. Let's take a quick look here. With the Dow Jones Industrial Average relatively unchanged on the day, as it takes a while for these numbers to settle. Seeing EW Scripps actually ringing the bell there on the NASDAQ. And look at that, over at the NYSE grinder ringing the bell there in honor of the start of Pride Month here in the U.S. The S&P 500 higher by 24 points, or about 0.4%. The NASDAQ up about 0.7% on the day, and the Russell 2000 clinging to gains higher by 4 points, or 0.2%.
Kind of evenly split between gainers and decliners in the S&P 500. 241 stocks moved higher, 261 to the downside.
Yeah, you look at the sector performances, and there's a lot of green here on the IMAP. The only sector to finish in the red is industrials, losing about 0.25%. Healthcare and REITs were basically unchanged on the day, although they did tick into the green at the close, with the S&P 500 ending at its session highs. Energy, the best performer here, as crude oil, as Emily mentioned earlier, getting a big bid, and tech and communication services all gaining as well.
All right, let's take a look at some of the gainers on this day today. Applied Digital up more than 48%. It's a digital infrastructure company, i.e. cloud services for high-performance computing. Shares surged, get this, it was only the biggest jump going back to September. This after the company entered into 2 lease agreements with CoreWeave in North Dakota. Remember, CoreWeave is the cloud services company. So under these agreements, Applied Digital will deliver 250 megawatts of critical IT load to host CoreWeave's AI and high-performance computing infrastructure at its North Dakota Center campus. Also, keep an eye on what happened with steel and aluminum stocks today. A host of these companies moved higher. I picked out in particular Steel Dynamics, higher by 10% today. This after President Trump said he would be increasing tariffs on steel and aluminum by 50% from 25%. The president did say on Friday that the move would help protect American workers. This was as he visited a U.S. steel plant late last week, I should say. The president also said he would raise aluminum rates in a post on Truth Social. That post said the new rates would become effective this coming Wednesday.
Why did you choose Steel Dynamics and not the others, Tim?
Steel Dynamics was the best performer when I looked in the S&P 500 on a percentage basis.
Oh, okay.
Yeah, in the S&P 500.
There's a method to his madness.
Okay. Yeah, there is a method. It was actually a hard decision. I, in fact, even looked at some steel ETFs if I wanted to do one of those.
Ooh. Yeah.
But it was only moving higher by like 2.5–3%. I thought this was a more dramatic move. So.
All right. Well, Cleveland Cliffs up 23% on the day.
That was the
best
one.
Best day since 2016.
But that's not in the S&P 500.
How's that for a superlative?
It's not in the S&P 500.
Oh my gosh.
And the market cap is only a fraction
of
what Steel Dynamics is. So, yeah, there is a method to this madness.
He's got big cap bias.
Hey, there is a little merger action happening. M&A Monday, Blueprint Medicines Corporation, higher today, just surging 26%. Sanofi agreeing to buy the company for at least $9.1 billion. Sanofi is looking to further expand its rare immunological disease portfolio. The company plans to finance the transaction with a combination of cash on hand and proceeds from new debt.
All right, and looking at the decliners right now, DraftKings falling as much as 8.5%. But it actually ended the day down 6% after Illinois lawmakers proposed a sports betting tax increase in the fiscal 2026 budget. Flutter Entertainment was also lower, but the DraftKings drop perhaps more significant here. This was a surprise move from Illinois following last year's unexpected boost. According to analysts at Truist and Oppenheimer, they say that online sports betting operators will have to pay a 25-cent fine on the first 20 million wagers accepted, and then a 50-cent charge thereafter. I'm also looking at shares.
You know, I just want to say, too, we caught up with David Katz at Jefferies, because I was kind of confused as to why the shares are reacting so much. And he said the bigger issue here was that if Illinois does this, then it gives sort of a green light for other states to follow suit, and that would be the real risk. That's his view, not mine.
Right, yeah. I feel like we typically see those fears of like a contagion effect when it comes to anything around sports betting proposals like this one. But now flipping back to Tesla, shares dropped as much as 3.8%, finished the day down 1%. A French industry association said today that Tesla sales plunged 67% to an almost 3-year low in France. And this is undercutting CEO Elon Musk's assertion last month that the car maker has recovered from its early year sales slump. And then finally, advertising agencies fell. Interpublic Group is one of them. The Wall Street Journal reported that Meta is planning to enable brands to fully create and also target ads using AI by the end of next year. And we saw this company, $8.4 billion market cap. It's an organization of ad agencies, finishing the day down 4.5%.
All right. Just real quickly, speaking of trade, we are getting some headlines here out of the border, Customs and Border Administration here in the United States saying that they have extended the pause on U.S. tariffs on some Chinese goods to August 31st. And of course, there's been a lot of chatter today about more high-level talks between the U.S. and China in resolving this trade dispute here. And of course, it's hard to keep track of exactly which goods and which tariffs this actually applies to, but the headline here is that it has extended the tariff pause on some Chinese goods until August 31st. Let's take a quick look at yields. They did finish up across the board and across the curve here by about 4 basis points, almost evenly. You're taking a look at that 2-year yield, still holding just below that 4% level, your 10-year yield at 4.4, and your 30-year yield right now at about 4.9.
Hey, one of the stories that caught our attention today has to do with everything that's happening at Newark Airport. I know a lot of people in the Northeast are focused on this.
Is there anything happening at Newark Airport?
There is. They actually finished a runway ahead of schedule.
Ahead of schedule?
I know. It's pretty wild. They finished a runway ahead of schedule, and now they're set to actually increase flights later this month. This follows the completion of construction at one of the busiest hub's runways. This, according to the FAA, earlier today. The FAA also saying it's going to allow 34 hourly arrivals once it certifies the recently rebuilt runway. It's now limited to a maximum of 28 per hour under restrictions imposed by the FAA to reduce delays. That compares to the typical maximum capacity of roughly 38 landings each hour.
So this increased capacity, it's expected to alleviate congestion and delays at the airport. We'll have to hold them to this. It's interesting because even if the flights are going to increase, will the demand increase? The New York area has a number of different airports that consumers can typically choose from. So it's interesting.
What's your favorite airport, Emily?
What's my favorite?
Yeah.
LaGuardia. But obviously, I mean, you can't fly international, but I love LaGuardia.
Yeah, well, no one can.
Unless you want to go to Montreal. I think there's some nice Montreal flights from LaGuardia.
But you can't go to California, for instance, Tim. When you want to go home, like, that's not a possibility.
It's JFK or Newark. And I was a Newark person until a few weeks ago when I switched all my travel for the summer over to JFK because of the issues that Newark has faced. This is a huge issue for United Airlines, of course, which has one of its busiest hubs at Newark Airport.
Although it has that partnership now with JetBlue, so that does give it more of a, I guess, presence at JFK.
Not overnight, right?
Not overnight,
when they do get those slots at JFK, and then JetBlue gets some spots at Newark. We'll see.
Yeah. Okay, so good. That's good. Things kind of returning to normal at Newark, and maybe the IPO market is returning to normal as well. One can hope. Circle Internet Group, as well as its shareholders, increasing the size and price of its IPO. So that, of course, signals perhaps strong demand for the stock. This is the stablecoin issuer. They're now offering 32 million shares between $27 to $28 a pop. That's according to a filing with the SEC.
Yeah, I mean, this is interesting. I mean, we've actually had a lot of IPO activity over the last couple of weeks, and I was actually curious when we were talking about, I can't remember if it was the Mountain or the eToro one, and someone was showing the data about the number of IPOs so far this year, at least through the month of May, higher than last year over the same stretch of period, and the number of companies going public has been higher as well. You would kind of not think that given all the chaos.
Well, I think what's so interesting is there was this pullback right after the so-called Liberation Day and when markets were in chaos and leading into that. And then as we've seen this steady drumbeat higher, more than 20% from those lows on April 8th, we've seen some of those companies dip back into the markets, and we've seen a stability come back, and we'll see what happens throughout the summer. But it does look like at least some big news coming from when it comes to those tariffs on some Chinese goods coming into the U.S. We'll get more details on that headline on both of our programs. That is going to do it for our cross-platform coverage of the close. It is the closing bell. You guys are going to do your thing on TV. We're going to do our thing on radio, YouTube, and originals, but we'll see you tomorrow, same time, same place.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is a Bloomberg Business Week Daily. That is Emily Grafeo in for Carol Masser this afternoon. Just to repeat a headline, the U.S. has extended a tariff pause on some Chinese goods to August 31st. That is the news that we have right now. That is all the context that we have right now. I know we are waiting to get more from the administration, and we'll certainly bring that information to you as we do get it. I don't know about you, Emily, but we're all trying to figure out how AI is going to affect the labor market and probably our jobs. How are you using AI, just out of curiosity?
ChatGPT. I will use that for questions that I would historically have Googled, but are a little bit more like multifaceted.
Yeah, I've been using it a lot for stuff that I used to Google.
Right? Like I used to Google it and then I asked ChatGPT and I find that the answer, like you can ask it a more advanced question that maybe.
And you don't have to look for the, when you Google something, you have to look for the answer.
You have to look, right.
Unless you're using the AI thing that they're trying out, but.
Yeah, but
this is why Google, I think, is a little scared, according to our own Business Week team.
But you can't trust it sometimes. Like, I mean,
hallucinations?
No, like as a reporter, I'm not just going to take ChatGPT's word.
Yeah.
You still have to check, and sometimes
but you wouldn't take
it doesn't
what
get
Google
it right.
told you outright either.
That's true. Yeah. But on Google, it almost seems like there's more options, so you can kind of cross-examine the different results that come up.
Well, if you've been listening to us regularly or watching regularly, you know that we're pretty obsessed with understanding about how AI is going to affect us in the labor market. Want to bring in Rachel Metz because she thinks about this stuff a lot too. She's Bloomberg News AI reporter. She joins us from our San Francisco bureau. We want to talk to you, Rachel, because one of the most read stories is about how McKinsey consultants are increasingly drafting proposals and making PowerPoint slides using Gen AI. It's developed enough to take over at least some of the tasks typically performed by junior employees. It comes after the news last week where we heard Dario Amodei over at Anthropic essentially say warnings to the entire economy that, look, this is going to displace a large number of people across the spectrum when it comes to different jobs. How are you thinking about this as AI reporter? Like what is it going to do to the labor market, or what are people telling you?
It's complicated, right? I mean, on the one hand, we see the tools as they are now. We see AI as it is now, and it could be used for a bunch of things. But Emily, as you said, it really warmed my heart to hear you say that you're checking things, you're skeptical, and you would be skeptical with a standard Google search as well. But as you said, and I think I feel similarly to you, you can kind of like look at multiple things, you can cross-reference things, and it's pretty easy to know where information is coming from. So, I mean, I think what we're going to see in the coming years is probably a few different things. I think we will see companies, and we're starting to see companies say, hey, we're not going to be hiring as many of this kind of employee. Typically, you'll see like a lower level employee in certain kinds of jobs because AI can do it. But I'm not sure that we're going to see that happening in a widespread way. I think we're gonna have to wait and see a bit. But at the same time, I really don't like this idea that the future is inevitable. That we're like waiting for the AI to come and like take over the jobs. I feel like there is kind of a sense of that with these warnings, and that's where I get skeptical. Because I wonder, well, why is that, and how is that, and how do we know that has to happen? That's where I kind of like raise my eyebrows and say, I'm not really sure. This technology could be used as a tool. In some cases, it's already a pretty useful tool. But I think for a lot of people, it will remain a tool. And let's be honest, there are certain parts of all of our jobs that we would rather not do, right? We'd either like to automate or have some software assistance on them for sure.
Is it too optimistic to think of maybe a scenario where, there are certain jobs that no longer exist, but the growth of AI opens up new opportunities for different kinds of jobs that have to do with, like training AI, coding AI. It just seems like with every technological advancement, isn't there always this fear that jobs are going to be, replaced, and then it opens up more jobs that have to actually do with the technology and the advancement of it?
Yeah, I mean, like an optimistic view of technology in general, I guess, would be that you get a new technology and if it is used widely and it is transformational, it will change things, and certain jobs might not be needed anymore, but other jobs may come about. I think another piece of this that I haven't heard people talking about that much, that is something I think about a lot when I think about the work that I do and how maybe some of it could be automated now or in the near future, is I like working. I like being a productive person. I know there are a lot of other people like that. So I'm not sure how many people would want to even have the option of not working. If there was, if AI could take over all kinds of jobs and you could just get a, universal income, would you want that? I'm not sure. I really am not sure if everybody would actually feel satisfied or fulfilled with that. And I don't even know that that's going to happen at all.
I agree with you, but how would you feel, just bear with me here, about maybe a 4-day work week instead of a 5-day work week?
I don't know.
Really?
I mean, I'd have to try it.
Well, we had a 3-day weekend a few weeks ago, and it felt pretty good to me. I don't know. But it does raise the question about what exactly is getting replaced. And I think one thing that's noticeable right now is that for so long we talked about technology and automation and what it would do to certain types of jobs, right? And it wasn't necessarily hitting the quote-unquote white-collar worker. The lawyer was okay. The person who went to graduate school and business school, they were okay. But now you have AI coming, and those entry-level jobs at some of these law firms, perhaps, or even what some of these McKinsey consultants are doing. Like these are jobs for MBA graduates. Some analysts. I mean, we've spoken to banks that essentially say we can do what analysts spend a couple of weeks doing. We can use AI to do that in just a couple of hours. So it's a different segment of the population that's being affected by this, Rachel.
Yeah, I mean, I think it is, but I think that also we're not quite at a point where, in general, you would want to use this technology to take over someone's job. I mean, if you look, you still have so much work and checking to do, and I'm not sure that this type of technology, large language models in particular, which is what we're talking about a lot of the time when we're talking about generative AI, I'm not sure that that's actually even the architecture of an AI system that could meaningfully take over a lot of jobs. I mean, we're talking about a technology that is fairly simplistic when you compare it to the ways that humans do a lot of this work.
Okay, just 30 seconds. What is then?
What is then? Well, people have not built this yet. I mean, there's a lot of talk out in the market about AGI. You hear that a lot. I feel like that sort of has people focusing on the wrong thing. I mean, there's so much that has already been developed with the AI that exists right now, and there are also so many issues with it. So I feel like focusing on the present and on what can be done with what we have now. I mean, I've talked to a lot of people that say if we stop developing AI right now, we'd still have so far to go as far as exploring the technology. So I would say I'm not in a rush. I think we got plenty to look at here, and it's going to be really interesting to see what happens in the years to come.
All right, Rachel Metz, a little dose of reality, a reality check from Rachel Metz, our AI reporter out there in San Francisco. Hey, some news crossing the Bloomberg terminal, a redhead. Uber has appointed a new COO. The CEO says he's not going anywhere. Uber has named Andrew McDonald as COO effective immediately. It's the company's first COO since 2019. It's a memo to employees. Uber has named longtime executive Andrew McDonald as its first COO since 2019. It's part of an executive shakeup that includes the departure of the company's top delivery leader. Just looking at shares in the after hours of Uber, just a little spike higher right now by 0.3%. This is Business Week.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Repeating an earlier headline, Uber Technologies has named Andrew McDonald as its first chief operating officer since 2019, all part of an executive shakeup. McDonald will oversee both the mobility and delivery businesses and be responsible for cross-platform efforts. He will be relocating to New York from Toronto in September. After hours, we got Uber shares now trading a little changed. The Dow, the S&P, NASDAQ turned out to be an up day today, with the S&P closing at session highs up 24, gain there of 0.4%. The S&P back at 59.35. The Dow up 35, up 0.1%. The Dow Jones Industrial Average spent most of the day in the red, but ended higher again by 0.1. NASDAQ up 128, a gain there of 0.7%. 10-year 4.43%, the 2-year 3.93%. Gold up $92 the ounce, up 2.8%. And West Texas Intermediate crude today up by just about 3.8%, 63.12 on WTI. Tesla's new vehicle registrations fell further in France, undercutting CEO Elon Musk's assertion last month that the car maker has recovered from its early year sales slump. Tesla today on an up day for the rest of the market, down by 1.1%. Recapping, S&P up 24, kicking off the trading month of June, up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, Delta Airlines CEO Ed Bastian said he's more confident about demand in the second half of the year after price-sensitive passengers in the U.S. showed restraint in recent months amid a worsening economic climate. He said, quote, demand should tick up a bit in the period. He said this in an interview with Bloomberg TV in New Delhi on Sunday. Curious what Mike Brown thinks of this. He's president and CEO of the publicly traded hospitality firm Travel and Leisure Company. It's got a market cap of about $3.2 billion, shares down just about 4% so far this year. He joins us here in the Bloomberg Interactive Brokers studio. Mike, good to see you again. A lot of time has passed since we last spoke to you. A lot has changed. We haven't even spoken to you during the Trump administration, during this Trump administration. What's your view? Actually, it was about a year ago that we spoke.
That's right.
Are things better now than they were a year ago?
Well, I think as we went into 2025, we expected a boom earlier than the year. And it seemed that as the first quarter went on, there was choppiness about reports. You just mentioned Delta, and we heard the first half of the year in airline travel. And as we looked at our performance, we didn't see that variation. And so coming into the year, we thought there was going to be, with the change of administration and just maybe a slightly more commercially friendly environment, some uptick. And then it was followed by uncertainty. What we've seen consumer-wise is a very consistent demand for leisure travel, even heading into the summer months. But that has shown up as not consistent with what's happening across the travel space. So it just depends what business you're in. It's really what's happening with leisure travel and who's winning in that space.
So I just want to remind everybody the brands that you have: Sports Illustrated Resorts, Margaritaville Vacation Club, Club Wyndham. You're also in media when it comes to like the original Travel and Leisure magazine.
That's right.
Accor Vacation Club.
Accor Vacation Club, right.
So it's sort of a diverse portfolio where you're seeing things across the different spectrums, right?
That's right. We 90% of our consumers are based in North America. And that demand we reported in the end of the first quarter was very strong. That demand has not changed in the 30 days hence. And we also have about 10% of our business in Southeast Asia. And again, that business is going really, really well. Again, 100% leisure travel coming into the summer months with the uncertainty that seems to be on every headline. We're just not seeing a crack in the leisure traveler.
So you reported first quarter results on April 23rd, which was actually, that's quite a while ago now. But it was $934 million in revenue. You see continued momentum heading into the busy summer travel season. What exactly is driving that? Like, it's demand that's driving the jump in revenue here?
Well, I think it's a few elements that are really keeping our business consistent. First of all, in our owner base, 80% of them purchased their ownership previous to this year, which means they're not having to make a decision whether they want to swipe their credit card for the first time. So it's, why wouldn't you vacation? I think there are some finer points to that story, as we are seeing a bit more drive to arrivals to our resorts, which says the consumer's maybe slightly more cautious. And the second thing is, for our summer bookings, we saw those occur later in the spring than typically sort of that January, February. Despite those little nuggets of cautiousness, our consumer and our metrics are staying as strong as we saw them as they finished Q1.
Or is there any sort of weakness in any parts of the business that you're seeing, whether it comes, you shared with us different income strata, but where are you seeing pullback, if any?
Well, you mentioned the income strata, and the part that really indicates for us, or one of the metrics that indicates for us if the consumer is showing any weakness beyond the two things I mentioned as far as booking behaviors, is we have a portfolio of about $3.1 billion. So we watch very closely delinquencies. Now, our average FICO is 740. So when people talk about the lower end consumer is struggling, that's not really our consumer. Right. However, we saw a modest uptick in delinquencies in the first quarter. So we're watching that.
When you say delinquencies, you mean people not paying their bills?
People not paying for their ownership.
Their ownership, okay.
Typically, a note is somewhere between $15,000 to $20,000 10-year note. And if they become delinquent on those, typically that shows a more cautious consumer.
So the delinquency rate right now is pretty steady. It's pretty consistent with what it is historically.
We saw a modest uptick in Q1, and we've seen no degradation in Q2. We're really pleased. And again, on the revenue side and on the delinquency side, there's nothing that's giving us pause as we move through the second quarter and get close to that into Q2.
What are you seeing right now when it comes to U.S. tourists versus international tourists? I don't know what your ownership, the owners are mainly in the,
Sure.
Are they mainly U.S.?
They're mainly in the U.S., but we do have some insight. I think we've all talked about Canada. It's clear the Canadian owner is doing one of two things. They're staying home to stay at their resorts, or they've made the U.S. a flyover state and are heading to Mexico. Flyover country, not state. It's just odd, but it's either Canada or Mexico for the Canadians for the most part. The Europeans maybe modestly, but that could be a little distorted by how the dollar's moved. I mean, when people would typically book to the U.S., the dollar was 103. Now it's 114, so it's a lot more affordable. So I think the European traveler will pick up as we move to the second half of the year.
One thing that we like to talk about with folks who have good insight into tourism is, what are hot areas? What are hot concepts that you and the company are thinking about right now? I mean, we know from speaking to the folks at Hopper, for example, that Japan remains a really hot destination for Americans.
Yeah.
What are the themes or the trends that you're seeing?
Let me stay in the U.S. for now, and then I'll pop internationally at the end here. But not too dissimilar to how general residency is migrating to the South. If you think about those cities like Atlanta, Charlotte, Nashville, Birmingham, Alabama, they all funnel down into those Florida beaches and the Carolina beaches. So although Orlando and Las Vegas are the traditional mega centers, those beach destinations, which used to be 6 months, 9 months, are now 12-month destinations. So those remain U.S. extremely hot spots. I was joking earlier today with, I don't know where they keep finding cranes to build in Nashville. Nashville is just incredible how that city, both hotel and business, just continues to boom. And I think Americans are finding how easy it is to travel to Mexico. Cancun, Riviera Maya, that whole coastline is just incredibly easy to get to and very traveler friendly. So the Cabo and Cancun coastlines are super popular as well for American travelers.
Are we above pre-pandemic levels when it comes to just the amount of traveling that Americans are doing?
We are above that. I think we've all experienced that revenge travel in 22 and 23, and we enjoyed it. And For our business, the inflation was actually a positive for us because we could really show the value of ownership. But that has subsided. You've seen a rotation from I'm going to get to a resort in 22 to go, I'm going to go to Europe in 23, things they didn't get to do in COVID. I felt like 23 and 24 was the cruise year. And what you're seeing, I think, in 24 and 25 is a restabilization to above pre-pandemic levels, but no particular destination being the hotspot this year. There was a point, I think, in 23 where I felt like Italy was going to sink into the med. There were so many Americans there, but
yeah,
it sort of returned back to normal.
I think we all saw that on our Instagram feeds a couple summers ago.
Exactly.
Hey, when you think about amenities that you need to be offering your guests at these resorts, what are they looking for right now?
Well, our demographic, first of all, is looking for amenities and branded experience. There's a time and a place for bigger accommodations depending on your demographic. What we are seeing is beyond the resort. People are not vacationing only for the bricks and mortar that they get to experience with a great hospitality brand. They want a lifestyle that attaches to that gives them an experience that goes beyond the four walls of their resorts. What do I mean by that? We could do a beach resort. We do beach resorts with a great bar, great sand, great cocktails in the evening. But now imagine that with the Margaritaville, with a 5 o'clock somewhere bar, margarita in your hand, and someone playing the guitar. That's an experience you can relate to. And then if you can use your opportunity to tie that into a concert that is sort of beach focused. And, just recently with our Sports Illustrated Resort, we hosted people at the Kentucky Derby. And that has nothing to do with, your resort location, but it has to do with tying the Sports Illustrated resorts to the Sports Illustrated lifestyle. So I think it's beyond the resort experience that people are looking for more from.
Just very quickly, we started talking about Delta, and I'm wondering, we hear a lot of headlines about people being nervous about aviation safety. Does that come up at all in your work? Have people talked about maybe not wanting to travel because they don't want to get on a plane?
Were you talking to Nathan Fielder, the rehearsal? Anyone seen season 2 of the rehearsal?
I haven't. I watched the first 2 episodes.
Listeners and viewers,
maybe they'll know.
We'll get it. Sorry, go ahead.
Well, look, whether it's at work or at home, we do talk about aviation, and with the Insta feeds and all social media, every time there's an incident, it's there. So I think everyone's a little concerned about it. I'd say for our business, because we're primarily domestic based, I don't think it's aviation security reasons or safety reasons. I think it's just maybe a little bit of cautiousness in the macro. We are seeing people say, look, let's just get in the car, put a tank of gas in, and next time we check in, we haven't already spent $2,000 to get my family of 4 to the resort. You're starting with that basically in your pocket.
That's a good point. Hey, always great to check in with you. Hope we don't go another year before you're back here in the studio. That's Mike Brown, President and CEO of the publicly traded hospitality firm Travel and Leisure Company. Coming up next, Dave's Hot Chicken.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. A rebound in big tech drove U.S. stocks higher today after a slide driven by weak manufacturing, trade, and geopolitical risks. Lots of moving parts to today's trading. First trading day, by the way, of the month of June. Bonds fell as the dollar hit its lowest since 2023. S&P ended with a gain of 24 points, up 0.4%. The Dow up 35, up 0.1%. Nasdaq Composite Index up 128 for Nasdaq, a gain today of 0.7%. 10-year at 4.43%, the 2-year 3.93%. Gold up $91 the ounce, up 2.8% today. Spot gold now at $33.80 the ounce. West Texas Intermediate crude oil up 3.9%. Crude surging $2.36 a barrel to $63.15. Bottom line, an update for the Dow, the S&P, and Nasdaq. J.P. Morgan Chase CEO Jamie Dimon says his retirement from the top job at the bank is, quote, several years away. But the decision is up to the bank's directors. Interviewed on Fox Business, the 69-year-old CEO said it's up to God and the board. I love what I do. The question of when Dimon will retire and who might succeed him has hung over J.P. Morgan Chase for years. Dimon used to joke that retirement was 5 years away, no matter when asked, but has recently stopped giving that answer. J.P. Morgan Chase shares today up by about 0.2%. Recapping stocks higher, S&P up 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. A big deal today when it comes to fast casual. The private equity firm Roark has taken a majority stake in Dave's Hot Chicken. It's the fast casual restaurant with hundreds of locations. It's also one that sold franchise rights to more than 1,000 locations here in the U.S., Canada, and the Middle East. The company does plan on opening more than 150 locations this year. This deal gives Dave's a $1 billion valuation, and you may know Roark is the private equity firm that owns Subway, Dunkin', Arby's, and more. We've got with us Bill Phelps, CEO of Dave's Hot Chicken. He joins us here in the Bloomberg Interactive Brokers studio. How did this deal come together?
We've been talking to Roark for probably 3 or 4 years now. It's gone back a long way, and they loved it from the first time they saw it, and they followed us so we would meet them every year. And then when we decided it was time to do a private equity deal, they had been courting us for a long time, and it just worked out.
So why is now the right time?
The right time, we've talked with our people, we talked about the markets, we talked about what the trajectory of the business was, what we wanted to do with the brand, and this was the perfect time. And our investors wanted to do it, but I really relied on my executive team. And I went to each of them in a meeting. I said, is this what you want to do? It changes the culture a little bit, but this is the time, in my opinion, but it's up to you guys. And they, to a person, said, this is the time to go, and they wanted to do it.
Talk about some of those changes now that you have this private equity investor. What are you expecting the company to look like?
Well, the fun thing about it is I've worked with private equity firms before, and Roark asked me the same question that other private equity firms are asking, which is great. How do you grow faster? And it's really fun, and that excites an entrepreneur and people like ourselves. And so we're going to plan to grow faster. We're going to grow internationally. Roark has more restaurants than probably any company in the world. And they have franchisees around the world, and we are going to use their franchise network to dramatically expand Dave's very, very quickly, which is really fun.
Can you give us a few details of the deal beyond what I've been able to read in press releases? It's a $1 billion valuation, but does Roark wholly own Dave's at this point?
No, they own about 75% of the company.
And a $1 billion valuation doesn't mean they handed you $1 billion. It means that this is valued at $1 billion.
Roughly.
What was the capital that they exchanged?
You're not allowed to disclose that, but you can figure out that they're roughly 75%. So
okay, so we'll do the math, back of the envelope.
Okay.
All right, so Bill, talk to us a little bit about the franchisee model of Dave's. Is it 100% franchises at this point?
It's about 95% franchised, but we believe in having some ownership of stores so we understand what the franchise deal with. I actually made a number of my executives franchisees, so they understand the business at a deeper level than most executives of franchise companies, and they make a lot of money at it. But the model is great. Franchisees are getting a payback in about 2 years, and which is way better than the gold standard of the industry.
Talk about your background here, because you're also the co-founder of Wetzel's pretzels
Yes.
and Blaze Pizza. And I know that you joined up with the Dave's founders.
Yes.
And now you're obviously the CEO.
Right.
How was your journey to Dave's?
It's so funny. I was with Wetzel's for about 20 years, and we'd gone through 2 private equity deals, and I decided it was time to move on. And my son had actually gone down and seen the guys in the parking lot where they had started this thing. My son said, "Dad, you got to look at this one." And so when they opened up a store, I went down and looked at it. And John Davis, big movie producer who had worked with me at Wetzel's and at Blaze, said, "This is our next deal," and we decided to do it.
We're speaking with Bill Phelps, CEO of Dave's Hot Chicken, announced today that Roark has taken a majority stake in the company at a $1 billion valuation. What would you say to the folks out there, maybe their customers, maybe even their franchisees, who are concerned that when private equity gets involved, you see a decline in quality?
Yeah, we aren't going to let that happen. And I've been through this, okay? So I was with private equity investors in Wetzel's and at Blaze Pizza, and the quality never went down. The quality actually improved. We became a better company. We invested in the infrastructure to make the business better, and we see the same thing here. No one's going anywhere. We still have 50% of our equity stake when we started this thing. And so it's a great deal for Roark. It's a great deal for our team, and it's a great deal, we think, for the guests as well.
And you know, it's interesting. I feel like I've heard of Dave's Hot Chicken, not because I'm walking on the streets of New York City and I see a location.
You got to come to Brooklyn. We have it in Brooklyn.
Oh, really?
Yeah, we have it in Brooklyn.
There's a couple in Manhattan, but not really where I walk. But I know it from social media.
Yes.
6 million followers?
Yeah, it's crazy. And it's so funny. But Armin was the founder of Dave's, and he's a high school dropout, total marketing and social media genius. He totally gets it, and he created a brand that people were excited about. We had a franchisee from the UK that wanted to buy the rights, and he told his son about it, and his son goes, "I love Dave's Hot Chicken." He goes, "How can you love Dave's Hot Chicken? There's not one within 6,000 miles of this place." And he said, "No, social media, just what you said." And this young kid in the UK had seen it on TikTok and Instagram. And so it has a following that's unbelievable on both.
You know, chicken is absolutely having a moment. The timing is really perfect, and it has been over the past few years. But it's also meant that a host of other companies have come into the space as well. Companies such as Raising Cane's. You also have the traditional fast food companies getting more into chicken as well. How do you compete, or how do you see your niche when the company, when the customer is at that sort of moment of choice? Am I going to go to Dave's? Am I going to go to Raising Cane's? How do you make them go to Dave's?
We are the hot chicken brand. Okay, there's lots of little competitors, but no one is touching Dave's. Dave's has grabbed the category. We've had Drake as an investor, and we have the cool factor around the brand. And
so Team Drake, you're Team Drake.
Yeah. The product just delivers, and we've made an incredible product, and we've delivered on that. And the stores are fun, and the experience is fun. It's hard to compete with it.
Do you have health-conscious options? I feel like Carol would ask this question.
Health-conscious option? Well, we have a Dave's Not Chicken, which is a cauliflower. And it's actually delicious, and it tastes phenomenal, and a lot of people like it. But we're not some health brand, okay?
Right.
This is indulgence in absolutely delicious food.
So when you think about expansion and this influx of capital that you're getting right now, how does this accelerate growth over the next year, not just from the perspective of number of stores, but also locations outside the U.S.?
Yeah, we think that the franchisees that Roark has with other brands like Subway, like Carl's, and all of our brands are going to be very interested in this brand.
So would you see like a location like KFC, or like, you know, Taco Bell, Pizza Hut, KFC used to do, where you'd have one location in several different restaurants?
Don't do that. No, you
don't do
that. No, that's called co-branding.
You're not going to do that?
It's never worked. It's never worked.
Why?
Logically, if you're a finance person, if you put a Taco Bell and a KFC together, you're sharing the back room, you're sharing the real estate, and it makes sense. And it never works from a marketing standpoint. You don't know what that is. And we've tried it at Wetzel's, we've tried it at other brands, it doesn't work at all.
All right, Bill Phelps, CEO of Dave's Hot Chicken, here in the Bloomberg Interactive Brokers studio. Once again, Roark Capital, a $1 billion valuation and influx for a majority of the company. Coming up next on Bloomberg Business Week Daily, stocks on the move. This is Bloomberg.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. That is Emily Grafeo from our Bloomberg News Cross Asset team. Taking a look at how markets closed out the day, up 0.4% on the S&P 500. The NASDAQ Composite up close to 0.7%. The Dow just higher by 0.1%. I'm Tim Stenovec along with Emily Grafeo. Let's take a look at some stocks on the move today. We are joined by Bloomberg News cross-asset reporter Denitsa Sikova. Denitsa, I felt like there were a lot of companies that you could choose from today. I had problems picking the stocks that I wanted to talk about.
For sure. It was really hard finding losers. There were so many gainers today. But so that said, let's start with one gainer. We'll start with Boeing. It had a really good start of the day, and it all came from an upgrade from Bank of America. The stock closed 2% higher. So Bank of America, Ronald Epstein, upgraded it from hold to buy. And his price target is now the highest on the street, 260, which it shows significant upside from here. We know the stock has actually had a really strong year, and more generally from the April low, with that terrible accident, there has been upside for the stock. There was the government contract, but now Bank of America is seeing optimism because they're finding it a trade tool. It's benefiting. We saw Qatar Airways deal. We saw China removing the ban. So there has been so many upsides. And again, it's a trade war story, and there are new winners emerging. And according to Bank of America, Boeing is one.
I love this story.
Yeah.
I mean, this was like this is a really interesting note, and it's like wait, how did I not see that a couple weeks ago? That like, after he visits these countries, you start to see orders for Boeing aircraft.
Right. The Trump administration has been including orders for Boeing planes in trade discussions, and that's helping restore BofA's confidence in the stock.
It's fascinating. There should be a whole basket of trade. I'm sure there is.
I'm sure there is. We'll be finding it and writing about it.
Okay, so Boeing up today by 2%. You're also watching shares of automakers. What's going on?
Yeah, and this, we could argue earlier when the tariffs were announced, this was also one of the beneficiaries. We're talking about Ford Motors and General Motors. Both are actually under pressure today. So maybe our theory is not so right. They fell about 4%, pretty much similar moves there. Again, we're talking about trade and related comments from President Trump. This time, it's about automaker parts and that they should be made in the U.S. Of course, a lot of those are coming from Canada, Japan, South Korea. They have started to raise prices to offset tariffs. So obviously, that's complicating the whole supply chain. There is obviously already a 25% import tariff on cart imports. So even some of the initial optimism of like, oh, these companies have a lot of U.S. production, they'll be less exposed. The more that we learn about it, the more pressure is putting on some names. General Motors is down 10% year to date. Ford is actually flat, so still not enough to bring the gains from earlier.
And as far as today's trade goes, General Motors down about 3.9%, ticker GM. Ford, ticker F, down today by about, it's the same, about 4%.
Yeah, it's similar, right.
Yeah.
Okay, and finally, you're looking at a pharma company.
Yeah, we've been talking about the vaccine makers. Today we're looking at Moderna, ticker is mRNA. It closed 2% higher, and it had an even bigger jump earlier in the day. But we're having another announcement of the FDA approval for two groups, adults over 65 and anyone over 12. We've seen a couple of those announcements and successful approvals. Of course, that industry is under a lot of scrutiny. We have Robert Kennedy in the administration who has launched a whole campaign against those. But it's interesting that a lot of the moves earlier faded. And people are saying, this is actually a very nice note from William Blair, that the approval is incremental win for Moderna, and also does not see the approval of the vaccine as a massive boost to their COVID vaccine sales. And that said, Moderna is down 35% year to date. A lot of volatility in vaccine stocks, and they have felt a lot of pressure.
Yeah, I feel like this is maybe what we saw today is like, okay, they got the FDA approval, but does it actually translate down to sales, particularly when the second generation COVID vaccine is for all adults over 65.
Yeah.
And anyone over 12 who has at least one risk factor for severe disease. So this is not necessarily the 2021 type vaccine where everyone is rushing to go get a shot.
Yeah, and those rates have been falling. We've been looking at vaccination rates for sure. That's has been falling for a long time. And there is still a lot of pressure in the administration.
Right.
mRNA up today, up earlier in the session and up on Friday, but what, up today by about 1.8%?
About 1.8.
Denitsa Sakova from the Bloomberg News Cross Asset team. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Just a reminder of where we closed out the day today. 0.4% on the S&P 500, higher. The NASDAQ up 0.7%, the Dow up fractionally. I want to revisit a story just in the last minute that we have to get an idea of what we had with the China headline that we got during the simulcast today, Emily. We did see that the U.S. has extended a tariff pause on some Chinese goods to August 31st. Don't have a ton more details on it still, but U.S. Customs and Border Protection posted an update on tariffs. They extended the Section 301 tariffs to pause on some Chinese goods. This until August 31st, and it's according to a notice issued by the U.S. Customs and Border Protection. The USTR announced the extension today.
Okay,
or on May
curious
31st,
to
rather.
see
Excuse me. They announced the extension on May 31st.
how much do markets in the regular trading session tomorrow react to this development? Are we going to have a big day in the green?
I don't know. Like futures showing that things are up 0.5 percentage point.
But like,
right now,
futures, it's,
Yeah,
people
I
have
know,
gone
I know.
home. Like, we'll see what happens tomorrow.
Hey, thanks for joining us, Emily Griffeo from our Bloomberg News Cross Asset team. I'm Tim Stenevec, Bloomberg Balance of Power.